2. Check 1, 2. Mic check. Check 1, 2. Anybody out there? You guys out there this morning or what? Can you see me? Huzzah, baby. What's going on out there, boys and girls? What's cracking out there? Good morning. Check 1, 2, mic check. I don't know what to say to y'all. It's pretty good to see y'all this morning. Got 4 minutes to the bell, right? So, how y'all doing? I want y'all to know that this is not the norm, okay? So I get calls wrong all the time, but I gotta bask in it for a minute. So, and if any of you have been following along, if any of you have been inside the Discord the past couple weeks, if any of you have been taking the spreads, going through 4th of July on any of that stuff with trades, and it's been kind of epic. So I don't know what else to say about that. So it's a little bit absurd. You know, you expect to get like I don't know, like the 3 out of 10, 7 out of 10. My God. It's weird. 3 minutes left. You guys ready to rock and roll again today? A couple things. So my office this morning, a couple things. Number one, there's like a tropical storm coming through where I live. I don't know if I'm going to lose the stream at all today or not, but there was a hurricane that came through Texas. It's now where I live. I woke up this morning, came into my office, and everything was reset. It was really bizarre. So, like, if you look at the bottom screen down here, this is all ES. If I cycle through its ES again and again and again and again, I don't know if you can see it, but there's like a rotating chart thing that I have, and it's all ES. So I apologize. I'm going to have to do some of this work this morning as the live stream progresses, working on the charts for you. I don't know what's going on. I think I lost power last night, but I've got to like reset everything, like even in the background stuff. I've got I had to reset my Thinkorswim, a bunch of stuff like that. So bear with me as we get started for the second day of Jerome Powell hearings. If you are following along, you are making stupid money. So I don't know what else to say to you on that side of things as well. So we're gonna get Jerome up for you here in just a few moments. This is not the norm. You don't normally get that many wins. I want you to know that too. So it's not the norm. So I'm not going to brag to you and tell you that I'm like world's #1 trader or any kind of bullshit like that. 1 minute left until the bell. Don't know what to say to you guys. But when you do win, you know what you do? You enjoy every moment of it. I want you to know that too. I want you to know that it's okay to enjoy the wins. I want you to know that, okay? It's okay for you to enjoy the wins out there. Pivot point is at 55.6.17. Target to the upside is 55.7.83. I just can't believe it. I can't. You go through so much stress, and then it's stuff like this. We're all like the, hold on here. Give me a quick second. I got something I got to do. Hang tight here, boys and girls. I can't believe it. It's like, God. I got the Discord open right now, and I'm just like, it's just stupid. What up, Burn? Hold on a second here. That's not real. I got my charts down below here. I'm having some issues this morning. All right, here's the Qs right here. This is the zone for the Qs up here. You may or may not already know that. There's the target tag. Qs likely runs up and breaks through 500 this morning. Just so you know, it pinged 500 or just below 500. Even with this weakness right here, you know the move is higher than 500. What else? IWM trying to break out. We'll talk about IWM at some point this morning. Someone last night said IWM is trash. Or no, yesterday I saw a close friend of mine from Twitter, a longtime true professional trader, was like, small caps and Dow Jones is trash. They are trash. We got to talk about this too. And then yesterday someone said, yesterday during the stream, we were talking about immigration, right? And someone mentioned on Twitter yesterday about layoffs that were going on in Detroit. They made a post yesterday saying, responding to me about layoffs in Detroit. And I was scratching my head because I was like, I want to make sure that was known yesterday, that I was very crystal clear yesterday that we are in a tightening cycle still. Well, we're not really truly in a tightening cycle anymore. There is money being pumped into the system, but we still are in a tightening cycle for small and mid caps and businesses. Let me clarify some of this. So if you are a Fortune 500 company and you produce tech or services, tightening doesn't matter to you. And that's why our market, that's not why, it's a portion of why the market is going up. But you do see laggards in small and mid-cap companies that produce actual things. If you make things, tightening has impacted you as a company. That's of course known. This is like very basic stuff. So we'll talk about small caps and DIA, Dow Jones Industrial Average. We'll talk about returns in August. Winky brought it up to me yesterday in an email. I think I did make a post about it yesterday, but we'll discuss it. And how does IWM go burr? How does Dow Jones go burr? That kind of stuff. All right, so give me a few moments. I'm going to get the video up for the live stream up for. You're going to stop calling out all-time highs on Lily. Lily looks great, right? But still they're selling into it, Winky. It's not that this isn't a slight on Lily either. Just Lily is one of those companies where if you look at it, if you look through the company, there are a lot of sellers, aren't there? In the background, there's a lot of divergence in Lily too. That they're one of those companies that you should be selling, even if it is going to all-time highs again and again and again and again. You can stay in it, but it's one of those companies that are ripe. All right, so give me a moment here. Give me a quick moment here. I got Q's, IWM. What else are we going to bring up here? Oh, I got to bring one of these over here. That's one of those companies I was discussing yesterday. If you look at companies that have outperformed this year, Tesla is not one of them. If you look at outperforming tech companies this year that have been outperforming since October, and they're not the Mag 7, if you look deeply into those companies, they are being sold right now. We're in this like late stage bull run for parts of the market. For parts of the market, not all the market. Mag 7 is where most investors are not investors, most professionals, large traders, they're all in Mag 7, but they're cashing out of parts of the market right now. All right, give me a second here. So we got Q's, IWM, Q's, IWM. We're gonna go with HYG, of course, right? And look at this, we're just grinding up, just like this is HYG right here. Look at that, just grinding up, grinding up, grinding up, grinding up. See, look at this. I've even lost some really wonky shit going on here. Maybe it wasn't me. Maybe it was all right, there's HYG. We got the VIX 9-day going on, right? VIX 9-day, baby. HYG, VIX 9-day. We need the dicks out there, don't we? If you're at home, you should be putting these things up too, shouldn't you? We got the Dixie on the 1 minute. We'll do the 1 minute Dixie. God, look at that. Looks like supply here on Dixie. We could rip some faces off today. Look at Dixie being sold into on the daily trigger. So we got the HYG, the VIX, the Dixie. We're also going to do 10-year yield, right? So that's TNX. You can also do straight yield. This looks kind of sketchy down here. We'll also take a look this morning at TLT. I want you to know something out there. I fucking love all of you, okay? I want you to know that. I really do. If you're watching this show this morning, I want you to know that I actually do love all of you. I wasn't trying to come off as salty yesterday or anything like that. I really want you all to know that that's why we started this fucking thing. Retail fucking traders, man. I fucking love all of you. I really do. TLT fought its way back to the fought its way back to the daily trigger. TLT had a really bad go of it, right? Well, bonds in general, right? Bond market, longtime bond traders. Man, dude, you guys remember like last year? Was it last year? Like some bond traders that I know were crying on FinTwit, like actually crying. I've never seen this in my entire life, kind of stuff. So there you go. There's TLT. TNX, Dixie, TNX, TLT. We'll do Tesla, of course. Oh, oh, I gotta get out of Tesla, don't I? I think I'm gonna sell Tesla today. Jesus fucking Christ. It's not even my Tesla, it's my wife and children's Tesla. I fucking bought Tesla for my wife and kids. I gotta get out and get back in. I can't even claim that it's for me. Tesla trading at 264.50. And I'm going to get back in. It's going to all-time highs. I don't know if you know that or not, but it's going to all-time highs. I saw someone yesterday saying that it was going to $600 in the next 2 years. If you're a Tesla bull, I want to tell you something out there, okay? I got to talk to you if you're a Tesla bull. We got to chat if you're a Tesla bull, okay? Hold on here. I got to go back to Tesla. So, if you're a Tesla bull, okay? I noticed yesterday that the Tesla bulls are coming out of the woodwork. I noticed yesterday that there were people claiming to be Tesla bulls at 143, I think. At 143. That's a lie. I remember every fucking Tesla bottom. I remember OG bulls calling for 70 and 40 because they deserve it. They didn't actually deserve it. They just wanted to buy $40, $70, that kind of stuff. Alexa, hang up. That's a fucking lie. And I want you to also know something else. Every time Tesla comes into a top, the Tesla bulls come out of the woodwork. And they scream and yell, and they cloud everything. I want you to know that, too. So whenever you're in the moment of the Tesla euphoria, be wary. I want you to know that. Now, that Tesla euphoria brings out late-stage Tesla bulls, and they may be right for an extra 100 points or 50 points or even 300 or 400 or 500 points. But if you're a dip buyer of Tesla, you're selling into them. I want you to know that. You are selling into those late-stage euphoric Tesla bulls. And I want to give you a warning, or I want to give you the reason I'm wanting to give you a warning is because there have been times trading Tesla where I've had Tesla bulls come out of the woodwork and yell at me, like have literally come into my DMs and say, "Fuck you, you're not a true Tesla bull." In my DMs, eat a bag of dicks and die, and you paper handed this. I mean, ruthless. And have literally screenshotted Tesla's exact like I don't know, like maybe like 4 bars before it rolls down to the depths of hell. I remortgaged my house, I sold my wife and kids, and I went all in. And then they disappear from FinTwit. They literally disappear from FinTwit because they get wrecked. They get wrecked in a bad way. And I want you to be aware of that because don't get caught up in you want to be a happy Tesla investor. That's what you want to be. You want to be a happy Tesla investor. And being a happy Tesla investor is buying the bottoms. It really is. Not options, like buying the bottoms. You will be a happy Tesla investor. And I've been trading Tesla for years. I've lost a bunch on options. I've won, I've lost. But I want you to know that. As the euphoria kicks in for Tesla, I saw a little bit of it yesterday on FinTwit, and I was like, fuck, here they come. And they're not real Tesla bulls. They're fucking Fugazi Tesla bulls. That's what they are. They're fake. They're bullshit fakers. So you want to be there on the depths of hell. And there aren't many bulls in the depths of hell on Tesla. There aren't that many. And they know who I am, and I know who they are. The real bulls, the real Tesla bulls, I know who they are, and they know who I am. But just be conscious of that as we come up here with Tesla. I've got a price target of on Tesla currently of 270 or 278, 280. And it should roll down, and we will go up and trade all-time highs by end of year. But it's okay for you to take profit. It's okay for you to jump back in for the run to all-time highs and that kind of stuff. Don't feel like you're beholden. I guess my point is, don't feel like you're beholden to Tesla bulls. You're not. You're better than, or not. There's like 2 or 3 different kinds of Tesla bulls. We got to talk about that again. I used to discuss it on the show. There's like real Tesla bulls, fake Tesla bulls. There are different kinds of Tesla bulls. You don't know where everybody is in. You don't know who's selling calls against positions. Your favorite Tesla bulls likely will sell calls into you and tell you to buy no matter what all the time. I don't care what price is. They're fucking lying to you. I'm going to tell you that right now. They're selling calls into you. So we'll talk about that later. It's not this morning. We're going to get into J Powell, but so there you go. There's Tesla. I'm going to consider here getting out of this at some point soon. Fucking Tesla. My fucking God. Look at it. It's a beautiful thing, isn't it? Okay, so we got a TLT, Tesla, NVDA. We'll do that one. NVDA. We'll do Lilly this morning. NV fucking DA. Let's look at NVDA. I mean, I fucking told you about NVDA too, right? Over and over and over and over and over and over. And what the fuck is it trading this morning? Fucking trading 133 fucking 42. Woo! Jesus fucking Christ. God damn. We're going to do Lilly. We'll do Lilly because Winky Face has been talking about fucking Lilly for what? Goddamn fucking 2 years. We're going to talk about Lilly this morning. By the way, Winky Face, I love you, man. I love you, brother. Fucking. There's been times when Winky and I have been like wringing our hands, right? Hold on here. Hold on. Are we going crazy? Am I going to lose all my money? Am I going to be stuck in these stocks for 10 years? I think the worst part of was it October? October of last year, being a stock owner last year in October. Oh God, it was terrible. There's Lily trying to trade 943.65, 952. So we'll do Lily. My God, I lost so much fucking money not lost. I made money last year, but I could have been rich I could have been rich. Had I started selling out during ERs, any good ER, I was out. Had I held all of my stock holdings last year, I would have been fucking rich. It got me last year. It got me. The stress got to me. All right, so there's Lily. We'll leave that one up. I got 3 more up here to do. Let me ask the Discord. If you're in Discord right now, I've got 3 more tickers I want to do. List them. Hey, David AMS. I fucking love you too, man. If you don't know this, okay? If you don't know this, I used to trade with David AMS alone. It was him and I. We used to trade in other people's Discords together a long time ago. And David AMS, if you're out there, I fucking love you, man. I fucking do, brother. I love you too. UNG, Netflix, and Palantir. Those are the 3 I'm going to do. All right? I love you, David AMS. Okay, so you said UNG, Natty Gas, right? All right, so Natty Gas is coming down into a couple things. We got to talk about UNG probably at some point. We want to make sure this holds down here. This 1543. We'll talk about UNG at some point. I'm not going to talk about it right now, but we're going to talk about it at some point. Palantir, PLTR. We'll do Palantir. Haven't looked at this in a while, have we? Just cranking. I never got my low. I wanted that low again. I actually wanted it even deeper down here before we continued higher, but we knew it was going higher, but not where. Oh, dude, we hit the target. Fucking A. Palantir. All right, so we'll talk about Palantir again. All right, let's remove 13 drawings. PLTR. We hit the target. That's good. Congratulations if you're a Palantir bull. No, wait a minute. What did I do wrong here? Hold on here. I fucked something up. PLTR. I wanted lower on Palantir. I never got it. Never got to buy it. We'll talk about this one at some point. Hold on here. Show that right there. Palantir working itself into its pivot point. It's right on its pivot point right now. I'll chart this one out for you as well, but not at the moment. I'll do Palantir. I'll do UNG for you. And then what was the last one they said to do? Palantir, UNG, and there was one more, I thought. Do you guys want to do Chewy? Do you want to short Chewy into the depths of hell? What was the other one? Netflix, right? NFLX. If we have a chance, we'll talk about if we have the chance, we'll talk about. There's NFLX. I'll come back and chart these out for you guys. NFLX. I saw Chewy rip yesterday. So there's Netflix. Coming back down to, this is where the buyers are right now at this 670, 677.17. We'll talk about Netflix at some point. It's bleeding right now. All right, so that's enough to get started at least. We got a bunch of stuff to talk about. There's Qs. What else we got here? I'm gonna get the Jerome Powell house. Anybody got a link to? Anybody got a link to the to Jerome Powell by chance? Jerome Powell house hearing. Jerome, if you have it, if you could send it to me. House hearing, maybe house hearing. Anybody getting a live stream for that? Anybody got a live stream? Anybody got a live stream for Jerome Powell? No? Good morning out there. How y'all doing? What's up, Johnny? Good to see you. Couple notes here too. Anybody in the Discord have a link to the Jerome? Oh yeah, baby. What up, Water Boy? Thank you, Water Boy. Water Boy in the Discord just sent us the House hearing. No thanks. Hearing entitled GOP Financial Services. All right, this is good. This will work. We'll watch this. We'll watch this link. Thank you. Thank you very much to Water Boy. Say thank you to him. Thanks, brother. Appreciate that link. Captain, is holding these 558s through Powell too risky? Probably not. We'll talk about that too, Harry. We'll talk about so Harry was at. Oh, watch out here. Watch out. There's a liquidity break right now in the market at the moment. Be careful here. I would say that if you're going to take or keep the risk on this morning, that you're looking for 558. You're actually looking to trade this red bar up here. You choose your own risk. I would say this would be the place that I would take the money and run. And if you wanted one more, let me take a look at one more thing there, Harry. Harry, if you're listening right now and you're in the Discord, what would be the thing that we would discuss here? We likely know that there is resistance where, Harry? Let me ask you that question, Harry. Where is resistance in the market right now? I'm going to show you right now, Harry. Give me a second. I'm going to show you where the resistance is, brother. I fucking love all of you out there. I really do. God, I've had bad days. When you have a good run like this, you got to enjoy it. You have to enjoy it. Interesting. The put or the call wall. That's what I wanted to discuss with you guys. The call wall at 5,600. Well, number one, on FinTwit yesterday, a buddy of mine said hello to me. He's an actual professional. I'm not going to tell you his name right now, but he reached out yesterday and he said to me, he said walls are made to be broken, Cap. Shit. And I want to show you guys something here. So, Harry, here you go. We got some new data this morning, okay? This is new data here. The call wall at 5,600 had 170 million. Watch my cursor right here. Had 170 million as of yesterday. It's now down to 135 million. So it's not as strong as it was. We have some developments to the upside. See this white line right here? We now have 103 million up at 5,700. That means people are rolling their calls out to 5,700 as of this morning. That's big. That means something here. So, the wall is not as strong as it was, but a key point here would be, Harry, if you're looking for resistance, if you're in Discord right now, if you just look at this one, right, this line right here, snap a line for yourself at 5,600. And you're going to expect some kind of resistance above here at 5,600, okay? We're going to make this, actually, we're going to make this the new call wall. 5,650, local resistance is now 5,600. Doesn't mean we go there, just, that's where local resistance is. Your local support right now is now right here. Nope, local support. The bottom of local support is your 30-minute trigger. 55.75. Right here. And then volatility is just below it. Just below 55.75 is volatility. Your gamma flip is now at 55.20. Still don't see, dude, the whole fucking market is long. There's no fucking there's no relevant, right now at this moment, there's no relevant, now your local support's at 55.85. Local support's 55.85. Volatility is below 55.75. Yeah, there we go, right there. Call wall's up there. Fuck, Jesus Christ. This is insano. Call wall. Let me see if I can get this right here. That put gamma will come back into play at some point. If we roll down. So I can get this. Let me see if I can get this right here. Call wall, local result. Wait a minute, I gotta get the herring on. I'm not seeing the house herring right now. It's 10:01. Is the herring already going? I'm not hearing it right now. It hasn't started yet, though, right? All right, there we go, right there. There's the, I think that's what you need. Let's go back to the main screen. Harry, I'm going to snap this and put it in the Discord for you, brother. Save that for you. Where's Harry? Reply. Upload a file. There you go, my man. At everyone. SPX Gamma. I love Gamma as a tool for tops. All right, there we go. I'm not seeing it's 10:02 right now. I've got Jerome speaking at 10 a.m., but I'm not seeing it here. Does anybody have Jerome speaking live right now somewhere? They are gathering in the chambers. Thanks for the heads up out there. I appreciate that, Metamorph. Okay, so I've got the right thing up here. Okay, a couple things I'm going to read some stuff to you guys. There was some news last night that came out, or yesterday after or near the close. I want to read some stuff to you before the hearing gets started here, okay? So I want to read some news to you here from yesterday. Elon Musk on why the Oracle deal fell through. XAI contracted for 24K H100s from Oracle, and Grok 2 trained on those. Grok 2 is going through fine-tuning and bug fixes, probably ready to release next month. Their AI is building a 100 H100 system itself for fastest time to completion, aiming to begin training later this month. It will be the most powerful training cluster in the world by a large margin. The reason we decided to do the 100K H100 and next major system internally was that our fundamental competitiveness depends on being faster than any other AI company. This is the only way to catch up. Oracle is a great company, and there is another company that shows promise also involved in that OpenAI GB200 cluster, but when our fate depends on being the fastest, by far we must have our own hands on the steering wheel rather than be a backseat driver. That's from Elon Musk. Goldman Sachs. This is positioning, okay? Goldman Sachs saying earnings expectations and valuations are high. Breadth is low, and the data is starting to age more like milk than wine. However, the growth, this is important, the growth of artificial intelligence and deep pockets of boomers have proven they can serve as a growth backstop. With that said, I favor collaring up core positions, especially those that have experienced big runs. Mega cap tech, Mag 7. Trade ideas from Goldman Sachs. Max loss is premium paid. Amazon, August 185, 220 RR costs 0.40, reference 1.99.29. Catalysts, Amazon Prime Day, July 16th and 17th. Earnings, August 2nd. Tesla, 225. 300 RR costs 0.20, reference 2.94. Catalyst, earnings on July 23rd.
Authorized to declare a recess of the committee at any time. The hearing is titled The Federal Reserve's Semi-Annual Monetary Policy Report. We like creative titles here.
Do you guys want to actually watch the video or no? I'm going to ask you guys right now. Do you guys want to see the video or just hear the audio?
Extraneous material to the chair for inclusion in the record. I'll note at the outset this hearing has a hard stop at 1 p.m., which we will strictly...
You don't need to see the video? You want to see the video? Some of you want to see the video. Okay. I got you. Hold on.
I'll now recognize myself for 4 minutes.
We can do that. Hold on a second here.
Thank you, Chair Powell, for being back with us today. With prices increasing more than 20% since President Biden took office, inflation remains top of mind for American families.
Hang tight here.
In fact, only a quarter of Americans describe current economic conditions as good or excellent, according to the most recent data from Gallup's Economic Confidence Index. Despite President Biden's gaslighting, inflation was not 9% when he took office. It was out of control. The out of control inflation we're experiencing now is something that this administration did not inherit, but is a product of their policy.
I got you. Don't worry about it.
Spending. The nearly $2 trillion partisan and fiscally reckless spending as a part of the American Rescue Plan poured fuel on a smoldering inflationary fire. After a delayed response to runaway inflation, the FOMC has acted with a historic pace of interest rate hikes to ease the pain caused by Democrats' failed economic policies. It is a response, not the actual disease, but the response the Fed is trying to tame these flames, but it's a response to Democrat policies here on Capitol Hill in the administration. So far this year, inflation...
I'm going to speed this up a little bit.
...than many, including the Fed, previously expected. There's still work to be done to reach the Fed's 2% target. As I've repeatedly said, the Fed's, I think as I repeatedly said, the commitment to independence of the Federal Reserve is of utmost importance, and is critical, especially in a political year like this. Just as, Chair Powell, just as you did in previous administrations, you must not allow politics to cloud the Fed's monetary policy. However, despite your best efforts, the Fed independence remains at risk. And unfortunately, calls are coming from inside the building. Under Vice Chair Barr, The Fed's regulatory and supervisory agenda has become politicized. Most notably, the development of the Basel III endgame proposal has been a mess. This process has been
bow ties flex
standards and timelines set at meetings of unaccountable global governance bodies. The Fed has promised to process 410 almost universally negative comments, public comments, regarding the unjustified and underutilized initial proposal, or an underanalyzed initial proposal. Recent press reports, which seem to be the only way Congress gets details on the Basel III endgame progress, and your comments yesterday indicate the Fed will finally conduct a long overdue quantitative impact study. That is welcome. And if true, this is a promising development. Chair Powell, the last time you testified before this committee, you stated that the initial Basel III endgame proposal will undergo, quote, broad and material changes, end quote. Yesterday in the Senate, you said the board supports
SPX trading 5595.40, coming into resistance at 5600.
Will tuck any changes to the proposal into this quantitative impact study. That study, including the substantial changes to the proposal, would then be issued for public feedback with relatively paltry comment period. I'll reiterate to you here what I've said to you in private. Broad and material changes to the Basel III endgame necessitate a full reproposal, full stop, full stop. Failure to do so will result in an immediate Congressional Review Act vote out of this House of Representatives as quickly as we can possibly process it. Now, it doesn't have to be this way, and I think the Fed adhering to its longstanding principles here is highly important, especially with this interagency process. I'll close with this. Your steady and capable apolitical leadership of the Federal Reserve has shepherded our economy through extreme uncertainty. We now find ourselves in the midst of a new type of uncertainty surrounding the leadership of our nation. Doubts, fears, and panic often lead to bad decision-making and even worse policy. I urge you to reject outside political pressure in this volatile time and stay the course for the good of the American people and our economy as a whole. Thank you for your service, and I yield back. I'll now recognize the ranking member of the full committee, Ms. Waters.
Thank you very much, Mr. Chairman. Welcome back to the Honorable Jerome H. Powell, Chairman, Board of Governors of the Federal Reserve System. Chair Powell, as we saw with the latest jobs report, the labor market remains strong and the economy is surging. Despite inheriting an economy from the prior administration that had the worst jobs record since the Great Depression, President Biden has now overseen a record 15.7 million jobs created since he took office, with 206,000 new jobs created just last month. Not only that, but under the Biden administration, we're witnessing low unemployment rates, rising wages, and stabilizing prices for goods and services. This is not only because of President Biden's strong leadership, but also because of the historic legislation signed into law by President Biden.
Yeah, how old is Maxine Waters?
Created more jobs, rebuilt our infrastructure, supported small businesses, eliminated mostly junk fees.
How old is she?
More than $144 billion in federal.
She seems like she looks. I mean, she sounds like she knows what she's doing.
And cut child poverty in half. President Biden is and will continue.
85 fucking years old.
That are providing good-paying jobs and an economy.
It's way better than Biden.
Everyone. Now, while I'm pleased to see that inflation is declining, the latest data makes
doing good.
That housing remains the #1 driver of core inflation.
She's got her faculties about her.
Prices have increased.
Man, I'm definitely an ageist, but she definitely has her faculties about her.
30% of their income on housing. This is a top priority
85
for Democrats, but remains
107
an afterthought for Republicans. Earlier,
it's like some Strom Thurmond shit.
I reintroduced my comprehensive legislation housing package, including The housing crisis response
Look and listen to her.
bill provides more than $150 billion
Versus Biden.
and affordable housing investments, representing the single largest investment in affordable housing in our nation's history. These funds would create nearly 1.4 million affordable and accessible homes, bring down housing costs for all, and revive
That is the difference, right? Look at her.
of home ownership. Committee Democrats are committed to getting this bill across the finish line and continue to hold out hope that our Republican colleagues will finally join us in this effort. Unfortunately, extreme MAGA Republicans are not just ignoring housing inflation, they're advancing their Project 2025 manifesto that would dismantle U.S. democracy and the economy as we know it today. Project 2025 is authored by almost 24 former Trump White House staffers and Trump administration officials. It was compiled and published by the ultra-far-right Heritage Foundation, whose CEO recently declared that they are, quote, in the process of a second American revolution, which will be bloodless if the left allows it to be, quote, unquote. And if that kind of talk reminds anyone of the rhetoric we heard in the lead up to and on January 6, 2020, it should. Project 2025 promotes radical ideas to materially undermine the Federal Reserve, if not effectively abolished. MAGA wants to put you out of a job, Chairman Powell. So I look forward to your testimony and hearing from you, a Republican who was first nominated by President Trump, about your thoughts on the importance of the Federal Reserve and the work you have done to help our economy. And I yield back.
Gentleman yields back.
Like her or hate her, doesn't really matter, does it? You can't say she doesn't look like she's
President Obama.
She's got it. She knows what she's doing.
Before being nominated by President Trump to chair. So here we are. We'll recognize the chair of the Financial Institutions Subcommittee, Mr. Barr, the Andy Barr variety, for 1 minute.
Thank you, Mr. Chairman. Welcome, Chairman Powell. Runaway inflation and increased interest rates necessary to confront it continue to hammer Americans, and especially those living paycheck to paycheck. Workers and families
John Haggerty.
making everyday purchases at high prices in the grocery aisles and at the pump. They have suffered years of eroding purchasing power in their paychecks under the Biden administration's economic mismanagement. Heightened mortgage rates make it prohibitive for new home buyers to reach the American dream of a starter home for their family. I am pleased that the Fed is resolute in getting inflation under control. I am pleased that you have committed to an apolitical approach to this. I am not pleased by the Fed's opaque, unjustified, politicized, and underanalyzed regulatory proposals, which will ultimately hurt all Americans. We need to know where the Fed is going on its fundamentally flawed Basel III Endgame proposal and its opaque regulatory approach. I yield.
Well, Chair now recognizes the ranking member of the Financial Institutions and Monetary Policy Subcommittee, Mr. Foster, for 1 minute.
Thank you, Chair McHenry and Ranking Member Waters. I'd like to also thank you, Chair Powell, for joining us today and for the role you have played in combating inflation and supporting a stable economic recovery. While the presidency is often the focus of political pronouncements about macroeconomic conditions, there's no question that that undersells the importance and the independence of the work of the Federal Reserve Board. While actions taken by the President and Congress certainly play a significant role, monetary policy decisions made by an independent Federal Reserve are the big dog in shaping macroeconomic conditions that shape economic outcomes for millions of Americans. And work continues on inflation, but significant progress has been made to bring the country in line with the Fed's 2% target. The good news is that macroeconomic policy is working as designed. Well-calibrated monetary policy with fiscal support from the American Rescue Plan, the Infrastructure and Jobs Act, and the CHIPS and Science Act has powered strong job creation and low unemployment while staving off a recession that many thought inevitable, and far better, I should point out, than our peer countries. While Democrats are committed to supporting your efforts to cut costs for American families, I yield back.
Well, now,
Oh, they are blood and spy right now.
the 16th chair of the Federal Reserve Board of Governors, Chair Powell, you'll be recognized for 5 minutes to give an oral presentation or testimony without objection or written
Tesla bleeding.
part of the record. You're now recognized for 5 minutes.
Chairman McHenry, Ranking Member Waters, and other members of the committee, I appreciate the opportunity to present the Federal Reserve's semi-annual monetary policy report.
She's a spry 203 years old.
Focused on our dual mandate.
She has better interns than many of them.
And stable
Tiger blood.
for the benefit of the American people. Over the past 2 years, the economy has made considerable progress toward the Federal Reserve's 2% inflation goal, and labor market conditions have cooled while remaining strong. Reflecting these developments, the risks to achieving our employment and inflation goals are coming into better balance. I will review the current economic situation.
So this is just Jerome saying the same thing as yesterday. Want to make sure this is real time in case there was any change here.
Recent indicators suggest that the U.S. economy continues to expand at a solid pace. Gross domestic product growth appears to have moderated in the first half of this year, following impressive strength in the second half of last year. Private domestic demand remains robust, however, with slower but still solid increases in consumer spending. We've also seen moderate growth in capital spending and a pickup in residential investment so far this year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, a broad set of indicators suggests that conditions have returned to about where they stood on the eve of the pandemic, strong but not overheated. The unemployment rate has moved higher, but was still at a low level of 4.1% in June. Payroll job gains averaged 222,000 jobs per month in the first half of the year. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in labor force participation among individuals aged 25 to 54 and a strong pace of immigration. As a result, the jobs-to-workers gap is well down from its peak and now stands just a bit above its 2019 level. Nominal wage growth has eased over the past year. The strong labor market has helped narrow long-standing disparities in employment and earnings across demographic groups. Inflation has eased notably over the past couple of years, but remains above the committee's longer-run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in May. Core PCE prices, which exclude the volatile food and energy categories, also increased 2.6%. After a lack of progress toward our 2% inflation objective in the early part of this year, the most recent monthly readings have shown modest further progress. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee has maintained the target range for the federal funds rate at 5.25% to 5.5% since last July, after having tightened the stance of monetary policy significantly over the previous year and a half. We've also continued to reduce our securities holdings. At our May meeting, we decided to slow the pace of balance sheet runoff starting in June, consistent with the plans released previously. Our restrictive monetary policy stance is—
I'm working on Lily in the background here, gang.
—to put downward pressure on inflation. The committee has stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. Incoming data for the first quarter of this year did not support such greater confidence. The most recent inflation readings, however, have shown some modest further progress, and more good data would strengthen our confidence that inflation is moving sustainably toward 2%. We continue to make decisions meeting by meeting. We know that reducing policy restraint too soon or too much could stall or even reverse the progress that we've seen on inflation. At the same time, in light of the progress made both in lowering inflation and in cooling the labor market over the past 2 years, elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering adjustments to the target range for the federal funds rate, the committee will continue its practice of carefully assessing incoming data and their implications for the evolving outlook, the balance of risks, and the appropriate path of monetary policy. Congress has entrusted the Fed with the operational independence that is needed to take a longer-term perspective in the pursuit of our dual mandate of maximum employment and price stability. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on those goals matters to all Americans. I'll conclude by emphasizing that we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission.
944.
Questions?
Well, thank you, Chair Powell. I'll now recognize myself for 5 minutes. Chair Powell, let's begin with this question of the Basel III endgame. I know you got questions about it yesterday, but I think we need further clarity. Your testimony about Vice Chair Barr's discussions with the FDIC and with the OCC on the next steps for the Basel III endgame. You mentioned potential changes have been made to the original Basel III endgame, that a lot of progress has been made, and that the board is very close to agreeing on the substance of those changes. But the next steps, that's really what I want to get into. Let's get through the mechanics of what happens next. If the Fed, the OCC, and the FDIC agree on the substance of whatever changes you're going to make, what happens then? Like, walk through the mechanics as you anticipated.
Okay. So we're very close to having exactly that agreement on the substance of the proposed changes pursuant to those talks. The next question then is how to proceed. And, it is my view and the strong view of a number of board members that the appropriate thing to do is to take that new proposal and publish it along with the effects of the quantitative impact survey and put that out for comment again and receive comment on that and then take some time to review those comments before finalizing the regulation. And that's a discussion we're having with the other two agencies now. We have not been able to reach agreement on a path to do that, but that's something that we think is the right way to do. That's what we've done in similar situations. There aren't that many similar situations, but when we see broad and material changes to an important regulation, we think let's go out again and give all the commenters another chance to comment.
Yeah, and that also avoids serious lawsuit risk and the risk that Congress step in and overturn this rulemaking using the Congressional Review Act. I think the other agencies here, if they're not agreeing with the Fed, they're running against the independence of the Federal Reserve here. This is not a trifling matter of policy. This is a matter of real substance for the independence of the Fed and rulemaking at the Federal Reserve, which I think we should be able to keep the independence of the Fed separate, especially in this political environment. But opening up to a new comment period, so that means you have to get consensus for the Board of Governors on the policy. You have to get the agreement of the scandal-plagued chair of the FDIC or the 5-member board of the FDIC. You have to get agreement by the acting comptroller of the currency. These people should not have real standing with the Fed on a matter of serious policy, especially with a chair of the FDIC that is being ousted by his own party as soon as they can get a replacement confirmed. It's an absurd thing that the Fed has to go to an acting comptroller of the currency and a guy who's going to be out of a job very soon at the FDIC and get agreement. But thank you for listening. That was more of to convey this. So the quantitative impact analysis, is this going to include the interplay with the stress tests, GSIB surcharge, all the other capital charges here? Will that be a part of the quantitative impact analysis?
It'll be this proposal, which does include changes to the GSIB surcharge, but does not include the stress tests.
Okay.
We're going to talk about Dow Jones today, too.
The goal here with the quantitative impact is to actually measure the impact of these rules as enacted, right? Based upon what is existing regulatory structures. Okay.
That's right. Yeah.
All right, so let's get into the question of balance sheet as quickly as we can. 2.5 years ago, you stated, quote, the committee intends to slow and then stop the decline in the size of the balance sheet when reserve balances are somewhat above the level it judges to be consistent with ample reserves. That's 2.5 years ago. where are we in this question of what are ample reserves?
Well, so the balance sheet, the runoff in the portfolio is now, I think, $1.7 trillion so far. So we've made quite a lot of progress. We think we have a good ways to go, and as I mentioned, and as you just mentioned, we've now slowed the pace, really with a view to getting as far as we can without creating frictions and disruption that might cause us to prematurely stop shrinking. Going a little bit slower might actually enable us to go further. We think we have quite a ways to go. It's very hard to be precise about it. It's really a question of supply and demand, and we'll find that level with a little bit of a buffer on top of it, and that's where we'll stop.
All right, thank you for your testimony. The ranking member, Ms. Waters, recognized for 5 minutes.
Thank you very much. Chairman Powell, are you familiar with Project 2025?
Uh-oh.
Not really, no.
You've heard about it?
I really don't focus on these things at all. I mean,
You don't focus, but you know there's something known as a Project 2025?
Ruh-roh. House of Representatives, baby.
One proposal is to get rid of the Fed's dual mandate to promote only stable prices, but also maximum employment. This is your mandate. These are mandates, right? This is what you do. Is that right?
We do serve a dual mandate, that's right.
And so if there was anything that would get rid of the mandate, what would it do to our economy? What would it do to our country?
So the question of which mandate we serve is very much a question for Congress. My own view has been that the dual mandate has served us well. This is something Congress can change and change back to a single mandate. There are
What do you do to get maximum employment? What do you do?
Well, basically we have one tool on the economy, and that is we raise and lower interest rates. You'll find, though, that anyway, we certainly at the Fed do believe that the dual mandate has been a good thing, and it's enabled us to. It has not stopped us from controlling inflation when that was the thing that needed to be done.
And so while, of course, I understand you may not have seen, heard, or read Project 2025, are you familiar with an effort in the country to get rid of diversity and inclusion?
I see these things mentioned, but honestly, we're pretty focused on our task, which is maximum employment, price stability. We're strong supporters of diversity at the Fed, as you know.
Are you aware that I created a subcommittee on diversity and employment in this committee?
Yes, I remember that.
And do you think that getting rid of diversity and inclusion interferes with your ability to really realize the mandate of maximum employment?
I spent most of my career in the private sector, and what I observed was really successful institutions in the United States, companies, organizations generally, are those that do a really good job on diversity and get the best out of people and attract a broad, diverse range of talents to the table, and people feel comfortable speaking. So that's the way we feel about it at the Fed, and that's what we've been doing and will continue to do.
And do you think it's important not only to have diversity and inclusion in the public sector, but in the private sector also?
Yes, and as I mentioned, if you look at very successful American companies, you will very often see that they're good at that. They're good at hiring, attracting, investing in, and keeping diverse talent. That's one of the things that our really good U.S. public companies do well.
Have you seen improvement during your tenure where diversity and inclusion has created opportunities for more jobs and have to reduce the unemployment rate?
Certainly seen, I think you see over the course of my long career a big change in diversity and inclusion. And you see that in the private sector and the public sector, and I think that's generally progress. I do.
Under the work of this committee, and the subcommittee is chaired by Ms. Beatty, she was able to gather important data about what was going on in the private sector. And what she discovered was that many of the CEOs and others
Spy bleeding right now.
opportunity to learn more and to do better and to get assistance, and we saw improvement.
Just a heads up here.
Have you seen that?
There's no question if you talk.
Q's hit the second pivot point at 500.56, almost to the pin.
You need to be committed to these things.
And so I would like to compliment you on the job that you have been doing. I'd like to compliment you on keeping us informed about inflation. Not only do I welcome you here today, I look forward to working with you for years to come. I yield back. Thank you.
Thank you.
The gentleman from Arkansas, the vice chair of the full committee, Mr. Hill, is now recognized for 5 minutes.
Thank the chair. Chair Powell, thanks so much and welcome back to the committee. I want to pick up where Senator Tim Scott and Chair McHenry left off and reiterate my strong support for your comment yesterday in the Senate about the need to repropose the Basel III endgame. The Supreme Court's precedent, I think, makes clear that if a rule undergoes broad and material changes from the proposal to final rule, the public must be given a meaningful opportunity to review and comment on those changes. You generally share that view, I think. Is that right?
Yes.
And I'm looking forward to seeing the results of the quantitative impact study and the separate comment period, as well as an interagency agreement you referenced yesterday. Because of Dodd-Frank's role and the vice chair for supervision, Vice Chairman Barr's role and the Fed's role, would it be fair to say the Fed is a first among equals on proposing a rule like this? In other words, does the Fed have a supremacy position on determining whether it should be fully reproposed or not, or do you view it strictly as a collaborative basis? Just curious in your view on that.
I would say it's strictly collaborative, and I would say that our discussions with the FDIC, which Vice Chair Barr has actually been conducting, and the OCC, they've been very productive so far. So I want to make sure to say that we've continued to work our way through this, and I believe we will get fairly soon to a resolution of the remaining process issue.
Good. Well, let me turn from that subject to the court's recent decision to overturn the so-called Chevron doctrine. Many of us believe this was the first step to reining in decades, literally, of an unprecedented, uncontrolled growth in the administrative state. And so I think all of us on at least this side of the aisle are certainly saying to the Federal Reserve and other federal agencies in our jurisdiction that we want to reassert Article I authority over the direction that independent agencies work. Would it be fair to ask you to certify that because of this change in Chevron that the Fed would commit to
Bear plane forming above here on SPOOS.
Of an explicit congressional?
Looks like they want. I don't see anything on
First of all, we're studying
HYG, VIX, or Dixie's showing anything. Nothing on TNX. So this looks like we might have to close all of this stuff down here from pre-market.
I know us to be an organization.
And last night we had a squeeze as well with some gaps down below. So just be aware of it.
What we believe the law is.
Well, I'll submit that question maybe in more detail in writing, and maybe you'll have a chance to reflect on that. Back in February, you were on 60 Minutes, and you said the U.S. budget deficit, the national debt are unsustainable. Do you still view that the U.S. is on an unsustainable fiscal path?
I do. I think I tried to be clear that the level of the U.S. debt is not itself unsustainable, but the path that we're on is unsustainable, and I think that is not controversial.
I think many of us certainly agree with that, and we know that when the deficit's at 3 times the economic growth rate and growing, it's of concern, and it's contributed to inflation. Just 3 years ago in Jackson Hole, Wyoming, you gave a speech where you were confident that inflation was transitory, which I think we've come to realize that's not the case. This hearing is sort of a can't-miss opportunity for the Fed to demonstrate some humility on the monetary policy decisions, which some on this side of the aisle particularly think have made inflation worse. Your August 2020 Jackson Hole speech, you said the flexible average inflation targeting framework regarding 2%, that you would let it run above 2%. Was the Fed blinded by the previous 20 years of global change that was deflationary and or you were not alert enough in 2020 to
what the fuck
about that change in policy?
We were certainly mindful.
Not aware in 2020,
in which there have been
some hindsight ass shit right there.
Inflation suggesting that the neutral interest rate must have fallen quite substantially. That was the standard view. The thing we didn't see coming was the pandemic. It's not like everything went off the rails. It's like we had this pandemic, and it really changed the way the economy is working. We had a big crisis. We did a lot of things. So the concerns that led us to, those concerns that we were in a world of very low interest rates all the time.
But now, wouldn't you say we're in a very opposite situation where because of reshoring and tariffs and other policies that are quite inflationary?
What's this guy saying?
Well, I would say this. Those concerns are, right now we have the policy rate in the mid fives, right? And we see the policy is restrictive, but clearly interest rates, the neutral interest rate.
This fucking guy's fucking out of his mind.
So I think that's the question we'll be asking ourselves in our review, which begins at the end of this year.
We look forward to that. Now you go back to the chairman.
How much of what we did in that time period is relevant to the new world where rates appear to be higher?
The gentleman from Georgia, Mr. Scott, is recognized for 5 minutes.
Thank you, Chairman, and welcome, Chair Powell. It's great seeing you. Last time I saw you, we had the gracious pleasure of you visiting with me in my office, and we discussed a great variety of things. Thank you for that visit. Now, Chair Powell, this year the Fed tested 31 banks, up from 23 last year. Is that correct?
I believe that's right, yes.
And by estimating losses, revenues, expenses, and capital level under hypothetical stress scenarios, we did that, correct?
Yes.
And all 31 banks remained above their minimum common equity tier 1 capital requirements after observing losses of nearly $685 billion. Is that correct?
Yes, that is correct.
Yeah, I wanted to get those figures out and provide.
What's that guy's name? That guy was fucking crazy. Like, he thought about that as a question?
With the nation, because your vice chair, Barr, made this statement, and I wanted to put this in the record. His exact quote from this great achievement. He said, "Our goal of our stress test is to help ensure that we have enough capital to absorb losses in a highly stressful scenario. And this test shows that we do." I thought that was a great statement of your record. Now, let me ask you my question. It's simple. Will the 2024 Fed stress test results have an impact on how prudential regulators roll out a new and updated capital proposal?
So the two are really two different things. There's the Basel III capital proposal, and then there's the stress tests. So, and really the Basel III, as I mentioned, we've discussed, we're almost ready to put forward for further comment a revised proposal with material and broad changes to it. The stress tests are a different thing, and of course we realize we have to adapt those over time and be open to changes, and it has evolved significantly over time, but it's really a separate thing from the Basel III endgame.
Give us a little bit more information on the Basel III, because I worked with you with this. Our work goes all the way back to the Obama administration when we responded to that crisis with our banks. And you and I worked that up where we came up with the hardest hit program to help those who were suffering with.
Just a note that GME is breaking out right now from its daily trigger.
And at the same time,
we have two upside targets of 28 and 33.
And we've established that program, and it's still going on and helping many of our states. But I want to also share what is happening around the world as a result of our activities. The European Union is now set to delay key parts of its bank capital rules by more than a year so that their lenders will not be at a disadvantage. Over in Canada, it's important to know that their banking regulators have also delayed for another year, imposing high capital rules on countries' banks at the risk of making them uncompetitive. And
Just printed the first two targets, 2616 and 2669.
15% capital.
Next target thereafter, 28.
Yes, and other Swiss banks. And the bank
2791 and 2873.
to increase UK bank capital by 2%. And I think this is all a measure of your great work and that of your vice chair. And I just wanted to let you have a comment on that, please.
Sure. So we're committed to finalizing this proposal. Our banks are going to live with these rules for a long, long time. The main thing is to get it right, and that's what we're doing. What we do in the end will be consistent with the Basel agreement, and it will also be consistent with what other comparable large jurisdictions are doing.
You're doing a great job. Keep up the good work.
Yeah, baby. What up, Mr. Scott?
User for 5 minutes.
Thank you very much, Mr. Chairman. Thank you very much, Chairman Powell, and also thank you for continue to indicate that you will look at the entirety of the economy, the whole economy. Appreciate that. So one of the nation's largest banks recently warned in a memo, and it's also been voiced by smaller banks, that the current pace of regulations such as changes to capital requirements and lowering debit card interchange caps could lead to new fees associated with checking accounts and other increased costs for small businesses. This does come amid expiring tax provisions that are sunsetting as we speak, that are critical for small business, such as the R&D tax credit, interest deductibility, and bonus depreciation. This does raise the question, are you considering how these regulations and tax increases will directly work against your mandate to achieve 2% inflation? Moreover, with the proposed changes to Basel III, it is crucial to ensure that all stakeholders have a voice in this process, which you are stating will occur. And a Basel reproposal and adequate comment period are certainly very welcome. So, Chairman Powell, yesterday in the Senate, you mentioned that the majority view of the board is to repropose Basel III for comment period. Could you clarify if this means the proposal will be reproposed from scratch, and any other specifics you can provide?
Sure. So we haven't reached agreement on this. As I mentioned, we're working through this with our colleagues at the FDIC and the OCC. And I can't tell you exactly what the form would be. The sense of it would be, though, that we're making material changes.
Bear's trying to close and confirm a downside move here. We'll see if we squeeze up and above and hold or not.
Against the quantitative impact survey, and should have a reasonable time to comment on those. In addition, we're focused on one big area, but there are institutions that have made comments all across the spectrum, and we're reading all of those carefully. And we're not going to republish all of those. Some of those we can just make changes and move forward on. So it's going to be a very labor-intensive, time-consuming process.
Okay.
Writing these things up takes a long time, and we're going to get it right.
Good, that's great. Obviously, Canada recently postponed, as did the EU and UK, for international competition standpoint. It seems to make sense, and so that's appreciated. Chairman, would you agree that excessive spending, increased taxes, limits on domestic energy production, in principle, are a cause for higher costs for business, contributes to inflation, and as well tightens the labor markets, kind of running contrary to your two mandates?
You're asking me a kind of a political question there. I don't want to criticize a platform of economic fiscal policies that are not really ours to decide.
It's more of an economic question, but I appreciate your answer, sir. So when you mentioned recalibrate policy yesterday in the Senate hearing, was part of your thinking taking a more holistic view of economic conditions?
Yes, very much so.
Okay.
Yeah.
Okay. Chairman, is there any data to support the so-called greedflation, this term greedflation somehow has caused inflation? Is there any data to support those comments?
So we look at it that this inflation has been caused by a combination of, very strong demand and constrained supply. So it was really a high-speed collision between an economy that was reopening, and by the way, there was inflation all over the world at the same time, so these are some common factors. But at the same time, you had tremendous demand, for example, for automobiles. You had constrained supply because there weren't enough semiconductors, long story short. But so that to us is what this inflation is all about. So we've observed, the sort of healing of the supply side at the same time. Restrictive monetary policies weighing on demand, and we've seen inflation coming down from
So
those.
there's no data that supports that gouging of consumers is part of the inflation?
It's been very hard to track a connection with, earnings and things.
Secretary Yellen mentioned that she didn't feel that there was grocery price shock and that sort of thing. Groceries and gasoline are the two driving problems for American families and certainly my constituents. Do you believe your policies are helping to alleviate in those two areas?
So a lot of things affect, let's take energy first. The energy prices are generally set at the global level. We do have some effect on that.
Sorry,
but not
Chairman,
that
I've run
much.
out of time. Thank you. I yield back, Mr. Chairman.
Sorry, we can continue.
Great, thanks.
The gentleman from Missouri, Mr. Cleaver, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Chairman, for being here. In some ways, I want to follow up or at least respond to the very civil, but I think
They're being fairly good. This hearing isn't really too out of control right now.
central bank. And your response was, the question you raised would, if I answered it, it would be along some kind of a political.
Powell saying we see current Fed policy as restrictive. The neutral interest rate must have moved up at least in the short term.
I'm much concerned about a lot of the discussion. I've been on this committee a while, and so it comes up quite often. When the Federal Reserve was birthed around the turn of the century, I think around 1913, 1918, somewhere like that. Prior to the establishment of the central bank, was our country experiencing a lot of recessions because of no security? People felt no security, particularly the business community, in making big investments because nobody was in control. Just kind of think what went on just went on. Is that relevant?
Yes, I think the lack of a central bank between 1836 and the founding of the Fed was a period of lots and lots of depressions, and a lot of it had to do with the crop cycle and the banks not being able to handle the very large seasonal swings, and there was no central bank to provide liquidity. So that's really what gave rise to the founding of the Fed in the early part of the last century.
Do you think that it is dangerous to blend monetary policy and fiscal policy?
To blend them?
Yes.
So we try to keep them very separate, and we try not to express views on fiscal policy. That's for elected people who have undergone.
Watch out here if you're a bull. I'm in a call position right now. I might get stopped out here.
But important.
There's a cross happening on the 1 and 5 minute trigger.
Try to stick to that, and so we take your policies as given, and then we conduct monitoring.
Watch out for a bloodbath here.
With that.
I don't want to.
I'm trying to blast this straight down right now. The cross has already happened. It's been confirmed.
But and I have not read all of this Project 2025 document. I read some of it online a couple of nights ago. But even whether it comes out of a 2025 or a 3089, whatever, one of the things that I'm concerned about, reading this from this
here
document, that
And then all the way down here.
that the Federal Reserve is the inflation problem. And eliminating the Federal Reserve
Spoos wants to close some gaps to the downside.
does not come from within the Fed. I'm wondering here, would you agree with any of that I just stated, whether it came from me or Chairman McHenry or anybody else?
So I'll just say, first of all, we're certainly fair game for any criticism people have. I think what we've learned and what we know is that having an independent central bank is really essential. If you want to have high and volatile inflation, then the quickest road to that would be to undermine the independence of the central bank, of the Fed in our case. So I frankly think that view is very widely held. I find up here on Capitol Hill in both political parties.
So eliminating the Federal Reserve is best for promoting economic stability.
Yes.
Thank you. I knew that the ranking member was going to come in and deal with the issue of housing. She always does, and we all appreciate the fact that she's obsessed with it, and I like that obsession. But I'm wondering, as we try to figure out how to deal with this issue. Oh my goodness, my time's
Was that a question?
I didn't finish it, but yes. If you knew where I was going, please.
Gentleman's time has expired. We'll now recognize the gentleman from New York, Mr. Garbarino.
Thank you, Chairman. Chair Powell, thank you very much for being here today. Based on some comments you made today and yesterday, it appears you've made quite a bit of progress on changes to the Basel III Endgame proposal, and you're very close to agreeing some of the substance of those changes. I know you won't get into specifics. You said that. I just don't know how deep you won't get into them, but I just want to confirm what you said to my colleague, Mr. Muser. There will be, you're not reproposing some things, it's just going to be a partial reproposal?
That's what we're looking at doing, is major things that we've been working on, and there will be additional changes that will be made that won't be reproposed. That's what we're working on, rather than a full, wide proposal.
So it's not a complete proposal, just partial.
Yeah.
Can you get at least into, can you tell me which components you're?
It's not until it's all agreed and ready to go and vetted. I'm reluctant to try to get into too many specifics, just because when you're doing these things, nothing is agreed until everything's agreed.
No, I understand. I'm not asking for what specifically your changes,
Yeah.
which, if you're willing to say which.
I hope to be able to come
Okay.
to you with a really clear answer on that soon. I mean, I think we're ready to go at the Fed.
So that's my next question. So it's been said several times that you and many of your members of the board are at odds with your counterparts at the FDIC and OCC over how to proceed with putting out a revised proposal for comment. So if the FDIC and the OCC are not yet on board with allowing for a new comment period, who is holding up this consensus? Is it Chair Bloomberg? Is it Director Chopra?
I don't want to say that we're at odds. I just want to say we're working through this issue together,
Someone's got to be holding it up.
well, it's a discussion that we're having, and I think it's been constructive, and I think we'll try to keep it that way.
Okay, can you at least answer whether or not the 5-member FDIC board needs to sign off, or can you just go to the?
Jeez, I'm looking at some targets down below, and I'm like,
Comptroller is.
what do they want to do? Drop it a fucking
The FDIC
$1?
themselves, but I do think they're bored.
Like literally, they're trying to drop it a $1. Sweep the leg down here. I was like, it's only $1. I'm like, 556.83, 556.59, 556.10.
Would then not occur until at least the beginning of 2026.
Again, I can't be that specific.
I'm still long calls here.
Someone asked me, does it sound like the first quarter of next year might be? And I said, it might be. I mean,
Like all this doom and gloom is for less than $1.
as I mentioned, U.S. banks are going to be living with these rules for many years. The point of it is to get it right, not to do it quickly. We want to get it right,
agree.
listen to the comments, make sound decisions, and move ahead in a way that is, gives us a sustainable set of rules.
Yeah, that's right, JBJ. That I'm like, that's at less than $1. It looks so doomy, but it really isn't.
Other topic, long-term debt. You mentioned yesterday that you would most likely not move forward with other rules until people reach a place of understanding.
This looks like they're trying to range bound us all day long again today.
I hope that's the truth, as banks need to fully understand the implications of a Basel proposal
Unless that was top, it's possible.
is taken on long-term debt.
It's possible.
I'd like to
They're
emphasize-
saying "fuck you, 5,600." You're not gonna go above it. Eat shit and die.
Most importantly, transparent assessment of the current liquidity framework. So very quickly, will you commit to conducting a public quantitative impact study and a full notice and comment rulemaking before imposing any new liquidity requirements?
I didn't catch the first part of that, the first part of your ask.
Will you commit to conducting a public quantitative impact study and a full notice and comment rulemaking before imposing any new liquidity?
On the liquidity thing, I'm not exactly sure what we're contemplating there. We certainly contemplate getting a full range of input from the public on that, because some of these are novel ideas, and we understand that.
All right, as the chairman said before, these impact studies are very important because they're to show what impact these rules will have. So I think that is very important that we have that, because we had a mucked up process with Basel 2.0. And
Yeah, watch Dixie here. Dixie coming back up to retest its hourly trigger.
I'm going to yield to my colleague from Pennsylvania, Mr. Music, because I know he had another question. I thank my colleague. Chairman Powell, just back to what we were talking about, the price instability of groceries and gasoline.
If we make this trip down below, it could be fast.
So would lowering rates in the near future be a pro-growth?
Like straight bloodbath and then straight back up again.
That would actually drive investment?
If Dixie rejects.
Clearer picture for investment and perhaps help in these two categories, and in the end, increase in supply so as we lower those prices?
Honestly, when we think about our near-term rate moves, we're thinking about a couple things, and the first of which is we want to be more confident about inflation.
30-minute basis, let me see.
Chairman, I yield back. I yield back to my colleague.
Yeah, hourly velocity is on its way down right now. We're pretty bearish.
very much.
On a 30-minute basis.
Thank you.
Intraday hourly basis.
Chairman Powell, thank you very much for being here. We appreciate it. In fact, I was looking at,
Could be fast, though. I don't think it's like super bearish. I think it's more like
in fact, you had public service.
straight down and then straight back up again.
So I thank you for your long public service.
I'm getting stopped out right now.
Standing. I think
Appreciate
we all
it.
respect you deeply here.
I'm going to get stopped out of this position in the next couple
Pretty
minutes.
boring here today, to be frank.
Sorry?
You're pretty boring.
Yeah, there's a one quick move right there.
That's a high compliment.
Yes, it is.
Oh, there it goes. There it goes.
Sometimes when you're here, there's all sorts of.
I'm out. I'm flat.
And they're watching your every step and all,
We're bearish on hourly velo right now
right? And
on a 30-minute basis, but it's not like doom and gloom.
You know, take a look at our economy. We're growing at around 2%, it feels like. Inflation is down to 2.6%. Unemployment's at 4.1. These are good numbers.
Yeah, I mean, I hear the parade of horribles on the other side, how the sky's falling, but I don't see the media here to attest to that. In fact, it's just the opposite. Did you read some of the headlines of the new government in Britain? Some of the headlines? If not, let me read one. It says, "New British government inherits worst economic plight since World War II." And in fact, there's a number of headlines like that saying that England's in trouble. I imagine if you were running, there's.
Where's Warren and Kennedy? We're at the House today, say at the House of Reps and then the Senate.
And I think the reason
She's in the Senate and not in the House of
the
Reps.
government here has done a pretty darn good job. One of the things you said you didn't see.
I was expecting a little bit more aggressiveness from the House this morning. They're being very calm right now. They're not normally known for that.
Recession, maybe a depression. In fact, the country's going to fall apart. Did it?
No. We went through a period of high inflation as the other countries did. And, that's very
And
challenging
in
for the
fact,
people.
isn't it the case that most of those countries had higher inflation than we did in Europe?
Over time, there were times when their inflation was higher. I think
Yeah, it was.
overall it was broadly comparable.
Yeah, in fact, I brought it up a number of times here because there was a whole bunch of those countries that had much higher inflation than we did.
Well, Europe was much harder hit with the energy issues coming out of the Ukraine war than we were.
Sure. I mean, there's a whole bunch of other issues to instability. They had political instability and a whole bunch of other things, obviously. But, I mean, it is interesting today that, the parade of horribles that we hear doesn't seem to manifest itself with the media or the attention that you normally get. and that's good. I mean, I think it's a great thing. Now, I do want to ask a couple questions. I do have concerns, Basel III on housing. I think I've made those concerns known to your office, and I won't rehash them. But I do have issues that I want to talk to you about with regard to climate. Obviously, you said you don't read too much of the news. You didn't hear about Project 25. I don't think that's what you meant to say, and I don't want to put words in your mouth. I think when the ranking member asked you if you had heard about it, I think you said no. I think you've probably heard about it, but you haven't read it.
I've seen nothing more than headlines on it. I mean, I've devoted zero.
Yeah, me too. I don't read
energy
that.
into.
Yeah, I don't read that wacky stuff myself either, but I certainly read the headlines. But the reason I ask about the headlines is that you obviously have seen what has happened in Texas. You've seen what has happened with climate change. And in fact, you've testified, I think, before that you believe in climate change. Is that correct?
Sure.
Yeah. And so what are we doing? You've taken a number of steps, I think, that have been very positive to make sure that we look at the risks of climate change. Could you go over some of those? Because that does concern me. I think that's a change that we also didn't see. Well, I saw it coming. I've been saying it for a long time, but a lot of people didn't believe.
So, if you're looking at financial regulators, you're looking at people who have a very, very limited role in climate, and that is just to look at the institutions that we supervise and make sure that they understand and can manage the risks that they're running. That we are not climate policymakers.
Right. And I'm not asking
It has to
that.
be elected people who do that.
Right, but you have to take a look at the risks. I mean, look at the risks that the insurance companies are taking, and the banks, of course, are financing these homes, and now you can't get insurance on them, so all of a sudden you can't rebuild. I mean, these are risks that the banks are looking
So
at.
we don't regulate insurance companies.
No, right, but you regulate the banks.
Thanks, yeah.
And these banks have mortgages on those houses.
This guy's from Massachusetts, right?
Well, in many cases, they're not writing mortgages anymore. So that's the result we're getting, is that banks are saying, they see
This guy from Massachusetts?
They do.
My time's up, but thank you again. Appreciate you.
Thank you.
The gentlelady from California, Mrs. Kim, is recognized for 5 minutes.
Thank you, Chairman. Chairman Powell, thank you for being with us today. Gosh, you're under a lot of pressure from all sides to divert from our monetary policy goals. And I commend you for your leadership and staying.
Every time someone speaks, I'm like, when's the crazy from the House coming out?
Stability and maximum employment. So thanks again for your leadership.
Someone's going to go fucking crazy today.
That it is the Fed's
Fucking House of Representatives, isn't it?
to reopen the Basel III Endgame proposal for comment again. And I really urge FDIC and OCC.
Oh, AOC is coming out. The gang's coming out.
Opening the comment period.
So another side note here, AOC backed the president. This morning, Nancy Pelosi is calling again for Biden to remove himself. So she's going against AOC.
Proposal.
Sorry, didn't follow your question.
AOC looking like a party hack, and Nancy Pelosi going the other way this morning.
Proposal that garners mostly negative public comments in a public comment period for the modified proposal.
Broad support empirically would mean, a good solid vote on the Fed board. And I've tried not to be specific about what that means, but it also means broad support among the broader community of commenters on all sides. That's what I meant by broad support.
Got it.
Yeah, that's what I meant by it.
Thank you. And as the Fed looks to enacting several changes to the proposal, I would also urge you not to overlook how the Basel Endgame proposal would disproportionately impact FBOs and regional banks and U.S. domestic jobs because of the way the outside operational risk is, weighted. So can we get your commitment to that?
So let me just say I'm not going to get into specifics. We're well aware of those concerns. We've obviously carefully digested all of the comments we've gotten from all different sectors, and those are concerns that we're well aware of.
Thank you. Let's switch gear to another matter. You have spoken for the need of transparency. Are there any conversations at the Fed to have more transparency and better engagement and consistency with stress tests?
So we have increased transparency in the stress tests over time, and I would say we do. If people want to write articles and make comments that are critical of the stress tests, we're going to read those and we're going to think about that. We're open to improving it. We know that the stress test has to evolve over time if it's to remain relevant, and I think transparency is one of those subjects where we're prepared to listen and think about ideas.
Definitely. I would like to see more stress test regime that is more transparent and adapted, identifying unforeseen risks. So we can achieve that by being more collaborative, I believe, yes. So I'm also interested to hear from you whether you and your fellow banking regulators have considered the cumulative impact of any new liquidity standards with the...
Yeah, I should have just fucking stayed in that fucking trade. I'm pissed off at a fucking stop on it.
Liquidity requirements. So
God damn it.
what engagement has the board staff held with...
I'm going to read something to you guys. I'm going to interrupt this show really quick and just read something to you guys really quick here.
On that yet?
Just a heads up out there. Okay, I'm going to read this to you. U.S. company pensions are poised to shift billions of dollars into corporate credit after months of stock market gains and higher bond yields have left them awash with cash. Analysts and advisors said corporate pension plans, 103.7% of the funding they need to meet obligations as of June, the highest level since 2022, according to Milliman 100 Pension Funding Index. According to the Milliman 100 Pension Funding Index, that metric has dropped below 100% only 4 times since March 2022. Big gains in U.S. stocks have helped, with the S&P 500 up 18% this year on a total return basis. Such flushness typically leads to retirement fund managers to move resources away from higher risk assets like equities and into bonds. That's an important one. Into bonds. Credit strategists are already seeing some movement at the margins with pension funds seeking out investment-grade corporate bonds. So you're looking for investment-grade corporate bond ETFs and other products that allow them to lock in current high yields to help fund their long-term obligations. Now, if you want to know about any of those investment-grade bond ETFs, look up IGIB, USIG, SPIB, SPBO, SUSC, and they look like they dipped and bounced off of their hourly trigger recently, a lot of these investment-grade bond ETFs.
The Fed has been working on, with restrictive policy, on cooling demand. That has been working, and the supply side has been healing, and the negative labor participation shock has essentially reversed, adjusted for. So it's kind of working out as we had expected.
Thank you very much, Chairman.
The gentlewoman from Georgia, Mrs. Williams, is now recognized for 5 minutes.
Thank you, Chairman McHenry, and thank you, Chair Powell, for joining us today. As the president of the Federal Reserve Bank of Atlanta, Raphael Bostic has so rightly pointed out that combating economic inequality is a critical part of the Fed's dual mandate. When everyone in our community doesn't have the opportunity to contribute to their fullest potential, the economy is not firing on all cylinders. Nowhere is this more apparent than in my home city of Atlanta, which has more Black-owned businesses than any other city in the country, but is still among our nation's leaders in the racial wealth gap. I applaud you and your staff at the Federal Reserve for the work that you're doing to make sure that the economy works as well for the hardworking people of Georgia's fighting 5th District as it does for those in the top 1%. This includes helping to make sure that financial services are affordable and accessible to everyone. As the Fed moves forward with the proposed changes to Regulation 2, I know that protecting access to affordable and accessible banking is at the top of your mind. That is why I was concerned when I started receiving outreach about the unintentional effects that Reg 2 proposed rule would have on marginalized communities, including my constituents in Atlanta. Specifically, I heard about the impact that the reduction in interchange fees proposed by this rule could have on bank-owned certified accounts in my district and across the country. The Bank-Owned Initiative is a partnership between financial institutions and trusted community-based organizations to offer low or no-cost bank accounts to unbanked and underbanked individuals. Access and affordability are at the heart of the changes that you're proposing, and I couldn't agree more with those goals. but we have to make sure that programs designed to serve unbanked and underbanked individuals and marginalized communities continue to flourish. In response to these concerns, my colleague across the aisle, Mr. Lukemeyer, and I sent a bipartisan comment letter in March to you highlighting those very concerns and urging that the final rule not negatively impact low and moderate income communities. Chair Powell, how does the Fed take into account how regulations impact constituents who don't have an attorney or an interest group to submit a comment on their behalf?
Well, let me say first, we have heard those concerns that you raised and others have raised about aspects of the proposed rule, and we very much understand the concerns that are being raised. In terms of people where we don't have comment letters, we try to be thoughtful about the impact of our regulations, but principally we're looking for public comment on things.
Thank you. The FDIC's most recent data shows that the rate of unbanked households is at an all-time low. The Bank-Owned Initiative has certainly played an important role in this progress. Bank-owned certified accounts are available to more than 95% of low and moderate income households across all 50 states. Access to low or no-cost banking services is a door to financial inclusion and wealth generation for marginalized families. As written, Reg 2 could undo some of the enormous progress made in the past several years. Chair Powell, how can regulators work with members of this committee to ensure that future proposed rules do not hinder Americans' access to tools that enhance the Federal Reserve's financial inclusion efforts?
So we're very focused on things like bank-owned, as you pointed out, and on access to the financial system for marginalized communities. So we wouldn't want to do anything to weigh on that. We were happy to work with you in your office on those issues. But as I mentioned, we're hearing the comments and we're reading them, and we're taking those into account as we think about appropriate changes to the proposal.
So we will definitely follow up on that, because as we're writing these regulations, I want to make sure that we're thinking about the real world impact and what it means to consumers when they're accessing financial institutions. I look forward to working with you to further the Fed's financial inclusion efforts. Like earlier this week, I sent you another bipartisan letter related to the Federal Reserve's April proposal to extend the operating hours of FedWire Fund service to 22 hours per day, 7 days per week, and every day of the year. That was news that I was eager to hear. This may sound like a small technical change, but it can have a big
Give me a few minutes. I'm going to take a quick potty break.
Especially for those living in marginalized communities who live paycheck to paycheck. Growing up in the booming metropolis of Smith Station, Alabama, probably never heard of it, Chair Powell. But there are limited options for loans and short-term loans. In an area where everyone needs a car to get to work and they have to work to eat, when money is short, any delay in accessing a paycheck or paying a bill can disrupt your entire household. Extending operating hours for FedWire Fund service and National Settlement Service will allow people continual access to their funds outside of what we've seen normally.
You ready to just break out the piss bottle?
Out of time, but we will be following up for more conversation. Thank you.
Thank you.
The gentleman from Nebraska, Mr. Flood, is recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, after a year with very high inflation that battered American paychecks, inflation rates have moderated some. However, inflation continues to linger above the 2% target rate set by the Federal Reserve. In fact, the PCE inflation index has remained above 2% for the last 3 years. The Federal Open Market Committee's statement on longer-run goals and monetary policy strategy issued at the beginning of the year stated, and I quote, "The committee seeks to achieve inflation that averages 2% over time and therefore judges that following periods when inflation has been running persistently below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time," end quote. Chairman Powell, does the commitment to achieve a 2% average over time apply in the other direction as well? Meaning that if inflation remains above 2% for a protracted period, would the committee instead aim for inflation moderately below 2% for some time in order to achieve an inflation average of 2%?
No, it doesn't.
Is it fair to say that you would need to see the PCE index dip below 2% at least once in the coming months in order to contemplate a rate cut?
No, that's not fair to say. We've said that you don't want to wait until inflation gets all the way down to 2%, because inflation has a certain momentum. You wouldn't wait that long. If you waited that long, you probably waited too long, because inflation will be moving downward and will go well below 2%, which we don't want.
What combination factors would you need to see in order to support a rate cut this month or in September?
So once again, I'll say I'm not sending any signals on any particular date of any meeting whatsoever on policy. I said that yesterday, and I'm saying it again today, but I will answer your question. So what we said is that we want to be more confident. We want to have greater confidence, and that means more good inflation readings. That inflation is moving sustainably down to 2%. Greater confidence that that is the case. But remember, we have a dual mandate, too. We're not just an inflation-targeting central bank. We also have an employment mandate. So I could also see us cutting, and we've said this, I've said this, if we saw unexpected weakening in the labor market. And we do now see, I'll speak for myself, I now see the risks to the two mandates as much closer to being in balance. I think for a long time we've had to focus heavily on the inflation mandate, but I think now we're getting to the place where the labor market is getting pretty much in balance to where it needs to be, and so we're looking at both sides.
I know that the media and others have continued to talk about the prospect of political interference with the Federal Reserve. With an election coming up, I know you are very aware of the heightened scrutiny awaiting the open market committee meetings in July and September. Can you use this opportunity to speak regarding the Federal Reserve's political independence going into this election?
Sure, I'd be glad to. So, our political independence is critical to our ability to do our jobs and to sustain the faith of people across the political spectrum. And it comes down to, we make our decisions based on economic data, the evolving outlook, the balance of risks, and we don't take into consideration any other factors, including political factors. We have a long history of doing that, and I think the public believes we will do that. Any decision that we make on rates, on any of our policy tools, it's going to be very well grounded in the data, and it will represent our best thinking about what is best for the American public in the near and medium term. And that's the promise that I will give and that all my colleagues will give. And that means that we're not looking at things like election cycles. We're not looking at any of those things. We're looking at the data. What does it tell us is the right thing to do? When we figure that out, when we think it's time to move, we go ahead and move, but not until then.
Appreciate that. Finally, I'd like to raise concerns with housing costs. While shelter is one component of the broader PCE calculation, housing often makes up one of the largest, if not the largest, expense for many consumers. Inflation for housing remains persistently high. One of the characteristics of this economy is that consumer sentiment is remarkably low. Do you think high housing costs could be contributing to the persistently low consumer sentiment?
I think high prices generally. I think nobody really can be super highly confident of their answer on this, but I do think it's the fact that while inflation has come down, prices are high, if you know what I mean, and people are paying more for things, more for housing, more for the essentials of life, food, energy, and that to me is how I would explain surveys. We say that the economy is growing.
All right, I'm back here.
Unemployment's low, and all that's true, but prices are high.
Thank you, Chairman Powell, for your answer and your testimony, and I yield back.
Gentleman from New York, Mr. Torres, is recognized for 5 minutes.
Thank you. Chair Powell, the Fed has an inflation rate target of 2%. Are you waiting for both PCE inflation and CPI inflation to fall to 2%, or only one of those metrics?
So we look at different measures, but for a quarter of a century, the PCE inflation has been the Fed's goal. We've defined our goal in terms of that because we think it's the better measure of the costs and inflation that the public actually faces.
And now you've said that you're willing to cut interest rates before reaching the 2% target. Is the decision to cut interest rates going to be driven by reaching a particular target en route to 2%, or is it driven by the overall trajectory of the inflation rate?
It's going to be driven by the totality of the data. There isn't a particular number that we have in mind that we have to get to. It's more, you look at all of the data, and the question we're asking ourselves is, are we sufficiently confident that inflation really is moving down toward 2%. So what's the underlying inflation rate, looking through the volatility? We're also looking, though, as I mentioned, at the labor market, and we're asking ourselves, you know, we have to take into account now maximum employment, that mandate. So we're looking at both of those in the decisions that we make.
I mean, are you confident that the inflation rate is on a downward trajectory?
I do have some confidence of that. I think we've seen that over the past several years. The question is, are we sufficiently confident that it is moving sustainably down to 2%? And I'm not prepared to say that yet.
Chair Powell, you announced a reproposal of Basel III rather than a mere revision. Do you believe that the U.S. banking system is sufficiently capitalized in the absence of Basel III?
I've long been of the view that U.S. banks are well capitalized, and at the level of capital in the U.S. banking system is about right.
Okay. So if the banking system is sufficiently capitalized in the absence of Basel III, then what exactly is the need for Basel III?
First of all, there's no precise answer as to the appropriate level of capital. I think we've been part of developing the Basel standards. They create international broad parity. It's important that we have that. It's important that we do something that is comparable to what the other large jurisdictions are doing, and that it's consistent with Basel. And I think that's what our banks want, that's what we want, and that will be best serving the public.
But you agree we should conform without gold plating?
You know, some things we've gold plated, and some things we haven't. And but I think we should make. I think our end game proposal should be at the end. Should be consistent with the requirements of Basel and consistent with what the other large jurisdictions are doing.
Are you confident that there's no legal conflict between the standardization recommended by Basel III and the regulatory tailoring mandated by Congress?
I think we can work through all that, yeah.
Okay. But if there were a conflict...
Basel doesn't impose any requirements on anyone. There's no enforceable requirements. Every jurisdiction does what it's going to do. Basel doesn't bind anybody.
Right, but the regulatory framework you're adopting would codify those recommendations.
Yes.
Which would have the force of law, right?
Yes, that's right.
And so if there were a conflict between the codified recommendations and an act of Congress, would you agree that an act of Congress would supersede those recommendations?
Sure.
Does the loss of Chevron deference have any implications for Basel III?
You know, it's very early days to assess. There's several decisions that are about administrative law, and I think it's too early for us to say. I mean, ultimately, the question is, are the actions we're taking in compliance with the law?
Dude, they fucking took my to 1 penny right here. I want to show you guys something.
Maybe to the...
Is that some calls in here?
Agency, but that just means a court will be made.
I bought calls right here, I think, and
consistent with...
No, didn't take my stops there.
Target rate when it comes
1
to
penny.
Inflation. Does the Fed
One fucking penny.
Like when it comes to...
I got to stop talking about what I'm buying in public.
Well, we have a...
1 fucking penny.
What would you consider to be a healthy...
This is why I don't tell anybody. This is why I only tell the Discord. Like, came down here, right?
You know,
1 penny, boom, straight up.
We don't want an ample reserves regime with a buffer so that reserves are not scarce. And we think plentiful.
The worst part is I bought them for 12 cents.
Empirically.
Right here, they're trading 12 cents this whole squeeze.
For 4 decades,
they're still only trading 12 cents right now.
And low inflation. Can the U.S. economy return to the golden age of low unemployment and low inflation, or are we doomed to live with a new normal of higher interest rates?
I'm like, what do I
think we have low inflation. We've got a period here of very...
That's why I started posting my trades in Discord, not on public.
So can we have...
Look, I'm long calls right here. They say I shouldn't have said anything on the stream.
Inflation, I'm reasonably confident. Some people argue that we're entering into inflation shocks. That would be a challenging world, but that remains to be seen.
Thank you.
Gentleman from Iowa, Mr. Nunn, is recognized for 5 minutes.
Thank you, Mr. Chair. And thank you, Chairman Powell, for being with us today. Your office has done a very diligent job in working with this body on both sides of the aisle. I chalk some of that up to the fact that you've got some very good folks from Iowa on your staff there helping keep the trains running on time, so that's excellent. I will note that, in Iowa, the average family has experienced, annual inflation of about $925 per month just in the last 3 years. I've got 6 kids. We're the #1 egg-producing state in the country, but yet eggs for each one of my kids goes up 40% this past year. and take that times 6. I'm no economist, but that adds up real quick, and I think I'm reflective of a lot of families across the country right now. So, Mr. Chair, one of the things I'd like to talk about is what we are focused on and what your department's working on at the Fed. The U.S. Federal Reserve, in my opinion, should be more focused on folks like my hometown of Bondurant, Iowa, versus what's coming out of unelected bureaucrats in Brussels, Belgium, for example, which is one of the reasons I'm so grateful that you have talked about reopening Basel III for a conversation on what's in the best interest of the American people. I applaud you and your team for this. While I would like to see Basel III candidly scrapped altogether, I think that there are 3 things in this proposal that we've got to look at immediately. 1, the impact of credit availability, especially to ensure that it won't be tighter credit conditions on small businesses back home in places like Iowa. The ability for farmers across the country to be able to hedge their grain, corn, soybean, livestock in a new Basel III conversation, and ultimately eliminate the downstream effects on American banks being held to higher standards and very clear in Basel III than what's being held in Europe. So with that, I want to readdress your team's attention to the letter I sent in a bipartisan way with Senator Jerry Moran, specifically emphasizing the negative impact of increased bank capital requirements on the economy, our constituents, and ultimately our ag producers across the country. So what I'll first say is, can you confirm that the next Basel III proposal as outlined will address concerns from our ag growers, including our farmers?
Let me just say that we're well aware of the concerns you're raising about hedging, and I'm not going to be too specific about things, but we're quite aware of those concerns.
I certainly hope your team gets the opportunity to hear that, because it's one of the most painful things I'm hearing back in my home district. Would you agree that the end users' concerns could have been mitigated, maybe at the front end, if, Congress or, say, a farmer in my district had been included in those opening conversations?
All-time highs, baby.
In hindsight.
That's all-time. Yeah.
In any case, this is what the
all-time highs again.
Well, I'll note that 84% of the comments coming from this proposal concern entities outside of banks, as you know. A lot of those were from the ag industry who felt that they had no voice in this and were a recipient of things that really harm their businesses. With that, I want to read quickly, former Treasury Secretary Larry Summers was asked about Basel, and he said, quote, "We're going to need to prepare for consolidation in banking in the future, quite possibly some even further evolution of lending away from banks."
Fuck!
Here that Iowa has over 250 community banks with assets under $7 billion. His commitment, or his comment...
R3, 558, 49.
Concerns about a consolidation amongst banks across America?
So, I speak for myself, I realize that community banks are tremendously important in their communities, and it's not a better world when community banks go out of business, or at the same time, if there needs
there should, as we come into just, I'm going to tell you guys in Discord, hold on here.
The reason why.
I'll tell you guys in Discord expectations.
Going out of business or being forced to merge because of, for example, high fixed costs because of regulation or other things.
I would agree with you, Mr. Chairman. We don't want to be the instigator for a small bank to have to go out and stop serving a local community. As we look at Basel III, if it's finalized in early 2025, does that mean we will push implementation back to 2026?
I don't know exactly what it would be, but that's something like that is right. We'd have a typical phase-in process at the end of the.
So we are coming into.
Get to a final rule.
We're trading 55, 98, 96 right now. Be very careful as we make our way up here. We're going to enter into some resistance.
Scrap it all together and we can start over, if we even need to do that. Let me ask very quickly, with Chevron overturn, is there anything the Fed is doing to identify areas where maybe we have over-regulated at the federal side and you're self-policing right now?
Under the Chevron decision? Yeah. I mean, again, our view is we're very focused on obeying the law and reading the actual words of the law and interpreting it according to the words that are in the law. This is the way we approach things, and I'm not sure how much will change. Basically, a court will be doing that with a little bit less deference to the agency, but we think we're already interpreting the law pretty carefully. So, and again, these are brand new decisions. There are several of them, and it's way early. We're just studying them now.
Thank you, Chairman Powell. Thank you, Chair, and I hope you continue to self-police. It's much appreciated to you and your
team.
We'll
now recognize the gentleman from North Carolina, my friend, Mr. Nickel, for 5 minutes.
Thank you so much, Mr. Chairman. Welcome back, Chair Powell. I represent a Republican-leaning, very purple district, so my constituents sent me here to get things done. It's been disappointing that we're on track for what I believe could be the least productive Congress in our nation's history. But this committee has done some good bipartisan work on the digital assets market structure bill and stablecoins. It's a place where I have hope that we're going to see some action in this Congress. I know you and I have privately spoken about stablecoins, and here in the House, in a bipartisan way, we've been working diligently to pass a bill to regulate payment stablecoins. This committee voted in favor of the legislation in a bipartisan way last year, and there have been numerous calls from this committee to you and to the Fed asking that you prioritize working with Congress to help push this legislation forward. We've enjoyed our conversations with staff as well. Can you commit to directing your staff to finalize and support passage of stablecoin legislation this year?
So we've been, really pleased to take part in this process, and very much appreciate being included in it, and we'll stay with it. We think it's really important that we have a federal framework for stablecoins, and again, we'll be all in on working with you to get that done.
Thank you very much. Big issue for the folks that I represent, housing. The rising cost of housing hits my constituents especially hard in North Carolina. Our ranking member, Maxine Waters, has made this a big priority for the work that we do in the committee. In North Carolina, we've got 343,000 households that spend over half of their monthly income on rent, leaving little money for other expenses like healthcare, transportation, and food. Access to safe and affordable housing is essential to the well-being of working families and individuals in North Carolina and around the country. Chair Powell, despite the strong economic trends you mentioned in your testimony, housing prices and median rents have increased by nearly 50% and 41% respectively since May of 2020, and they continue to rise. In fact, housing costs continue to outpace modest wage gains. High interest rates continue to add to those costs. For example, high interest rates make it more expensive for home builders to finance new housing. High interest rates also cause landlords to change higher rents and lead to higher mortgage costs for would-be home buyers. I know that you and your colleagues at the Fed are correctly focused on bringing down inflation, important goal, but have you considered that at this point, with housing cost increases being the primary driver of inflation, keeping interest rates high only towards that stated goal?
So a couple things are happening with housing. Before the pandemic, there was pretty serious housing shortage, and we can't do anything about that. Then the pandemic comes along, and we really think the best thing, the most important thing we can do for the housing market in the medium and longer term is to get inflation under control so that interest rates can come down, so that we can get back to a more normal interest rate. No one knows exactly where interest rates will go, but they'll be lower than they are now. And the housing market, supply and demand, will work their way out, and you'll have supply of housing. There's still going to be a housing shortage at the end of that, though. And it's true that our policies work through interest-sensitive spending. Housing is maybe the most interest-sensitive form of spending, buying houses with a mortgage. We know that we have really significant effects in that market, and it's tough on people, but this is the path to getting inflation down, which will bear fruit for many, many years.
Thanks so much. I don't think I'm going to be able to get in my next question in the limited time I have, but I wanted to give you this opportunity if you'd like it. I've talked to you privately about this and have a pretty good idea what you'll say. But if you would like to say that the economy is heading for a soft landing, you're welcome to say soft landing as much as you'd like right now.
I'll say, for some time, I've thought there is a path to getting back to full price stability while keeping the unemployment rate low. There is that path. We've been on it. We're very, very focused on staying on that path. I would say we're at a place now where the risks to the two mandates are much more in balance than they were.
You want him to say soft landing. Everybody wants him to say it, right? He's not gonna. He's only gonna say stop using that terminology.
We have more.
When the soft landing is over, you'll hear Jerome say, "Stop saying soft landing."
We've seen considerable softening in the labor market.
Oh.
We still have a strong labor market with low unemployment, by all means. But so this is what we are very focused on continuing to work toward.
Thank you very much, and I yield
Thank you.
back.
The gentlewoman from Texas, Ms. De La Cruz, is now recognized.
Thank you, Mr. Chairman, and
Edging soft landing.
for being here today. I appreciate that. I represent a working class in South Texas. In fact, my district is mostly Hispanic, one of the most Hispanic districts in the entire nation, over 80%. And my district is also a rural community. So the topic today greatly affects my constituents and is something personal for me. That being said, the population that I represent is a population that the Federal Reserve research has shown disproportionately will be the hardest hit in inflation. That being said, higher prices due to Biden's induced inflation is something not only the nation is feeling, but my constituents are feeling. They're feeling it at the grocery store, they're feeling it at the gas pump, small businesses are feeling this, and we know that cutting back on their spending, people who are living paycheck to paycheck, they still can't get away from these increasing costs at the grocery store or the gas station. So even small changes have a big impact in rural communities like mine. In fact, the Farm Bureau recently said that the cost of the 4th of July prices, the 4th of July celebration had high increases. The headline reads, record high 4th of July cookout costs, inflation hits the backyard. This report says that costs were up 5% from last year and up 30% from just a few years ago, all during the Biden administration time. Now, the Biden administration wants us to simply forget about the last 3 years and the pain it has caused families in my district. They don't understand why people are unhappy about their current economic situation. And quite frankly, it is
Spicy McChaggies.
it's simply out of touch with the everyday American. It seems obvious that until we grapple with the runaway government spending, that unfortunately we are going to continue to have runaway inflation. Chairman Powell, can you explain to us how the excessive government spending not only increases the national debt, but also affects inflation as well?
Sure. So let me say, first of all, we completely understand that inflation hurts people, low and moderate income people, directly and immediately in a way that it doesn't affect even middle class people, because paying more for the necessities of life when you don't have much of a financial safety net, the pain starts right away. We get that, and so it is for those people, among others, that we are doing everything we can to get inflation under control and stay at the job until it's done. In terms of the causes of inflation, the inflation that we're having is not that different from what other advanced economies around the world are having, and it really results from the pandemic comes along. Inflation is low. The pandemic comes along. We shut down the economy. People are sending checks to replace their income. They can't spend that money because they can't go to the movie theater or to a football game because everything is closed. So savings go up. And so people are spending a lot. Meanwhile,
Chair Powell, I have only a minute left, so I yield my time back. I want to shift gears real quickly. I continue to believe that the federal banking agencies, including the Fed, should scrap the flawed Basel III endgame proposal and start over. At this point, the last thing a first-time home buyer, a small business owner, and constituents, as you said, low-income people who are rural people, for example, in my community, the last thing they need is harder access to capital, which is exactly what that proposal does. The public knows it and doesn't want it either, with a whopping 97% of public comments being negative for this proposal. Chair Powell, don't you agree that with the overwhelming negative reception of this proposal, that it shows a lack of public support?
I do think that's fair to say.
Thank you. I yield back.
The gentlewoman from Colorado, Ms. Pedersen, is now recognized.
Thank you, Mr. Chairman, and thank you for your service. And
SPX slamming, or price slamming into 5,600 on SPX currently.
when I think about what we've been through as a country,
We should jump right over 5,600 if you don't know.
economy in collapse, and what this Congress was able to do to infuse money to keep our small businesses afloat, critical services available, and making sure that we were in a position for the quickest, strongest recovery in the world. And while we have a lot to feel proud of, we recognize and have had many conversations throughout this committee about the pain points that people are continuing to feel with rising costs. And you touched on this. I really appreciate the discussion around housing in an earlier question, because this is the greatest inflationary costs, especially in Colorado, where we have seen significant home price increases. A lack of supply, people are unable to move because they would go to a much higher interest rate, and then people are unable to buy because they can't afford those mortgage payments. And so while you've talked about recognizing that lowering the interest rates will actually help with addressing the housing crisis, we still have a lack of housing supply. So can you talk a little bit more about what's happening, and that the lower interest rates are only a piece of this?
It's a longer term thing, and a lot of it is it's harder to get lots and zoning and materials and workers, and in many metropolitan areas, the near-in areas are all built up. If you look around Washington, I grew up near Washington, D.C., and it was countryside, just a couple of miles outside the Beltway. There was no Beltway when I was born, but ultimately, it's just we have not enough housing, and that was true before the pandemic, and certainly the pandemic did slow down housing construction. I think we'll get back to a more normal economy with lower interest rates and those sorts of things, but we're still going to have housing shortage.
Absolutely. When I think about the other pieces of the fallout from the global pandemic and the changes that we saw in our economy was in commercial real estate. And I've continued to read about regional bank failures and the risks that the commercial real estate poses in the long term for those assets being on the books for our banks. What is your insight on the risk that it poses for our financial stability, and what we should be thinking about here in Congress?
So the commercial real estate situation, which is it's significantly downtown office and related retail and things like that. This is something the banks have been working their way through for the last couple of years. I think it'll take more time, more years to work all the way through it. We know from the stress tests. And
I'm still here. I'm just going to eat. My daughter made me some lunch, so just give me a moment here. I'm going to turn the camera off, and I'm still here, though. You'll hear me in the background.
High concentrations in their local community in real estate. We are aware of those. The banks are aware of it. I think the supervisors have been around those banks, making sure they have capital, they have liquidity, they have a reasonably, not too optimistic assessment of how much capital they'll need, how big the losses will be. So I think we'll be working through this, and it doesn't seem to be a systemic problem or one that threatens broader financial stability. It does threaten bank profitability and those sorts of things, but it'll be with us a while. We'll just keep working our way through it.
And the ability to continue to loan to small businesses because you're being locked up. You are not going to have enough time to answer this question, but my remaining outstanding question is around the recent Chevron ruling, and how you anticipate that impacting the Fed's ability to adjust to the needs of the country and ensure financial stability without being sued at every turn.
We're just looking at all these new decisions. So in its earliest day, I speak under the control of my general counsel, who I don't want to cause him to strike me for
That's how I feel about my staff. I mean, not striking me.
No, but I mean, look, ultimately, we're already very careful.
The boy Jerome likes her. How you see him? You see him? He's like, what's up? You want to meet up afterwards for some cocktails?
This ruling doesn't change that.
You want to come to the next swinger party with me? What's up? You want to meet Janet?
Committed to the rule of law.
Great, thank you so much. I yield back.
Thank you.
Gentlelady yields. The gentleman from Wisconsin, Mr. Fitzgerald, is recognized.
Chairman, thanks for being here. There has been a lot of talk about Basel III. Wanted to just change that subject a little bit. Long-term debt proposal.
Fitzgerald's like, we're not having any of this.
Rewritten and reproposed.
There'll be no sex in the chambers today.
The rule needs to be tailored as law requires so that regional banks aren't treated more harshly than the largest banks, of course. In particular,
yeah, exactly. Let's talk about rates later.
Long-term debt at both the holding company and insured depository institution, that seems to be a burden, is what we're hearing, I think. I just wanted to mention that I would hope that there would be some flexibility for smaller regional banks to pre-position resources, because they're obviously there's some resources that are loss absorbing, I guess is the way you would consider.
Yeah, Winky.
In the reproposal. Do you have any thoughts on kind of how this is playing out right now, or what this looks like?
Yeah, so on the long-term debt thing, we put it out for.
I'm with you on that, Winky.
Comment. We've received quite a few comments, and staff has been analyzing them, and that's something we're well aware of the concerns that have been raised, and we're thinking carefully about how to move forward on that. The other one was pre-positioning. That's more along the lines of the discount window and the liquidity requirements, I take it. So
right.
So we haven't made a proposal there yet. We're thinking carefully about that. I think we're trying to learn the right lessons from what happened last spring at Silicon Valley Bank and a couple other banks, and one of them just is the discount window worked, but we could certainly modernize it, make it more effective. And also we learned, that bank runs are moving just a whole lot faster, at least in that case, and that even bank runs from 10 or 15 years ago were nothing like as fast as what happened in Silicon Valley. So we need to bake that new learning into the liquidity requirements in some way or other. We, again, haven't made a proposal. When we do, of course, it'll go out for comment, and we'll very much want to learn from those comments.
Very good. There's been a clear trend of banks stepping away from the mortgage market, kind of in the face of the increased regulation. That's my interpretation, at least. Non-bank lenders have stepped in to kind of fill that void. Today, banks support the non-bank lenders and the broader housing finance system through the so-called the warehouse lending for home mortgages. But I'm deeply concerned that some of the, as was mentioned by my colleagues earlier, that some of the Basel rules could harm both bank and non-bank lenders alike, kind of undermining the liquidity and kind of the raising costs of home buyers.
Right here and back.
So let me just.
I don't normally eat lunch, so.
Basel III, the endgame proposal, could it?
I only had like 5 bites of that stuff.
Less stable, I guess, is the question.
So that's certainly not the intention, and we're again well aware of.
You think this is the top?
Concerns that have been raised.
Not quite yet.
Certainly paying careful attention.
Close, but not quite.
Despite the smaller issuer exemption for the debit interchange fee cap, insurers with less than $10 billion.
Oh, for today?
Reportedly lost about 35% of inflation adjusted interchange.
I'm wondering if CPI is the trigger.
The impact of further reduction of debt interchange will have on small financial institutions with less than $10 billion of assets.
Yes, so that's another one where we put out a proposal. We got a lot of comments, and we're carefully reviewing those, and you're certainly aware of the specific concern that you raised.
As you may know, the latest Fed Y4.
We got CPI tomorrow in the morning.
Used to help collect data for Fed stress tests. Ask banks for more detailed data on bank lending to non.
If we can trade this today up here.
As a result, there's concern that the Fed.
We can trade that right there.
Trying to directly regulate non-banks and the financial risk. I just talked to one this morning. That's. I
think that's your trigger up there. So I don't know if it happens today. Like we squeeze up, trade the.
And its stress testing models and the
trade that, and then that's it. That's the trigger.
Planning to indirectly regulate non-bank financial institutions through these tests?
This could be it.
That's not the idea. The idea is we see intermediation growing very quickly in.
What I don't want to see happen is
We don't regulate them.
what I don't want to see happen
Plan to regulate them or anything like that.
is we trade.
The question is what risks are being kept.
So if you watch your screen right up there,
do regulate and supervise, and what are the relationships?
what would suck would be
banks and banks.
You know, like we kind of like edge all this stuff up here.
Understand what are those business relationships?
You know, this is CPI in the morning. Pretend this is CPI at 8:30, and
thank you, Chairman.
Boom, we slam into it in pre-market.
The gentlewoman from New York.
It's like an auto sell down.
Thank you, Mr. Chairman. Thank you, Chairman Powell, for being here today.
So you can't jump on it in cash market to the downside, or
Is
you know, we run it up into, we get that, the CPI comes out, we wake up tomorrow morning, everybody's like, fuck yeah, I'm buying calls, and it's bam, straight down to the depths of hell.
We've said that we wouldn't reduce.
It seems like there's a setup here to trap bulls.
Down to 2%. I think the question of what is neutral.
I don't know if it's in the overnight or if it's in the pre-market or if it's at the open tomorrow.
It seems to me it's unlikely that we'll be going back to the very low interest rates of the pre-crisis period. But
if I was a bull,
we won't know that.
We'll see how price goes for the rest of today.
And the Fed's dual mandate comprises of price stability and maximum sustainable employment. As the Fed is thinking about inflation,
Morning, DJ, how are you?
Interest rate cuts, how are you balancing these priorities with the need to maximize employment?
So over the past couple of years, we've had a very strong labor market and inflation well above target, and that has led us to focus mainly on bringing down inflation. Over the course of 2 years, inflation has come down pretty significantly. There's more work to do there. We're not at our target. We need to keep on that job. At the same time, the labor market has cooled pretty significantly. And so I would say those two goals are now much closer to being in balance, and that means from a policy standpoint, we need to be paying attention to both of them, whereas for the last couple of years, really, we had to pay mostly attention to inflation.
Chairman Powell, I have told you that I will be asking for a status update on the Section 956 rulemaking at every future hearing. Since your last appearance in March, several of your fellow regulators have issued a proposed rule. Why did the Fed choose not to sign onto this proposal?
So what we're doing is we're looking at the current state of affairs as it relates to incentive compensation. As you may know, we've had guidance in place now since 2010 for all banks, and we supervise.
How can you say if you was a bull?
So it's a very different picture than the one that.
I don't know what you mean. So rephrase it.
We're asking ourselves, what is the?
If I was a bull
today, and how do we tailor?
I'm speaking in the third person.
To address, the residual risk as opposed to what the situation in 2010 was.
Yes. In previous hearings, you said that you need to better understand the problem in order to write the rule. In a speech in June, SEC Commissioner Lizarraga said, and I quote, "It has been well documented that."
So Powell said earlier, he said, I do have some confidence in inflation coming down, but I'm not prepared to say I'm sufficiently confident in it coming down sustainably to 2% yet.
Longer-term risk.
That's directly related to the election.
Financial system. Additionally, since your last appearance, several of your fellow regulators have moved toward with a proposed rule.
He also said we need to be mindful of the labor market. I've seen considerable softening there. That's a hint towards rate cuts.
Being able to understand the scope of the problem, and the Fed has not.
Well, I think the quote absolutely makes my point, which is I think everyone agrees that incentive compensation practices before the global financial crisis were not in a good place. However, we published guidance on incentive compensation, binding on all, well, not binding, but guidance for all banks in 2010, after putting it out for comment. A lot of thought went into that guidance, and now we supervise on that guidance. And so the situation with incentive compensation now and banks is completely different than it was before the global financial crisis.
It's
completely different.
Well, you know, the other regulators have been able to figure this out, and you haven't. But let me just say, this is not how congressional mandates work. Of all the rulemaking provisions in the Dodd-Frank, only 148 were mandatory. And of those, only 22 had a deadline of less than a year after enactment. Section 956 was one of them. And I hope that you come to the conclusion that it is your duty to issue the regulation. Thank you, and I yield back, Mr. Chairman.
Section 156 requires either a rule or guidance, by the way. It does not require a rule or guidance. Thank you.
The gentleman from Florida, Mr. Donalds, is now recognized.
Thank you, Mr. Chairman.
Oh, that's what's her name? That's a surrogate for
a lot of different areas of ground.
What's her name from the Senate?
Bureau of Economic Analysis. Since President Biden took office, the price of goods has continued to outpace family incomes, with prices increasing now 19.3%, while average weekly earnings have only increased 14.6%. So families have fallen behind with respect to their purchasing power, that they're able to go and acquire goods. What role has government spending played in creating this untenable economic crisis?
Close that door, please. Sorry, I can't hear very well when the door's open. So
I'll repeat, that's fine.
No, I heard you.
Oh, okay.
That needs to be closed. So what role is government spending as part of the story? So government spent, we had our rates really low. The pandemic happened and we closed the economy and then reopened it. And I think you saw a burst of inflation, everywhere in the world. And certainly there were many contributors to that.
Do you think that the president in his budget calling for an increase of federal spending, up to upwards of 5% increase in federal spending across the board, do you think that's going to have further implications on stubborn inflation plaguing the pocketbooks of the American people?
It would be inappropriate for me to comment on the president's budget.
The only reason why I would ask Mr. Powell is because obviously the Federal Reserve is having to respond to various aspects of fiscal policy coming from Capitol Hill.
Just a note here, HYG is breaking out, trying to break above to new highs.
5%, 10%, 15%.
Honestly, that's a question for elected representatives. We don't play a role in fiscal policy.
Oh, fair enough. Is it the view of yourself and the Federal Reserve Board that fiscal policy does create impacts on the Fed's ability to manage monetary policy for the United States?
We take it.
Katie Hill, that's who it was.
And we're not commentators. We're not the Congressional Budget Office or the Office of Management Budget. Whatever fiscal policy happens up here, we decline all opportunities to be commentators on it. We take it as a given, and that's because we didn't run for office. We don't have that job. We stick to our knitting. And the fact that we're independent really depends on us sticking to what our assignment is, which is to deal with things with the economy as it is.
I would argue that the fiscal policy of the United States has given you guys a lot more to deal with, and whatever the various burdens that come with it. Unfortunately, you have to tangle with it, but the American consumer is the one that truly has to deal with it. I'm going to move on. The Monetary Policy Report cites a pickup in immigration as one of the major factors that has improved the supply of labor. However, labor force participation rate remains below pre-pandemic levels. What percentage of the increased foreign-born labor supply, to your knowledge, comes from illegal immigration?
What percentage say it again, the question?
What percentage of foreign-born labor comes from illegal immigration?
I think all of foreign-born labor comes from immigration.
Yeah, baby!
Sorry, sir.
I don't know the answer to that.
All right, well, one of the things that I think will be important to help, I guess, advise Congress on—
You just totally fucking played him.
The Federal Reserve had some data to that regard to help us make further decisions into the future. Chairman Powell, let me ask you this one overarching question. Obviously, interest rates, if you compare it over the last 15 years of monetary policy, is at an elevated rate. Does the Fed anticipate any possibility of rates being lowered, whether it's 50 basis points, 100 basis points, at some point over the next year or two?
So I guess if the question really is where are interest rates going to settle out when all of the effects of the pandemic are really done? And no one knows. This is a great discussion to have. But I think my sense, and pretty commonly people think we probably won't go back to that era between the global financial crisis and that pandemic, where rates were very, very low and inflation was very low, and like extremely low. There were major European countries that had negative 10-year bond rates, negative, and that was not the case here. But I don't think we're going back to rates that are that low. We think that things like the neutral rate are driven by slow-moving forces, but ultimately you can see the effect. We have, our policy rate is over 5% now, and it feels like policy is restrictive, but not, intensely restrictive. So that suggests that the neutral rate of interest, at least as of now, will have risen somewhat.
Spooze, baby.
Okay, thank you so much. I yield back.
Thank you.
Gentleman yields back. We now go to the gentleman from California, Mr. Sherman, who is recognized for 5 minutes. Mr. Sherman. Would you like us to move on?
If it's Josh's turn, it's Josh's turn.
Gentleman from New Jersey is recognized for.
Thank you, Mr. Sherman. Thank you, Mr. Chairman.
SPX, Winky's saying that SPX 5600 has been achieved. I think we break above 5600 in SPX. And I put in the Discord what we should hit, and then what should happen thereafter. So if you're in the Discord, I gave you a target price for SPY, and then what should happen to SPY thereafter.
Matter, yes.
The SEC's staff accounting.
So make sure you check the Discord. You should see the expectations.
Specific bulletin requires banks to put digital assets held in custody on their balance sheet, effectively keeping banks out of the market entirely. Have the Fed and the SEC had conversations about the impact of SAB 121, and just want to get a sense of your thoughts on the policy, please?
So we, as you know, I think we don't comment on the SEC's policy. They don't comment on our policies either. So I know that I knew you were going to SAB 121 on that, but honestly, it's the SEC's business, not ours.
Thank you. Last month, you said that when evaluating inflation data, you consider whether wage growth is outpacing productivity. From 1979 to 2019.
559 C's. I posted that earlier in the Discord. They're trading 22 cents right now.
Historical gap when considering whether to hike rates on families.
100% up on that trade. I'm out right now on that trade. I was in, I got stopped out, but it is trading 22 cents right now.
Maximum employment. Those are our goals. We don't really have the ability we don't have a bunch of different tools for things like what you're talking about. So really, it's just.
Thanks, Mr. Talking Monkey.
Of course, we're very well aware of longer run trends like that. You have to also include benefits, though, in that analysis, which does close that gap quite a bit. You just mentioned wages.
I appreciate that. Thank you. Mr. Chairman, yesterday the Director of National Intelligence said that, quote, Iranian government actors have sought to opportunistically take advantage of ongoing protests regarding the war in Gaza. End quote. They have observed actors, quote, observed actors tied to Iran's government posing as activists online, seeking to encourage protests and even providing financial support to protesters, end quote. As a member of the House Select Committee on Intelligence, I'm equally concerned about our adversaries meddling in our financial system. Can I have your commitment, or if you can discuss if you're working with other federal agencies to investigate and address foreign interference channeled through our financial institutions?
So we do take part in many of those things, especially at the staff level. And as you know, there's a lot of focus in the intelligence community, and it's very helpful to the banks, the commercial banks, and to us. But we're certainly very focused on those issues. We've got a strong team. Of course, you're never able to sleep on cyber risk, but we just keep fighting it.
I would like to switch gears to the discount window, please. Chairman, we've heard that the discount window is behind the times in terms of its operations. We also continue to hear that efforts to modernize the discount window and encourage its use will be ineffective without reducing the associated stigma. The usability of the discount window is an important tool for banks that need liquidity, Just wanted to get a sense of efforts underway to make the discount window a more realistic option for banks that need liquidity.
So it's a couple of things. First, it is we need to modernize our infrastructure. You know, the discount window in our system is not a primary source of credit. It's a source for banks that they can use under certain circumstances. So, but we know that the infrastructure is a little tired, and we're investing in that and making it more user-friendly and all that. So that's a big project that's going on. Sorry, the second point was stigma. So stigma is, that's tough. That's a tough one. And, you know, it amounts to, there are a lot of ways to get after that. We're studying all of them. You know, in a sense, if you require banks to use the discount window, then that can help with the stigma. I mean, this is a big ask, but, you know, when Congress required us to publish the names of discount window users, that didn't help. It doesn't help at all because
look at Tesla. Tesla's about to fucking beast mode it right now.
Troubled, and that's not what we want. We want people to be able to freely use the discount window. So we've been focused on this issue for a long time, have not made a lot of progress on it, but right now I think we're very focused on it.
Thank you, sir. I'll yield back. Thank you.
Gentleman yields back. We now go to the gentleman from New York, Mr. Lawler, who is recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, to the best of my knowledge, the last public meeting between you and President Biden occurred on May 31st, 2022. Does that sound accurate?
I'm going to take your word for it.
Okay. Have you had any private meetings with the president since that time?
No.
Any phone calls with the president?
Nope. I don't believe so.
Is there any reason why you've not met with or spoken to the president?
I meet with when any president calls you come and you meet. But
yeah, what the fuck?
It hasn't happened, so.
So in over 2 years, with inflation still nagging us, with cost out of control, President Biden has not asked to meet with you in over 2 years?
I haven't had a meeting with him. He hasn't sought a meeting, and of course I don't seek meetings, so you have the date.
But to your knowledge, in the last 2 years, you've not spoken with or met with the president at all?
He shook his hand in a line once, but that wasn't a conversation. It was just, Mr. President, and that was it. It was at a state dinner. I attended a state dinner a few months ago, and I shook his hand. Good evening, Mr. President, and that was it.
Does that not strike you as odd that the president has not sought to meet with you?
Not at all. Not at all. We're an
Mr.
independent
Chairman.
agency, and
Mr. Chairman, parliamentary inquiry, please, Mr. Chairman.
I'm sorry.
Am I recognized?
I want to answer your.
State your inquiry.
Thank you, Mr. Chairman. I make a point of order under Clause 4 of Rule 17 that the gentleman's words are disorderly and
Lawler was
decorum.
I just looked him up. He's a Republican, by the way.
Negatively reflecting upon the personality of a candidate for President of the United States.
The congressman is not engaged in any personality or in any, has questioned anything about anyone at this point. I'm not sure where you're going, Congressman. Congressman is recognized.
Thank you.
Mr.
Thank
Chairman.
you.
Happy to answer your
Mr.
question.
Mr. Chairman.
Can I answer your question?
Thank you.
Mr. Chairman, I'd like to
Not at all
continue with the
unusual.
point of order, please.
What is your point of order?
Mr. Chairman, we have been admonished in this committee that we should not have words that negatively reflect upon persons who are running for president. This would include Mr. Trump as well as the current president.
Didn't the ranking member do a whole opening monologue
Chairman,
diatribe about some ridiculous
Would you
Project
please rule my
2025?
friend out of order, Mr. Chairman, until you rule?
Mr. Lawler has not admonished or said anything negative about the president at all. I just listened to his comments, so I'm going to recognize the congressman again. Mr. Lawler.
I'm waiting for it to get out of control at some point. The House of Reps, you know it's going to get out of control. It has to. It's the fucking House of Reps.
We're an independent agency. The administration has been very respectful of the Fed and not, wanting to try to influence and things like that. And I don't find it at all unusual. I've been at the Fed for, this is my 13th year, and I think there can go by long periods of time when the Fed chair doesn't meet with the president, and that's totally fine.
Okay. Since you
Come on, Tesla, you can do it.
the Fed, and I know you pride yourself in that independence, do you acknowledge, or do members of the FOMC acknowledge, that a rate cut in September could be viewed as political just 30 to 60 days before an election?
So our undertaking is to make decisions when and as they need to be made based on the data, the incoming data, the evolving outlook, and the balance of risks, and not in consideration of other factors, and that would include political factors. We will make those decisions. We have a long history of doing that, including during election years, and that is the undertaking we'll make. Anything we do will be very well grounded, and you know, it's just not appropriate for us to get into the business of thinking about election cycles at all, one way or the other.
So inflation year over year from May 2024 to from May 2023 to May 2024 is up 3.3%. Overall inflation. Energy inflation is up 3.7%. Food inflation up 2.1%. With inflation continuing to be a challenge, do you see a rate cut as a possibility at this moment?
So I think you're quoting the CPI numbers, which are operating at an unusually high gap to the PCE. For 25 years, the Fed has focused on personal consumption expenditures inflation, PCE inflation. And usually the gap to CPI is only 25 or 30 basis points. It's more now. So the PCE numbers, the current PCE numbers are 2.6% for headline, 2.6% for core. And we've articulated for a good long period.
They're picking up on FinTwit right now on Powell not meeting with Biden, by the way.
Test is that we want to be...
Here we go, baby. Here goes the squeeze, baby. 558.32 right now.
At 2%.
Market's squeezing right now. Boom, baby. 558.35 right now.
As I said earlier, that we are on a downward path. I think it's pretty clear that, but we have not said...
I don't know. Is that clear enough for you up here? Does that work for you?
Committee makes.
Are you not entertained?
CPI,
is that a burr for you out there?
Purchasing a home, the price of a mortgage, the cost of a mortgage has been...
Put on FinTwit and tell them.
For instance, where I represent, the average mortgage cost is up $1,000 a month. Over 12.
Here, I'll make a post on FinTwit.
In the time I have remaining...
Say hello on FinTwit.
In your meetings with the president, have you noticed any mental or cognitive decline?
No.
Thank you. I yield back.
Point of order.
Gentleman's time has expired. Gentleman from
Point of order,
Texas.
Mr. Chairman.
Point of order.
Yes, Mr. Chairman. The gentleman just mentioned the president's cognitive capacity, and I believe this to be a violation of the rules with relationship to decorum, and that this goes into a personality of a president.
Gentleman's time had expired.
0%.
For your 5 minutes, Mr. Green.
My point of order is to be made immediately after the gentleman's statement, and that's what I'm doing.
Woo!
I would remind members not to engage in personalities and comments about the president.
But, Mr. Chairman, if I may, with my point of order, I demand that the gentleman's words be taken down insofar as they negatively reflect upon a candidate for president of the United States.
Watch out for a pullback to retest the 1-minute trigger. Oh, yeah, baby. R3 on SPOOs. Trading 558.35 right now.
Gentleman from New York, Mr. Lawler, is recognized.
I'll happily withdraw my words, though everybody understood them.
Mr. Chairman.
Gentleman withdraws his comments.
I find
Mr. Green,
his
you're recognized.
final, if I may, Mr. Chairman.
No, we're not even there yet, Robert. It's going to get wild in here. They bring out the gang and everybody. It's going to get crazy.
And brings us right back to where we were before he made his attempt to withdraw. Now, if he's willing to withdraw appropriately, I will not demand. But until he does so, I demand that his words be taken down.
The gentleman's time had expired.
Mr. Chairman, the time does not expire on the request that I've made, the point of order. The time didn't expire on that.
I recognize Mr.
Let
Lawler.
the record reflect, I withdraw my words.
Thank you, Mr. Chairman.
Gentleman from Texas, Mr. Green, is now recognized for his 5 minutes.
Thank you, Mr. Chairman, and I thank the chair for appearing today. I hope things are going well with you. I know that this is a difficult time for you. And quite frankly, you've been in a difficult time for a number of years, and you've proved to be quite resilient and quite effective at what you do. So I thank you for what you're doing.
IWM trying to break out as well. Just had a new high on IWM just a few moments ago as well. It traded 202.75.
Report after the failure of Silicon.
I wonder if we can trade that 204 today. That'd be really sweet if we could trade 204 in IWM.
How important is that post-failure lessons report?
It's important. We wanted to learn the right lessons and make the right changes to both our rules, but also really to our supervisory practices more than anything else, and we're doing that.
And
full island would flip over.
You believe to be important after each incident, such as what happened with Silicon. And
dude, the House of Reps is fucking crazy. They'll take anybody in the House of Reps.
We try to learn from events.
Thank you. Let me go on to the next question, which has to do with the banks that are small. Let's talk about those that are less than $5 billion in total assets, yet they are subject to the special assessments of the FDIC once there is a systemic risk exception triggered.
So we're trading 77.48 on HYG right now. Look for like 77.51 maybe.
Statutory matter, or it's a matter of
like 77.53, 55 somewhere in there in HYG.
Any input into really.
Okay. Let's do this next, please, as time runs out. Would you kindly finish your commentary? You were giving a comment.
The high was 77.49.
Pandemic and how the pandemic helped to generate this inflation, and you were stopped in the middle of your comment. So would you go back through that, please, so that the public at large can get a better understanding of what actually happened with the pandemic and inflation?
Back testing the previous high from the 8th of July.
I think the more years that pass, the clearer we can see what was happening. But I think you look back now, and you're seeing
SPOO's now cranking higher, looking to trade R4, R5.
A lot to support economic activity during the pandemic, and on the theory that there could be really serious economic bad times ahead. Then the economy reopened, and it reopened very, very strongly. And I think in hindsight you can see that there was just a lot of support for demand from fiscal policy, from monetary policy, and that supply was constrained. You couldn't make cars. Supply chains were tangled up. There were shortages of so many.
What up, winky face?
What happened was we got a burst of inflation, and the United States got a big burst of inflation, really more from demand than other countries did. Then you have the war in Ukraine.
Hack the planet, you're checking the tide right now? What's it saying, brother?
Europe than to us.
Balls to the walls calls?
You wind up with a situation where you've just got a lot of inflation, and my thinking at the time was it's going to take restrictive monetary policy, and it's going to take time for the supply side and demand side distortions from the pandemic to unwind. 2023 was the year when that kind of happened.
SPOO's now trading oh, baby! Trading 558.80. 558.82.
Large amount last year, while growth remained quite strong. So this was the year that kind of proved that thesis. Now we're in 2024, and it's a question of finishing the job on inflation, which we're committed to do, while also keeping a strong labor market.
559 C's now trading 56 cents right now. 56 cents.
We know more now.
That's a 500% fucking trade right there.
Go away.
500% trade right there.
Demand, as we had kind of expected.
And two of the most significant factors were the pandemic and the war with Ukraine. Is that correct?
Yes, and it's also the fact that the pandemic summoned forth a great fiscal and monetary response, and that contributed to really strong activity and to inflation, without question.
As soon as that call buying drops off, JBJ, you know what they do too, right? They fucking sell right into them.
I know that it's a counterfactual, but would we have possibly gone into a depression?
That's what we thought at the time, and I think
why doesn't it force MMs to buy lots of puts too? So if the flow is coming in slow,
and then we didn't know
they will buy puts, or not puts, but they will hedge on the downside. They can sell shares. There's all kinds of. It depends on what they do, but if there's too much call buying, they're forced to chase. Same thing with puts on the downside and real money selling as well. They will amplify those downside moves, having to chase. But once it slows, they will then take the opposite side of the trade and hedge by selling future, or not. It's not always futures. Think like cash market. They will then flip and turn into sellers if it's bullish, or buyers if it's bearish.
From my perspective, the FDIC is in a period of uncertainty.
Yeah, they're chasing right now. They're amplifying the upside move right now.
And the replacement is awaiting Senate confirmation hearings. And at the OCC, we have an acting comptroller who has not been yet confirmed by the Senate.
But once it slows, they'll then delta hedge the other way. They'll then dump and sell into that. So if you're watching the call flow come in and it's ramping, they're forced to chase. But the moment you see it plateau, you will see dealers immediately begin dumping into that.
It's pretty uncertain, but I'll give it a shot. And I'll say again, that these discussions we've been having with the other two agencies have been very constructive, and we very much want that to continue. We've got pretty good agreement on the substance, and now it's about the process. So, a baseline might be that we agree on a reproposal of some kind that gives the public a chance to see these changes and react to them and write comment letters, and so that could happen. We take us a while to write it up, and then we'd put it out for 60 days. I think that couldn't happen probably until part of the way through the fall. Then there would be, let's say, 60 days of comment, and we get the comments. We'd have to then evaluate the comments and think carefully about them. Having done that, we'd have to write up the final version, and that would take some time. So that probably puts you, my guess is it puts you well into next year.
Yeah, exactly, Uncle JBJ.
These are rules that the banks are going to have to live with for a long time, and we need to get them right. It's not something we should be hurrying on. We need to take our time and get it right.
SPY trading up into R4 and 5. This, if you guys follow Bob Kendall, this would be your STX sell moment up here.
Good things in there.
I think we break above and elite. I think we get close to this right here.
The 2024 stress test focused on commercial real estate risk, which is an area we've all been paying.
Trading 558.98.
Do you agree that the results showed the financial system to be strong?
Yes, I do.
The folks back home are always very concerned about inflation and the period we've gone through lately, not just the basic necessities that continue to explode, but the cost of doing business and all those other issues. The fact is the inflation's still running above the Fed's 2% target, and we've seen significant price increases in food and energy over recent years. As you and I have discussed before, I started out as a young farmer in 1977 in that inflationary period during the Carter years. Then when we went through Chairman Volcker's rather, shall we say, dramatic tightening of monetary policy. And I still remember paying 17% to borrow cow feed money when I was a student in college. I was well collateralized, but that was a bargain in the fact that the cap was accessible. So I'm particularly sensitive, being a part of that generation, that if inflation isn't effectively dealt with, it can spiral out of control. Could you expand for a little bit more about your approach in dealing with inflation in a way that doesn't repeat the mistakes of the past. I just want to avoid the mistakes of the past.
So I think really one of the big lessons coming out of the high inflation of the 70s, which we both lived through, is that it really is on the central bank to be on the case and do the job and make sure that it is fully, well and truly done. And that really that is up to the central bank. And believe it or not, that wasn't fully accepted, or that wasn't necessarily the thinking. And also, the independence of central banks was much less respected back then. All the more credit to Paul Volcker for having the courage to do it. So we now, that is an internalized lesson for people in central banking these days. We do understand that. We are committed to bringing inflation sustainably down to 2%.
One last question in my remaining seconds.
Yeah, keep watching that zero-date flow there, Hack the Planet. Watch as we get up there.
Be there the day after the election. Still be the same people carefully watching the Fed's responsibilities, correct?
This is my 4th presidential election at the Fed, and I can tell you...
It's a nice spread, Uncle JBJ.
...your jobs.
Gentleman's time has expired, and I'll go to the gentleman from California, Mr. Sherman.
Coming out of COVID, everyone said a soft landing was impossible and a recession was inevitable. I want to commend you and the administration. It looks like we've seen a soft landing. We've continued to have historically low unemployment rates and historically low unemployment rates for people of color. And in the last 18 months, we've seen a 4.7-point decline in the inflation rate as measured by the Consumer Price Index. Is that the greatest decline, or I realize you may not have done the calculations, but I did the calculations. It's the greatest decline that we've seen in an 18-month period this century. Do you have any reason to disagree with that?
I hope that's true, and I'm glad you said it, because it's certainly a lot. I can't validate the statement, though.
I'm sure you have a fine staff that will do the calculation, and hopefully we'll...
A little bit of roll on Spoos here to check the 1-minute trigger.
Yellen was here yesterday. I addressed an issue that both...
1-minute trigger sitting right on R3.
I've always opposed Operation Choke Point, where for political reasons, banks...
You would want to begin to take some off here. If you want to leave some runners on, you can, but just be we're very close, guys. We are so fucking close up here.
Giving anybody who's denied a bank account or even a loan a way to claim that that was for political reasons, and it opens up the possibility that banks would be pressured by those laws to release their suspicious activity reports, which I understand are supposed to be private. And so I hope you'll work with the Secretary in
sell into the chubby chasers.
Of Florida.
No offense, I shouldn't have said that. Sorry.
Adversely affect our ability to deal with suspicious financial circumstances. You have a dual mandate. I think you have a third mandate.
I shouldn't have said that.
Because the budget deficit.
Yeah, if you're like if you've been long all day long, if you've followed this whole entire trade down here all the way up, you can leave a little bit on if you want for something up here, but it's getting close. It's getting like to that point where
dramatically affect the budget.
You take your money and run, kind of a thing.
Is the biggest borrower in the history of the world.
And then you're looking for, like this is the trade right here, right?
And at times.
And then as we come up here, you're looking to position yourself. You know what you're looking for, right? You're like the guy up here.
Mandates imply that you at least have to look at how your policies affect the budget.
You're going to be the guy over here, the gal or whatever. You're up here. You got your little nose up here. You guys know who this is? This is Kilroy. Any of you guys that are ex-military know who this is.
2 other regulators.
This is Kilroy up here.
Recent assessment by Price Waterhouse Coopers.
He's waiting for you as we come up.
Proposal would lead to higher borrowing costs for small and medium-sized businesses. And in every way, Basel III seemed to be slanted toward telling the banks, go and put your money on Wall Street, where you just are going to have interest rate risk. And
they still draw it. They still draw it. To this day, they still. Well, I don't know. Back when I was in, they still drew it.
If you had a fair system, you would mark to market all bonds, not just those that are quote.
Yeah, OG meme definitely.
I hope also
Definitely OG.
do
You call him Chad? Right on, right on.
treat energy tax credits, green energy tax credits, the same way you currently deal with low-income housing tax credits, that you keep in mind the effect on the securities industry, particularly municipal bonds, that you don't...
They still doing it today? Right on. They did it in Iraq.
Say that if it's a publicly traded company, it counts only 65%, and that you look at mortgage servicing rights as an asset, and that you fully account for the private mortgage insurance. I know you give some credit for that, but frankly, a 80% loan to value and a 90% loan to value that has private mortgage insurance pretty much expose the bank to the same risk. I'll ask you one question about the debit cards. You're planning to provide only, I believe, a 0.3 cents additional charge for dealing with fraud prevention. Fraud is just skyrocketed. Would the Fed consider increasing the fraud prevention adjustment before finalizing its proposal?
And that's part of the comments that we've received on the interchange rule, and it's something that's a concern that we're aware of, and we'll take that into consideration.
I yield back.
Gentleman yields back, and now the gentleman from the great state of Missouri, Congressman Lukemeyer, is now recognized for 5 minutes.
Thank you.
Thanks, Bob. I appreciate that. Can you guys hit the like button?
Appreciate the thoughtful gentleman.
Appreciate that, Bob.
His remarks on some of the stuff, but I'm kind of curious how Chairman Powell, he indicated you've got a third implied duty here to actually work with the budget. I really thought that only the Congress had the ability to impact the budget. We're the ones, not even the legislative, not the executive branch, not the judicial branch, the legislative branch.
Career Low is in the Discord right now. He's a great Gamma guy, so if you want to ask him any questions about where we are.
I don't think you want our job on top of what you got. No.
Career Low is a G, man. If you guys don't know Career Low, he's in the Discord dropping some gangster stuff right now about the top coming up.
Around the country have started to pass banking laws that infringe on federal banking laws.
Thanks, Career Low.
Have you seen this? Are you aware of it? You have thoughts on it? Can you tell me what your thoughts may be?
Honestly, I have not seen that, and it wouldn't necessarily come across my desk. It might come across Vice Chair Barr's desk more.
Okay, well, I was just concerned because, I mean, you handle lots of banking rules and regulations, and so we don't want to have the state usurp the duties and responsibilities.
I fucking love IONQ, Mr. Talking Monkey.
Ability to
love that fucking ticker.
These are preemption issues.
Yes, preemption issues is what it's all about.
Yeah, that's a big deal for the OCC issue.
Yeah, so I was just curious if you'd run across any of that, had any thoughts on it. Okay. One of the things I just got done coming out of a committee hearing with small business a while ago, and there was a home builder individual there, a contractor, and he was talking about the cost of regulations. You know, basically $1,000 increase in costs about 100,000 homes across the country not being able to be purchased because they're no longer affordable. And so it brings up the point with regards to cost of regulations. You know, do you fall under the Administrative Procedures Act?
Yes.
So part of that act is to determine the cost of a regulation, correct? Or the cost of compliance?
I don't actually know the answer to that, but I know we follow carefully the APA.
But I mean, to me, that's a really important.
Thanks, Kenny Tran. Appreciate it, brother.
You look at rules and regulations to ensure.
Say hello in the Discord, man.
It's not going to be more than the economic benefit of what you're doing. So, I mean, this has to be part of your analysis.
Appreciate the support, my brother.
Certainly, we try to make our rules as efficient as possible and as
same to you, my man,
to get the job done.
One of the concerns we have is with, and I think the gentleman talked about the credit card situation here, Reg II.
Yeah, say hi in the Discord. Introduce yourself.
With regards to the Chevron doctrine basically being rescinded, how is that going to affect your rulemaking with regards to some of the more recent ones like Reg II fees and stuff?
Go right to the general chat.
Also rule. Are all those things going to be impacted by this at all?
I mean, it doesn't change our assignment under.
Check out some of those rooms too, bro. We got some cool tools in there.
So
Introduce yourself, ask people to show you around and stuff so you can see what we got going on in there. It's pretty cool.
with the law, we're very law-abiding.
Make sure you meet like John L. and David AMS, Mr. Talking Monkey, Bink Yellow's guys are in there.
Things like that.
Addie's in there.
Question for the courts. I mean, the courts will be asking the same question.
Oh, we calling double tops now?
Intent for that law, and that's.
I'm just fucking with you, Bob.
But what they're saying is
triple top on NQ, baby.
I think again these
maybe David AMS can pop into the stream and
country last week
and talk about NQ in the chat. Hold on here, I'll ask him.
Be briefed on any of that, so I'm kind of speculating here.
Okay. One last question. I asked this question yesterday of Secretary Yellen. What keeps you up at night? What is your biggest concern with regards to your responsibilities, with regards to the economy, in regards to the banking system? What is your biggest concern?
So for a long time, it's been cyber, and the reason is, we know about credit crises and things like that, and financial crises, but we haven't really had something where there's a successful cyber attack on a major financial institution or financial market utility. That's always been my answer. I would actually say now the number one thing that just
what up, AJ?
Awake at night is the balance that I talked about before, which is we're at the critical time of inflation's coming down, the labor market is cooling, and we want to get it right for the benefit of the.
I'm going to see if we can get David AMS to maybe see if he can jump in the chat on YouTube or Twitch.
Decisions that give that the best chance to happen. That is the thing that I think about in the wee hours.
We've talked about this before too. You really got a tough job from the standpoint. You're trying to drive down demand, and administration by spending all this money is trying to drive it up. It puts you in a really big box, doesn't it? Thank you, Mr. Chair. I yield back.
Gentleman yields back. Now we have the gentleman from the great state of Illinois, Congressman Foster, is now recognized for 5 minutes.
Thank you, Mr. Chairman and Chair Powell. I guess when things are going well, it's as they currently are, it's all of our duties to look around the curve and see it, the risks that keep you up at night. So I appreciate Representative Luetkemeier's question. Now, over the last few years, there have been increasing interest in synthetic risk transfers, SRTs, or credit-linked notes, which are often used by U.S. banks to shift risk away from the banking system and as a means of managing regulatory capital.
Let me look at NQ right now. Hold on.
Concerned by recent reports that the buyers of some of these SRTs
we'll check out NQ together.
In them using bank-provided leverage.
If you trade NQ, I'll give you. I got you. Hold on a second here.
Right back into the banking system. Frankly, when I read about this, it triggered my PTSD from the AIT situation with credit default swaps during the financial crisis.
So here's NQ, right? This is bottom chart. This is NQ.
In approving SRTs, in fact, issued guidance to U.S. banks regarding their issuance last fall. Could you say a little bit about the ways that these investments can be a safe way for banks to offload risk, and in what ways they could become a dangerous source of contagion?
Sure. So there could be a breakdown in a couple of places in the chain, as you're obviously aware. One is just that the risk isn't really well and fully transferred to the buyer. And that's just the first step is that risk going away off the balance sheet in an unconditional kind of a way, in a way that the bank understands. And that's a good thing if banks are able to do that.
Not even.
Then the question is it coming back through the back door with financing? And so we're well aware of that. Banks do tend to bring these things to us, and we look at them carefully. We understand some of the ways it can go wrong. And but at the end of the day, if it works to reduce the risk on a bank's balance sheet, that's something we should be okay with.
Yeah, but there's if you could just say what sort of insight and control does the Federal Reserve have into all the connections, particularly when the connection may go through businesses that you do not have direct, non-bank entities that you may not have direct oversight over?
My understanding is that this is a very active dialogue we're having with banks. They want to know how this is going to be treated. They don't want to do something that is going to come back on them or that we will deny the treatment on. So I think there's a pretty transparent set of exchanges around how these things work. We're very clear on what we think our requirements are. This is what I'm told, and so we saw what went wrong the last time. I think no one wants to repeat that, including the banks. Mm-hmm. So,
well, if you conclude, and as you're actively studying it, that you need more visibility into certain areas of particularly non-bank things that may be part of the chain of contagion, please let us know, because it's our job to avoid the next crisis. I think it's my personal goal to die before we have another financial crisis, and then I'll be doing my job well. Now, I understand also the value of SRTs in the U.S. are relatively small, and the bulk of these are offshore. Is the growth of this practice internationally something you're watching closely, and is there anything that might provide a sign of early trouble in terms of international contagion that might creep back in?
So I haven't heard that flavor of it, but I'll check on that and let you know.
Do you remember with AIG, the real problem with AIG falling into bankruptcy is that it would immediately put a bazillion of the European banks into violation of their capital requirements, which was major contagion.
Yeah.
Do you have a sense of the time scale for the liquidity proposal at this point?
I think, the main thing is we have this very large, important project on Basel III, and I think we're pretty close to being able to move that out into the public view again. And I think once we've done that, we can move on to the other things that are there. And one of them is the liquidity proposals. And I don't want to put a specific time frame on it, but we're certainly working toward that sometime later this year, I would think.
Later this year, we'll have the first view of that.
I would think so.
Okay. I understand it's still under negotiation between agencies, but can you say directionally the Basel III, the new amended proposal, is it just going to be in the direction of sort of weakening it, watering things down toward the current capital requirements, or will there be areas where it's actually strengthening them?
Oh, no, there will be a capital requirement in it that is consistent with Basel III and a capital increase that's consistent with Basel.
My question is, if you look at what the original proposal was compared to what you intend to put out, are you moving in the direction of more toward the current situation? And if so, if you can just interpolate, it seems like if you have comments on the proposal you put out, you understand comments on the status quo, and you're somewhere between that, then right. Maybe you don't need another set of comments because everything that can be said has been said.
It's a little more complicated than that, but that's essentially right. You have current level
something like that right there,
which is a lot of gold plating, and then you have where it's shaking out, and that's. But it's
so I just was wondering why you need more comments.
There are many different pieces. The answer is there are many, many different pieces of that.
Thank you, and I'm over time.
Gentleman's time is up. Next, the gentlewoman from the great state of Indiana, Congresswoman Houchin, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Thank you to the ranking member, and thank you, Chairman Powell, for coming to speak with us today. It's been a long day, so thank you for being here this entire time. One of the greatest strengths of our financial services industry is the diversity of our banking system. I know firsthand how important it is for us to maintain options and choice for Americans, whether it's somebody looking to open a savings account or take out a loan.
Oh, did I lose the stream?
Increasingly, however, we have seen consolidation in the banking industry.
Did I lose the stream? I might have lost it. Does the stream down or no?
One of the reasons for this is an excessive regulatory burden that many of the smaller banks face.
No, stream's not down? Okay, I thought I lost the stream there for a minute.
Proposals and adjustments to liquidity
all right, cool.
requirements or to things like Basel.
There's NQ for you right there.
Outdated technological capabilities at the agencies.
No, let me just take a peek and make. Yeah, I get that right. There's
Chairman Powell, could you just talk about what steps the Fed is taking to upgrade technology and procurement procedures?
See, I just put the what do you call it? It's up there.
To ensure that
pivots
the banks that you regulate don't face unnecessary burdens.
So to your point,
right up there,
the number of banks in the country has been coming down for 40 years.
There's NQ.
There's consolidation going on for a whole range of reasons, and we're not trying to foster that. We're not trying to push that, and we're aware that high fixed costs from regulation may be one of the reasons for that. So we do try to keep that in mind.
The stream is down. The stream is down. If you are losing the stream at all right now, it looks like I might have lost the stream for a minute.
Specific things
just reset your browser. It looks like it's back up now.
To the specific
I think I might have lost the stream for some people.
That would be
Fair
great.
question.
That would be great. And just for reference, I was proud earlier this year to
Twitch is fine there. Thanks, Winky. I appreciate it.
Technology to uphold regulatory effectiveness in supervision.
Good now. Okay.
Or the Futures Act.
Looks like I lost it on my end there for a minute.
Our federal bank regulators to conduct an assessment.
Thanks, Hilltone.
To ensure that the technology and training systems they are using will improve,
Spoo's now tagging R4.
especially on our smaller financial institutions.
I want to talk to you guys about this red box, okay? On an intraday basis, when we trade R4 and R5, it's a zone. It's not one. It's not like, hey, we're gonna hit R4 then hit R5. It's just a zone when you get up here, okay? When you start hitting these 2 sigma moves on a daily basis, it's more of an area. So just be careful as we trade up here. It gets kind of dangerous. It gets really slippery right in this area here.
6% of that negative feedback coming from outside the banking sector. Many of my colleagues here today have highlighted their own concerns with Basel III. Given the pressure that Americans are already facing with inflation and increased interest rates and housing market stalls, I would urge that you take a good long look at the cumulative effect of this rule in context with the broader economy, our small and mid-sized banks, not just the larger financial institutions. Will a meaningful revamp include consideration of the hardships that overregulations cause for smaller financial institutions like those that are essential to rural communities like mine in southern Indiana?
So I got a few thoughts here on CPI. So I think that the end of this hearing could be the top of the market. I was thinking that it could happen in CPI, like they run us up and into the close. We get the CPI report. It's a sell the news kind of an event.
Leading to further consolidation in the banking sector.
Now, I don't think we're at the top. When I say we're at the top, this is a top for a pullback to go even higher. So we're going higher. But if you're looking for a dip to buy, you're likely going to get one from where we are. Right? You're going to have a pullback. I gave Mr. Talking Monkey pinned what I think the intraday, intra-week top is. What to be looking for a dip to buy to actually get above 560 and continue higher.
In many communities,
we don't have a lot of time left. You got to understand that. We got time left, but we want to be at 570 by the time the market actually rolls over.
Also don't want to stand.
Now, even if we have range expansion, sideways trade, that kind of stuff, we need to get to 5,700. So we got a long way to go.
Is really the envy of the world. We need to make sure that small and growing institutions have the tools they need to innovate without any undue.
We're not at mid-July yet. It's only the 10th, right? We got 5 more sessions left minimum.
Mr. Chairman, and I yield.
Minimum 5 more sessions left. We could have some more sessions in there, the 15th, 17th, 19th, roughly in that area.
From Illinois, Mr. Caston is now recognized for 5 minutes.
Thank you, Mr. Chairman. You looked much better and well coiffed when I saw you.
Ooh, well coiffed.
Nice to see you again, Chair Powell. Just briefly on the Basel III reforms, you and I have talked about the tax equity provisions and the fact that clean energy tax equity got a 4 times risk weighting relative to other tax equity in the last version. If there is a reproposal, can you give us any visibility on whether clean energy tax equity will go back to the 100% risk weighting that it's historically had?
So David just gave
out today because
David just gave an expectation on NQ for us in the Discord.
What the specifics
are. So David just gave a whole thing on it.
Can come out.
So if you want to see what his thank you very much, David.
The sooner even something temporary, because there are a lot of banks that want to participate that are I think more cautious than they need to be right now. Appreciate that. In 2021, I think you were a part of the FSOC report on climate-related financial risk.
He has an actual thesis on when the market tops as well. So if you're a tech trader,
what again?
If you're trading tech, right? David's got a complete thesis for when the top happens, the actual top in the marketplace. If you're looking for like the July top, he's got that thesis inside of our Discord right now. A link to it inside the general Discord.
To make disclosures of
I'm not going to say anything public, David. It's too. You do too much work, man. I'm not saying none of that shit public on the stream. So
to limit implementation of the Basel Committee's climate risk management principles to remove financed emissions, and number 3, that the U.S., unlike other countries, did not propose that any of its banks be subject to an analysis of how they incorporated climate in their credit risk assessments. Have any representatives from your agency attempted to weaken the Basel Committee's work on
Same poke.
including by expressing concern about the Basel Committee overstepping?
I'm with you, David, on that too. What you just said in the Discord, I'm with you on that too, brother.
I guess
I think there's one more.
Fed does not have a mandate of fostering an energy transition or dealing with climate change. Some of the Northern European banks feel that they do. They actually have that. It's in their mandate, either explicitly or implicitly, but we don't.
But if we agree that climate change is an emerging threat to the stability of the banking system, are you saying you're not acting on it because you don't have the authority, or you're not acting on it because you disagree with what you said in 2021?
When you say it's and I agree, there's an emerging threat to financial stability.
What up, Kenny?
I think looking to the banking agencies to lead.
I see you now, Kenny. I see you in there.
Big mistake. I think it's a job for elected people. We don't have that mandate in the United States. We can do a very limited thing, which is make sure that the institutions we supervise are aware of and can manage those risks. We are not going to be the ones who are forcing them to adopt plans to transition and that kind of thing. That's just not going to happen through the banking agencies without a law change.
So then if it is the view of the rest of the world that climate change is a financial risk and we're going to regulate our banks, is it the view of the Fed that the U.S. G-SIBs should not be required to report?
Again, we're not going to be climate policymakers at the Fed. We are not going to do that. We don't have that mandate. A key to our independence is that we stick to the
Tony the Trigger, career low. Check out what Tony the Trigger's putting in the Discord right now.
Okay, we're going to lead the fight on climate. It just we do. If we're going to do things like that, we should be part of the Treasury Department.
Well, so to be clear, no one's under the illusions that you're the EPA. But I spoke with Janet Yellen about this yesterday. We have multiple states where the insurance industry is collapsing. Something like, as you know well, something like a third to 40% of U.S. wealth is tied up in real estate. And okay,
Dude, our fucking Discord kicks ass, dude.
But in the 2008 financial crisis, we had risk that moved out of the G-SIBs onto other entities' balance sheets, and we said, well, we're not responsible because it's an insurance company. Well, we've fixed that. You do now have a mandate if there's systemic risk in the system. And so the question is, if we know that risk...
JC, thanks for dropping that intel.
Is the FSOC monitoring that risk, or is the FSOC's view that if I'm not allowed to look at it, I'm not going to look at it, and it's somebody else's problem?
Our fucking stream, our community kicks ass, dude.
We're going to be accountable if that risk comes when those chickens come home to roost.
Well, the banks know their risks pretty well, and you see the banks and the insurance companies pulling back from lending in coastal areas and things like that.
No, I agree, but where are they offloading that risk to? If they're we've seen them putting it onto Fannie and Freddie. We've seen...
Word of warning here, word of warning. We've got a 10-year note auction at 1 p.m. in the next 5 minutes.
Yield back.
Next, the gentlewoman from the great state of Missouri, Congressman Wagner, is now recognized for 5 minutes.
I thank you, Mr. Chairman, and in keeping with baseball analogies here, I think I'm batting cleanup. Chairman Powell, welcome in this afternoon to you. Chair Powell, in your testimony, you stated that, and I quote, longer-term inflation expectations appear to remain well anchored. Could you please expand on that for us?
Sure. So in our thinking, and the thinking of economists and central bankers, what the public expects about inflation is really important, because if you expect there to be low inflation, then it probably will be low, because you're going to make sure that's true in your daily decisions. So we measure them. We survey individuals.
Yeah, you want to see that TNX? I got you, brother.
And market participants.
We'll leave it there right now, bro.
You can also.
I'm gonna pause this so it stays on TNX.
Will be through various instruments in the markets, and all of those suggest that people expect inflation to be right around 2% over the longer term, and that's been very stable right through this episode.
When you say longer term, sir, how many years would you...
I've got the new squawker on now.
5 years, is there any...
So we look at short and medium term inflation expectations too, and they tend to be more volatile because when inflation's high,
Fed bids for $6.3 billion.
5-year, which is between year 5 and year 10. That's a standard way to look, or longer term than that. If you just ask people in surveys over the longer term, you maybe don't specify.
Previous on the 10-year note auction was 4.438%.
Inflation will go back.
Check out Andy Constant on Twitter.
There has been some reporting.
He'll give you a letter grade.
Shrinkflation. And for our viewers, I'll say this is when you pay the same price for something as yesterday, but get less of it than before. Kind of like my bag of potato chips.
Bag of dicks, Wiss Wagner, bag of dicks.
Direct attention away from the pain of runaway inflation that we've experienced, and instead blame producers who themselves face rising costs, pressures. Yet, I haven't seen any mention of shrinkflation as an inflation cause in any recent monetary policy report. Moreover, a Bureau of Labor Statistics article last year looked at shrinkflation and concluded that, and I quote again,
SPOO's pumping right now, right through our 4R5. Coming into PT2 at the moment right now.
Been a significant casual
559C trading 82 cents.
That has imposed maybe greater
82 cents.
And households.
I'd have to say no. I mean, I would say it this way, packaging in the U.S. on food products and that kind of thing, it's going to disclose.
Trading 8 cents this morning on a low, 8 cents on.
Consumers can make their choice to buy.
Jesus Christ.
559s,
baby.
I'll be leading with the bid to cover ratio.
I think
if you get the pre-sale win issued yield out at the top of the hour, auction results will follow a couple of minutes after this.
Is exponentially higher.
It may reflect costs on the part of the producer. It probably does, but that doesn't mean it's a cause of inflation as such.
Okay, thank you. So, switching topics, the Federal Reserve has produced volumes of research over the last decade, highlighting the negative consequences
I don't think that
debit
shrinkflation is a
interchange
major
fee cap.
inflation driver.
Some of the economists who produced that research have even worked on this.
Do you want to
proposed
stay up
rule,
to date with the
Reg
latest
II?
and be on the bleeding
Chair
edge
Powell,
of news for
was
non-farm
the
payrolls?
previous
Then
Federal
sign up
Reserve
today and get our
research
special offer of
demonstrating
Financial Use Pro
Regulation
for a
II's
year's worth of our service for the price of
impacts
1
to
month.
low-cost
David AMS just dropped expectations for IWM inside the Discord chat. So if you're looking for RUT, IWM, smalls, expectations.
286% ahead of this $39 billion auction.
Detrimental impacts. Please.
I am not entirely sure what research you're referring to. I'll be happy to follow up with you on that.
Yeah, I hope you are, because I know we're having this discussion about the interchange fee caps and Reg II, and I'm concerned about going forward on that when much of the research that we have seen from the Fed has been pretty steady over the last number of years, says it has quite detrimental impacts. So please, to low-cost checking accounts. So if you wouldn't mind, I would love to get some answers on that. And also, why hasn't the Fed taken into action the higher fraud costs that debit card issuers will incur as a result of the new dual routing mandate for card not present transactions? I'm over my time. If you could also answer in writing, I would be ever so grateful. I yield back, sir.
Lady yields back, and I would like to thank Chairman Powell for his testimony today. I know you got to get out of here, and without objection, all members will have 5 legislative days to submit additional written.
Well, they're wrapping this up right as the auction is happening.
Be forwarded to the witnesses for his response, and I ask you, Chairman Powell, to please respond no later than August 30th, 2024. With that in mind, this hearing is adjourned.
Whew. Be careful out there, boys and girls. Somebody check the call flow and see if it's ending right now. Be very careful here.
Testimony before the House panel.
All right, we're going to switch right over here. We're going to watch book map now.
2 spot 58, 2 spot 58, 10-year high yield, 4 spot 276%, 4 spot 276%. So the US sells $39 billion in 10-year notes and awards 1 spot 16% of bids at high. Primary dealers take 11.53%, direct 20.86%, and indirect 67.61%.
Oh God, it just wants to go, doesn't it? Look at it.
Dollar after that release.
It just wants to fucking beast mode, doesn't it? Look at it. $56.70 on ES. Andy said A+. That order book looks fake. Spoo's now cranking, blasting up, trading 559.47. Fucking A, baby. I shouldn't be saying that. Spoo's now moving. SPX, we're trading 56.16. Holy shit. We have a gamma bar at 56.50. 56.50 on SPX. Cranking right now. Holy fuck. SPX just mooning right now. R5 at 559.79. 559.79. TNX getting blooded right now, trading 4.279. Look at fucking Q's right now, just monstering through right here. Boom, Q's trading R2. Q's R3 is 503.53.
So US Treasury 10-year yield extends the fall after the 10-year note auction, last down 2 basis points at 4.28%.
Monster fucking moves here. We got to play some music, don't we? We got to play some fucking music, don't we? We got it. We got to do it, don't we? We got to do it. We got to fucking do it. Let's go into the Discord music channel and check that. Check out what's going on the Discord music channel over here. Make my ears bleed, baby. On here, what are we doing? Save that, yes. On here. is R3 on the weekly here. Just want to show you guys this really quick. Tesla's still building here. Nothing really going on so far. They did almost got the new high there. They got one quick pump here. One quick pump here in Tesla. Go back to the Gen chat. How do I get back to the Gen chat again? Dude, I get lost in this fucking place. There we go, right there. Bam. All right, I'm back in the general chat again. I'm back in there with you. I don't think that the role I don't think that the role here is going to be anything but a chance to buy a dip. Like we're going to 5,700. We're gonna get close to it, I think. Like I think we get close to it sooner than you think. So whatever this role is, it's just an opportunity to buy a dip. So I guess it's your pick your poison kind of a thing on Tesla. You can either take the money now or stick with it. It's like a pick your poison kind of a thing. Do you want to it's pick your poison? You either just hold while we pull back to go higher, or you take the money and then jump back in again. $550. I think it's going a little bit lower on the pullback. I think you have the right put spread on, by the way, JBJ. I think you have almost perfect put spread on. That would be the one that I would be holding. I keep getting fucking kicked out of Tasty. $561. No fucking way we're trading 561. You're gonna sell the fuck out of 560, almost guaranteed. Where's 561? Or where's the next weekly dose Sigma Ligma? 562. 1:15 in the afternoon. Maybe a quick pullback consolidation phase, then more up. Be careful of a consolidation phase coming in here. Be careful of just a 5-minute check back here. So we haven't done a 5-minute check back since 11:17. It's now 1:30. Watch out for consolidation here. I'm going to take a quick break. I'm going to go potty again. Here, one second here. Turn this on for you. You guys want to listen to Bloomberg or no? CNBS. I'm going to take a quick break here. I think we're going to consolidate for a minute, at least until like 2:30, 3:30. Just watch out here. Remember, too, it's 1:30 right now. When we're on a down day, we get vol control. When we're on up day, we get put mafia comes in. Just be careful here of a consolidation phase. I'd like to buy another dip, but I'm not ready yet. So, no, they were asking 10 cents for 561s a few minutes ago. I was like, I don't know. A little bit of a roll happening, at least some consolidation right now. Yeah, I'm gonna play it cool here. I'm just gonna be cool. Just chill out. Let me let the Discord know. Take a quick break. I wonder if I can get Winky to talk. Or not Winky, Binky. Binky, you here? Let me ask if Binky's here. Maybe we can get him on the show. They keep wanting to bring Binky on. I wonder if we can do a voice channel with him and have him chat up the show while I'm on break. I don't know if we can do that or not, but he's probably like, what do you want me to do? I don't want to do that right now. I'm at home right now, chilling out. I'm watching the dumpster outside for the homeless people jumping in it. I wonder if I can get Binky in a voice channel and put him on the show. All right, no Binky. We should test that out though. Test out the voice channel. See if we can get somebody to like chat while I take a break. Any more experienced traders have any insight on NVDA movement for now into next week? Strid, what do you want to know, Strid? What do you want to know, Strid, about NVDA? Do you want to know if it's going up or down or what? I thought I charted it out. I thought I've got NVDA charted out. Should like I got some too much of a higher time frame for you guys. You guys want some smaller time frame? For just this week? Just wants this week. Come on now, hit the fucking button. Where's Strid? Hold on, Strid. I got you covered. Where the fuck did it go? There it goes. Whoop. little pin right there, right? 134. Something like that. What are we on, a 1 hour time frame right there? Right up there. That should go all the way up there. I got you, Strid. Fail 136, break 136.50 maybe, right there. Right there maybe. No, it's too high. 136.62, and then 137.44. 136.52, break above, boom. Get almost to 138. There's Thursday, Friday, 10 a.m. Up there. Come down into Monday, 9:30. Something like that. Tuesday, right there, 9:30. Takes off, rocket ship, right there. Something like that. That's what I think happens. Let me get. Sorry, guys. I'm trying. NVDA. Not quite yet. Here, hold on. There, boom, boom. Slip down. Yeah. Something like that. $128.67. New. Save that. Save. Where is he at? Where's Strid? There you go, Strid. All right, taking a break. I'll be back here in about, it's 1:33. I'll be back by 2 p.m., possibly 2:30. Gotta go potty. I got a shit bag and a piss bag of hair in the corner. I'll also post AVGO and LCID in the Discord today. Those will be done today in the next hour. All right, I'll be right back with you guys. Give me just a minute. All right. Be right back with you guys.
Great. We got more great stuff coming up right here on Bloomberg TV and radio.
I got some Bloomberg on for you.
Is luxury. And time spent in a Polestar is the best time of your day. You deserve. Build and order now at polestar.com.
New factory construction in the U.S. nearly doubled in 2023 with the Next Level network from AT&T Business. Manufacturing leaders are using reliable and secure connectivity to create the assembly line of tomorrow so we can all drive toward a sustainable future.
Want Ethereum exposure right in your brokerage account? Get it with symbol ETHE. Grayscale Ethereum Trust, the world's largest Ethereum fund. ETHE. Crypto investing begins here.
Every day, thousands of loans are made to U.S. consumers. Those loans are converted into a bond. And so we have this market that's grown into a $12 trillion opportunity set, and it's a great way for investors to get exposure to U.S. housing.
Look what I got.
Wait, why is my album called Simplified Financial Planning?
It's a great way to tell financial professionals about Nationwide's tools and resources.
But none of my songs are about finances.
About that, there's still time.
Wonder what Jerry's doing now. Probably something awesome. Congrats, Jer. Wait, how do I plan for retirement?
Spend, save, and plan smarter with Erica from Bank of America.
One of the benefits of working at Columbia Threadneedle Investments is the access to research analysts.
In order to transition away from fossil fuels, we're working to figure out what technologies are going to be more important than others.
It was just a regular Cybersecurity Monday. That's me. I'd seen this before. Or had I? What was this AI treachery? I needed some help. Good thing I knew someone. Or something.
Glad you called, Jay. It's time for an upgrade.
Awesome. My path became clear. I knew what I had to do. Because they never stop. No time to waste. This isn't sci-fi. This is precision AI.
If you want to survive as a species, it is necessary to rebuild the biodiversity. And here, what we are doing together with Zurich is exactly this.
Here's the way to go from confusion to cohesion. The way technology makes healthcare payments simpler. The way to help providers feel provided for. The way to give patients a little more clarity and trust. Waystar, the way forward.
This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got stocks pushing higher. We're looking at records right now for both the S&P 500 index and the NASDAQ Composite Index. S&P breaking through 5,600 for the first time ever. 5,613 is where the S&P stands right now. We're looking at a gain of 36 points, up by almost 0.7%. NASDAQ up 175, also on track for a record close, up by 1%. The Dow up 185 now, up by about 0.5%. 10-year at 4.29%. We've got the 2-year at 4.63%. Gold up $7.50 the ounce to $23.71 for gold. That's a gain right now of 0.3%. While West Texas Intermediate crude oil is up 0.7%, 82 even a barrel on WTI. A rally in the world's largest tech companies sending stocks to records. Jay Powell's remarks to Congress that you heard on Bloomberg television and radio, again doing little to dissuade traders from betting on Fed rate cuts this year. Again, 10-year yield right now, 10-year is at just about 4.29%. We've got the S&P up 37, up 0.7. Apple pushing higher today among the big tech names advancing. Apple right now up 1.4%. It aims to ship at least 90 million iPhone 16 devices in the latter half of this year. I'm Charlie Pellet. That's a Bloomberg Business Flash. Balance of Power continues. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you for keeping us honest on the markets as we talk politics in Washington, the Wednesday edition of Balance of Power on Bloomberg TV and radio. Thanks for being with us. As we turn our attention to the NATO summit that is now underway here in Washington, Joe Biden holding forth a bit later on in a special dinner with the more than 30 world leaders who are gathered just a couple of blocks away from where we are sitting here, with, of course, Ukraine on the agenda. This is something we're going to be hearing a lot more about as NATO countries pledge this week to speed up efforts to fund the war in Ukraine, with big questions about creating a more definitive path toward NATO membership. In fact, we heard from Volodymyr Zelensky, the president of Ukraine, yesterday at the NATO summit. Here he is.
It's time to step out of the shadows, to make strong decisions work, to act and not to wait for November or any other month to this end.
Zelensky calling for the NATO allies to act now versus later, and we are seeing them take some action now. In fact, yesterday it was announced by President Biden in his speech addressing the summit. 5 long-range air defense systems for Ukraine, more Patriot missiles, of course, dozens of shorter-range systems and missiles as well. The question is, how quickly can it make a difference, and is this really what Ukraine needs the most? For those questions and more, we turn now to Kelly Grieco, who is back with us here on Bloomberg. She is Stimson Center Senior Fellow with the Reimagining U.S. Grand Strategy Program. Kelly, always great to talk to you. We obviously got the news on those long-range air defense systems. We know that air defense is what Zelensky has been pushing very hard for.
On the bleeding edge of news for non-farm payrolls.
How much of a difference does it make?
Then sign up today and get our special offer of Financial Use
thank
Pro
you for having
for
me.
years worth of our service for the price
These are
of
5
1
systems.
month.
4 of them will be
92%.
Patriot batteries, which is quite significant. Another one will be a SAMT, which is also a long-range system, and also dozens of other tactical air defense systems. So this is a very significant investment. What we don't know exactly is what version of the Patriot system these are, where they're coming from, so how long it will take. And in terms of impact, it really depends on how they're going to use them. And I have some questions about that, particularly given F-16s might be arriving in the country. Will these Patriot systems be used to protect air bases? that are hosting the F-16s, or are they going to be used to protect the cities and the energy infrastructure? If the latter, then it could have a significant impact.
Kelly, it's great to have you back. You mentioned the F-16s, U.S.-made fighter jets from Denmark and the Netherlands on their way, and we're apparently talking about sending even more. You're the first person we ever talked about this idea with here on Balance of Power, and you questioned their effectiveness and whether they were consistent with the strategy in Ukraine. There's reporting now from Bloomberg just in the past couple of days they don't have enough pilots who are prepared to fly these jets. They don't even have enough prospective pilots to train. So what are we doing here?
I mean, this is a great question. You know, I have this question myself. You know, we know that there's about 20 pilots that will graduate by the end of the year. There's about 60 aircraft roughly that are being donated by countries. So that's about, you know, 3 aircraft per pilot, which is the opposite of sort of what you would want for the numbers, because usually pilots get fired before the aircraft. You know, so it's going to be a small contribution, especially at first. And I think it's noticeable that you can see the Ukrainians trying to scale back expectations. So they're talking now about using these largely in an air defense role. So to intercept Shahed drones and cruise missiles. And I'll just note, that's an expensive way to do that. You know, we'll see how this plays out. But I think, you know, there are concerns about, is this investment worth it long term? You know, Ukraine will need an air force, but certainly in the short term, is this really worth the impact it will have operationally on the battlefield is going to be marginal compared to the amount of effort that is going into this, for sure.
Okay, so Kelly, if it's a question of investment versus reward, what kind of investment would reap greater reward for Ukraine? What could it more use that perhaps it isn't getting right now?
Well, I think it's actually an investment that allies cannot provide, which is manpower, personnel. This is still an issue that Ukraine is dealing with, which is, you know, trying to recruit and mobilize forces. I thought it was quite interesting that Ukraine and Poland signed a security arrangement this week. And one of the things that was included with Poland signaling that it would send back Ukrainians that are you know, eligible for service back to Ukraine, and it hosts, of course, many refugees. So the personnel issues are very significant because this is really a war of attrition. Beyond that, obviously, air defense matters a lot, but we're really getting in a hard place now, sending more air defense systems, including anti-air missiles. You know, Biden again last night said Ukraine's going to cut the line in new anti-air missiles that are coming out of factories and be the first to get them. And that means Ukraine's getting them and not other allies and partners, whether that's Taiwan or Japan or Israel.
Yeah. To put a finer point on this, and I hate to belabor the F-16s here, but we've got 79 that have been committed so far, 79 jets. Just this week, Zelensky said here in Washington, quote, until we have 128, we will not be able to match them in the skies, and it will be difficult, unquote. Does he believe the Pentagon, or is the Pentagon not being honest with him on this?
Well, I think we've seen that the Ukrainians, and this is understandable given they're fighting a war, their tendency is to sort of keep raising what their needs are. When they have something, they're not completely satisfied and they want more. And that's understandable because they are fighting a war. You know, at the end of the day, though, the F-16 is a 4th generation aircraft. The Russians have very advanced air defense systems. And so there's always going to be an issue of the fact that the F-16 against these very advanced Russian air defenses is going to be vulnerable to being shot down when it's being operated most effectively in the sky. And we're already seeing the Russians are going after, have increased attacks on air bases in preparation for the Ukrainians receiving these jets. And so they're getting prepared to target them on the ground as well. So, you know, I understand that Zelensky wants more, but the question is, where are smart investments? Because there's only so much money as well available. Where are the smart places to be able to really support Ukraine's effort to the maximum gain?
Well, and to such a large extent, Kelly, what we're talking about here is supporting Ukraine's defensive effort, things like intercepting missiles, etc. There's also the question of offense, knowing we have seen a change in at least U.S. administration policy when it comes to Ukraine, offensively striking certain targets within Russia. What started narrower has broadened a bit. But for Ukraine to actually win the war, is that the real conversation that needs to be had?
I think the real conversation that needs to be had is actually what winning the war means. And that should be a political, defined politically. It should be an independent Ukraine that's able to keep as much, recapture as much territory as possible. But it's going to have to acknowledge that it's probably not going to recapture every last bit of territory. And I know that is horrible. But the reality on the ground is that you just can't overcome certain realities, which is that Russia has more personnel. It's able to sustain its war economy. It's been really ramping it up. Whereas Western support is really reaching sort of some of its maximums. And so those realities, no matter what we want to do and how we want this outcome to be, we have to come to terms with that and think about how can we prepare Ukraine to really position itself to get the best deal possible in some kind of negotiated settlement. Because I think it's quite clear at this point that this war is headed for that. It's just a question of what that's going to look like.
Really interesting as we spend time with Kelly Grieco at the Stimson Center. So many people are talking about the news conference that Joe Biden is going to be holding tomorrow at the conclusion, Kelly, of this NATO summit. I suspect a lot, if not all of the questions are going to be about his age, his mental acuity, and some of the related political issues that we've been dealing with since the debate here in Washington. How about policy toward Ukraine? What would you ask Joe Biden if you were a reporter in the crowd tomorrow?
I would ask him what the long-term strategy is. Rather than simply saying that it's as long as it takes, I'd like to know what the theory of victory is now for Ukraine and for its Western
US
supporters.
stocks extend gains, NASDAQ up 1%.
And how are we getting there?
Isn't that not really, though, for the U.S. president, whoever they are, to decide, Kelly? Is that not up to Zelensky?
You know, I know that we say that, and to a certain amount of degree, that's true. It's up to Ukraine to decide, battlefield strategy and to decide, a political settlement is going to accept it or not. But we, as significant backers of that, have choices to make about our own support. And what we're willing to support or not. We may decide that we're not willing to provide endless support that would be required perhaps to take back large portions of territory if that was even possible. And so we need to actually have really honest conversations about that because our interests are aligned with Ukraine, but they're not identical. And that's just the reality of alliances and coalition partnerships. Mm-hmm. And so we need to actually look at that and make sure that both sides understand that reality.
Trump proofing is the buzz phrase, if I can call it that, at this NATO summit. Love him or hate him, it's what world leaders are talking about. Kelly, what would a Trump re-election mean for NATO?
Well, let me just first say that Trump proofing is talked about extensively in this town, particularly with allies, whether it's in Europe or Asia. As I will say to them often, I do not believe Trump proofing is possible. I just think that's not a reality in practice. I think what's clear is that a Trump presidency would result in a massive scaling back of support for Ukraine, possibly an ending of material support for Ukraine. And even more significantly, it would result in, I think, a drawdown, a shifting of security responsibilities dramatically from the United States to Europe. Would it result in a formal withdrawal from NATO? I do not know. Maybe. But I think even short of that, it's going to be a real emphasis on Europe, these are wealthy countries, really spending more on defense and providing for their own security, particularly so that the United States can focus on some of the really significant security threats emerging in the Indo-Pacific.
Just finally, Kelly, as you were talking about how you would ask President Biden to get serious, if you will, about what exactly the end game is when it comes to U.S. support for Ukraine. Given what we have heard from Donald Trump about this, aside from his suggestion he could solve this war, make it end on day one of his presidency, does he seem to be talking about it more realistically than Biden does at this point?
Well, I don't think, the idea of ending the war overnight is, realistic. I think that there is a bit more public recognition of some of the inherent limits on U.S. support. I think that's a reality. What I think is not as realistic in certain terms of Trump is maybe overestimating U.S. influence and its ability to actually end the war. Yes, we're providing a lot of material support, but we're not the only actor really involved in this. And Europe provides significant support at this point to Ukraine as well. So our ability, we're accustomed to, for many decades being the sort of most powerful actor in the world, and we kind of get to say how things are going to turn out. We're no longer in that place anymore. And so I think that's an adjustment, not just for Donald Trump, but sort of for all of us as Americans.
Always a pleasure to take a deep dive with Kelly Grieco. It's good to see you, Kelly. Thanks for your insights today. Senior fellow with the Reimagining U.S. Grand Strategy Program at the Stimson Center. Joe Biden will continue through his day today, day 2 of the NATO summit, a bilateral meeting at the White House included on his schedule today with Prime Minister Starmer. And then, Kaylee, a dinner tonight before the primetime news conference tomorrow. We'll have special coverage here on Bloomberg.
Indeed, we will. It's going to be a major moment for the president as questions continue to swirl about his path forward as the Democratic nominee for 2024 or not. We'll continue that conversation later on the late edition of Balance of Power at 5 p.m. In the meantime, Bloomberg Business Week with Carol Massar and Tim Stenovic live from the Bloomberg Green Summit is just ahead on Bloomberg TV and radio.
Time is luxury, and time spent in a Polestar is the best time of your day. You deserve. Build and order now at polestar.com.
Epic journeys transformed by Amadeus Citric Easy.
You didn't have to wait till your trip was over to share all your routes, camp bases, and amazing discoveries with your colleagues. Maybe you could have developed the evolution theory a few years earlier, because it kind of took you long enough. Could have been famous before then. Statues, streets with your name on it, merchandising.
Merchant what? Citric Easy, changing business travel from epic to collaborative and worth it.
Trains. Trains that sense what isn't on the schedule. Trains that use the power of Dell AI and Intel to see hundreds of miles of tracks, clearing the way so you arrive exactly where you belong.
What's inside your ETF? Does the manager have institutional experience? Is the strategy built for all markets? With the Parametric Equity Premium Income ETF, you know what's inside. Inside, you'll find a novel income strategy designed for growth and tax efficiency from a leader in innovative solutions. Get to know what's inside PAPI, powered by Parametric, the symbol of alternative income.
Recipes written by hand and lost to time, are now being analyzed and restored using the power of Dell AI.
The balance sheet is so important to the success of the team. And a big part of my role is to make sure that the balance sheet stays strong and that we are prudent stewards of capital. There are things that we can do that are irrespective of winning or losing. Take a look at the first budget that comes from one of the teams and ask questions about, do you really need to spend that much? Are you really shooting high enough when it comes to partnership revenue?
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, Tuesdays, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Everybody, we are not in New York City on this Wednesday. Instead, we are live in Seattle at the Bloomberg Green Festival. I'm Carol Masser along with Tim Stenevec. We're also on YouTube and Bloomberg Originals, and of course on Bloomberg TV and Bloomberg Radio. And we're kind of at this great cross-section of everybody and anybody who's involved in climate change and really thinking about it innovatively.
Yeah, it's a gathering of the Earth's foremost collaborators, activists, innovators. They're leading the way toward a new climate era. We're talking sustainability, design, culture, food, tech, data, science, policy, entertainment.
So the Bank of France sees French second quarter economic growth of 0.1% versus the earlier second quarter forecast of 0 to 0.1%.
Powell, his testimony up on Capitol Hill. It's in the books.
In the books, done.
It's done.
Yeah, boring? Was it boring?
Protect your trades from macro headline risk.
And he said it was a compliment.
He said it was a
now
compliment.
Only
Not boring to
$99 a
equity
year
investors,
for our
Chris
real-time
Mann. We're
service.
seeing stocks once again moving up, 7th straight day of gains. So we're looking at the S&P toward its longest winning streak since November. So we continue to see that bullish run.
Okay, coming up this hour, who could take the baton from President Biden? Who is not to be underestimated? It's from Business Week. We've got the latest coming up in just a few minutes.
Yeah, looking forward to that. We're also going to get a check-in on the consumer. We've got the CFO of General Mills. It's all part of our Chief Future Officer series. It premieres this evening, so we're going to get into that in just a moment.
And live from the Bloomberg Green Festival here in Seattle, Washington, we got the gendered climate battle as climate change does not impact everyone. And Carol, Leonardo DiCaprio,
yes,
other celebrities,
yes,
they backed one climate startup now. It's struggling to stay afloat.
Yep, we're going to get into that in just a moment. First up, though, you've got to get an update on the markets for you and also your top business stories. Let's head things back to New York and to Charlie Pellet.
Thank you very much indeed. You're at the Green Summit. That is our theme today. We have got green on the screen, lots of it. The Dow, the S&P, NASDAQ all advancing. 39-point gain right now on the S&P. We're up 0.7%. Look at the S&P, 56.16. That is a record. NASDAQ also a record, up 183 on this J. Powell Wednesday. We've got the NASDAQ Composite Index at 18,613, up 1%. Broad-based rally here with the Russell 2000 up by 0.6%. 10-year 4.28%, the 2-year 4.62%. Spot gold up $9 the ounce, 23.73, up by about 0.4%. And West Texas Intermediate crude oil now higher by 1%, 82.25 a barrel on WTI. Bottom line here, stocks rallying, stocks are at records. Friday, Wall Street's focus will shift to bank earnings when we hear from the likes of JP Morgan Chase, Citigroup, and Wells Fargo. Net interest income going to be very much in focus. Right now, though, we do have some of the bank stocks trading lower. Case in point, JP Morgan Chase, a little change, but down less than 0.1%. Wells Fargo down 0.6%. Citigroup up by 0.2%. So, recapping here, stocks higher, S&P at a record, up by 40 points now, up 0.7%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, he was said to be boring at today's hearing. Yes, exactly that word. It was day 2 for Fed Chair Jay Powell up on Capitol Hill. His semi-annual testimony before congressional lawmakers. Powell submitted identical remarks as of yesterday. Remember, it was before the Senate yesterday to the House committee today. They were exactly the same.
Yeah, in case you missed it, Powell warned that lowering rates too little or too late could put the economy and the labor market at risk. He noted yesterday that elevated inflation is not the only risk we face. Reducing policy restraint too late or too little could unduly weaken economic activity and employment.
Yeah, the Fed chair also saying cutting rates too soon or too much could stall or reverse inflation progress. Here's, though, what Chair Jay Powell said earlier today.
For a quarter of a century, the PCE inflation has been the Fed's goal. We've defined our goal in terms of that because we think it's the better measure of the costs and inflation that the public actually faces.
And you've said that you're willing to cut interest rates before reaching the 2% target. Is the decision to cut interest rates going to be driven by reaching a particular target en route to 2%, or is it driven by the overall trajectory of the inflation rate?
It's going to be driven by the totality of the data. There isn't a particular number that we have in mind that we have to get to.
That 2% rate. That, of course, was Jay Powell earlier up on Capitol Hill. Our focus now shifts to that inflation print tomorrow and also weekly jobless claims. Let's get more. Let's head back to our New York studio, New York headquarters at Bloomberg, and Bloomberg Economics U.S. economist Stuart Paul. He is back with us. So, Stuart, first of all, Powell boring. That was kind of a fun exchange today. Anything new that we got in day two here?
Very little in day two. He did clarify that the average inflation target is asymmetric, but that's something that everybody basically already suspected, if not already knew. To hear him articulate it, I guess that adds a little bit more clarity there. But again, today he was unwilling to say that he was unwilling to specify when the FOMC would move to cut rates, and just generally articulated some of the same points that we heard yesterday. The balance of risk has been restored. It's really going to be the labor market that's going to determine the pace of cuts going forward.
So what do you think over at Bloomberg Economics in terms of how the Fed is going to cut rates later this year, or if the Fed is going to cut rates later this year? Did today's testimony do anything, Stuart, or yes?
So just keep in mind, bottom of the hour, expecting possible comments from Fed's Goolsbee and Fed's Bowman. But keep in mind they are making remarks at a childcare event, and so unsure that we'll be getting any monetary policy comments from either of these Fed members today.
All right, I come getting him back here. Give me one quick second here. Be careful in here. Hold on here. Just I want to let you guys know that old man Tommy be right back. All right, just be careful here, at least on SPY, okay? So get rid of this. Now they're holding SPY up. There's some rotation going on in the market. There is some rotation going on inside the market. This could stay elevated due to that rotation. There's a couple things I'm looking at here in the background. So look at the Qs down here, right? Qs want it, like the Qs wants to hit R3. I want to talk to you about something here too. So the Qs are, they shouldn't outperform quite like you'd expect them to. We're heading into the end of tech seasonality. So you see like rotation coming into tech, like in and out of different tickers. I think AMD lagged today. But you can see like the rotation in and out, right? Around tech and individual tickers. Like Q's here is kind of topping. It hasn't hit R3 on the day. It's actually underperformed today, believe it or not. Tech is underperformed. Do I think Q's can hit R3? Possibly. But just note that it didn't outperform today, okay? We could roll here is my point, or if they continue to push individual tech names, you may not see, like you might see like SPOOs hold up but not go crazy again. Now is my point here. Now, if they begin to rotate out completely out of tech, you'd see SPY drop, of course, right? Under normal circumstances, I would say this is the top. But with the rotation going on around the market, from ticker to ticker, probably isn't. We just like fucking pin around here. Now, I want to talk to you about one other thing, which is that SPY is rolling over on its hourly velocity at the moment. So just be careful here. Exercise some caution. We have CPI tomorrow, right? It's 2:30 in the afternoon. I want you to know that we do have CPI. We do have one more volatile event tomorrow. And people are calling for, hey, if we get a good print, market should squeeze up. Now, if it does squeeze up, let's say we trade down, right? We just grind sideways and down, then they squeeze us up into CPI. I would still be wary of it if you're just a cash market trader. Because if they squeeze us up into CPI, they could just sell it, and you could be trapped in the wrong side of the trade by 9:30 in the morning. So there's some kind of a trap here for bulls in pre-market, even if we get a good print. So just be aware of that. I would feel safer trading futures than I would trading cash market for CPI if you're bullish into tomorrow. For CPI personally, I would be. You might not be, but I would be. Hold on a second here. The reason I'm saying that, the whole reason I'm saying that is because hourly velocity is rolling over right now. So there could be a trap here for bag holders and FOMO chasers and that kind of stuff. So I'm gonna put an expectation right now in the Discord for SPY at least. Preliminary expectations.
NYMEX natural gas August futures settle at $2.32. Diesel August futures at $2.51. Gasoline August futures
For SPOOs here. There's a trap here. There's a trap here for late buyers. I think there is. It's probably like a 60% chance, which is pretty high for the market, like 40 to 60% chance that there's some kind of a trap here. And it's not a normal trap. I don't think it's one where like you're going to buy this right here and, you know, it's going to roll you down into the close or something like that. I think there's a trap in pre-market for you. Do you guys agree with that? Disagree with that? Am I coming out of left field saying that? Or does anybody out there think I'm wrong on this?
Payrolls. Then sign
I'm open to your opinion.
Financial Juice Pro for a year's worth of our service for the price of 1 month and save 92%.
I'm definitely all ears for opinions on this if I'm wrong. Okay, so I'm gonna leave an expectation. Let me see if I can go to the 1 minute chart here. Just note that any squeezing that's going on, and that doesn't mean we don't continue up. Hey, what am I doing over here? It doesn't mean that we don't continue higher. It means that here I'm gonna give you the idea here. Hold on, I'm gonna put it in the Discord so you guys get what I'm talking about here. Just give me 1 quick second. So we can draw this out for you here. We'll put a 1 hour chart. Get rid of this 557. And you're going to hate this. There, reject that. $556. Yeah, right there. There's that fucking red bar right there. That's where that initial run came right there. That's where the original buyers were. Here's the second set of buyers right here. And then this is going to be where the... Right there. And what do we have here? Where is that? Where is that second target up there? 562, 560, 562. Is that 562.52? Right there. 564.98. Make that one red. Make that a 4. Make that a 4. Right there. Yeah, there's like a hold on here. I think there's like let me see here. How do I draw this out better? Maybe something like that. Drawing that out right. Cool CPI print. Futures. All right, so I'm going to leave this in the I'll draw an arrow in here maybe. Cash market. I don't know if I'm writing this right, but that white, make that smaller. It's Thursday at Thursday 1600 right there. Bounce up into 10 a.m. on Friday, maybe right there. And then make this next week. Right about there. Okay. New. This is preliminary now. This isn't, hold on here. Sorry about leaving this. Sorry about leaving that with the page. Hold on here. Leave that up for you right there. That's PT3. 1 hour. Tight hair boys and girls. Now this is preliminary. I'll give you a better idea tonight, but I want to visualize for you. And I'll show you guys this in just a second. I just want to post in the Discord. Okay, at everyone. Preliminary expectations for tomorrow. I still want to see what the close is. Close. Okay. Upload a file. Tell me if you're understanding this. Going to explain on stream. It's not guaranteed that this happens. I want to show this though on the chat if I can. Okay, cap screen. Now I'm going to show this. This week I haven't wanted to show this stuff. I want to keep this in the Discord, but here's the idea here, okay? This is where my fear lies. Would be something like in cash markets we trade like 560 basically 560 560.05, whatever that is. You get one more bump up maybe into the close. My one fear here is that in the we get the CPI print. If it's cool, you get like a squeeze up and then it's a boom auto sell straight down into like 930. You wake and then not wake up, but like you come to the market at 930 and we're trading that 560 or lower. And another fear about this is that you might come into the market thinking, oh, we got a cool CPI print. They sold it down. We're going to go back up there and retest this. And we don't. They just trap you in on Thursday. Then in like Thursday, Friday. Friday, you get one more quick bump up in the morning. And then it's back down into Monday, Tuesday for the real next trip up higher above 560. So we trade above 560. We go higher and higher and higher for that end of month, 565, 564, 570, all that kind of stuff. So just be wary of this shit happening. It doesn't always happen, but this is like fuel for later on down the road. Do you guys understand what I'm saying to you right now? You guys in the stream? Is the stream up? Did I lose the stream? I have a big storm here. Can anybody just say something in the chat really quick? Just say test or something. Okay, cool. This isn't guaranteed, but there are moments when the reason I'm saying this is because there's moments when we have these euphoric moments and everybody's all pumped up and everybody's like just fucking FOMO. And as a cash market participant, this is very hard to trade if this happens, if this scenario plays out. It doesn't always happen, but when it does, it sucks. It really sucks really, really bad when it does happen like that. So my only recommendation here would be if you can trade futures, especially if you're bullish. If you're like, hey, I'm bullish on CPI, I would recommend that you trade futures into tomorrow if you are bullish. If you're trading this in cash market, spreads are probably your friend. Into tomorrow, there's a good chance that spreads are your friend. And we're so close to the weekly 2 sigma move. It's hard to call. I'm a buyer of dips, right? Remember yesterday we were talking about having a softball. Was it yesterday, day before? Baseball glove, big fat baseball glove. You're out in center field. You always want to be buying dips. It's always the safer trade. It's always the safer trade over buying this right here. Now, hindsight vision, we trade up to 562, 564 in the overnight, and then it holds in the open. You're like, fuck you, Cap. I should have fucking went long. You're fucking wrong. I don't know. I don't know what to say there. If you want, you can go to tradethetrigger.com. You can choose whatever you want. There's a monthly membership for a supporter. I think it's $32 a month if you sign up for the year. You get twice a day triggers and velocity updates on 10 or 12 tickers. You get a market brief every night. You get a bunch of cool shit. You get the pivot tool, stuff like that. You get access to the Discord. If you want just the Discord, you can do just a la carte for that. I think that's $20. If you want your own triggers and velocity so you can trade on your own, I think that's $125 or $150 or something like that. We got a bunch more shit that's in development right now. It just hasn't rolled out. It's a ton of work. There's people in the stream that actually are doing some of the development for us. If you guys know Rowit, We're paying him to do development for us. A lot of money, actually. But there are people actually in this stream that are doing the development for us. So we got a bunch of stuff coming your way. We're squeezing up right now, trying to trade 560. See if we can get 560.05 into this close here. And that's my only concern here. My only concern here is the CPI. So when we close the day out, right, we get in this close here. It could be a kind of a sell the news kind of a thing. Even on a cool CPI, it could be a sell the news thing. So either spreads, I would recommend like either spreads or futures would be the recommendation. PT3 being hit right now. So here we go, PT3 being hit. And then we've got two more targets to the upside so you can see them. There goes 560. Here, we put this up here for you really quick. Yep. Hold on here. Breaking through R5, 559.79. Trading 560.10 right now. And we have two more targets to the upside. This is the weekly 2 Sigma Ligma, the 2 Sigma move to the upside. So we've got two more PTs up here, PT4 and PT5. That right there. PT4 and PT5. Make that a 40 right there, PT4. And this is PT5 right here. Right there. I'm going to move that up for you. Make that better, or make that easier to see. So PT3 got tagged. Next two targets, 562.52 and 564.98 on SPOOs. When was the last time I saw R5 get broken? It happens R4 and 5 on a weekly basis, or no, not weekly. Every 10 days, every 10 sessions, you should hit R4, R5 up or down, S4, S5 on a daily basis. To break above and trade the weekly. Very rare. 1%, 1.5% of the time. You'll hit R4 and 5 on a weekly basis. Very rare. So when it does happen, though, I've seen it happen, but when it does happen, it's usually an automatic sell. So if we trade up here, right, it's normally like we go up there and it's boom, right down in the depths of hell. So that's my only concern on a weekly basis. It's my only concern here on a weekly basis heading into tomorrow is trading it without spreads or trading it without trading futures. Just be aware of it. Just keep it on your plate. Another note on this too would be on here. Hold on a second here. Another note on this would be we now have support at 5,600, and there's two targets above on SPY or on SPX. There's a target above of 5650 and 5700. So use those as a helpful guide as well. Let me see if I can show you this really quick. We're going to go back down here and where are we at? Right here. So here's the other thing to be looking at here, okay? We're now turning, can you guys see this? We're now turning this local resistance into local support. So 5,600 becomes support, right? Volatility reigns below the hourly trigger. So this whole area here, hold on here. This whole area here becomes supportive of the market, and your local resistance now becomes 5650, And you guys already know about this, right? I've already posted this on FinTwit, haven't I? I've been calling this shit for months, dude, and years. Like, I've been calling this shit since October, but whatever. You've got the call wall above here at 57 or 5,700. And not only that, there's another target right here. Can you guys see all this? Let me move this over. Hold on a second here. Bottom right-hand screen. I want you guys to see this better. Hold on here. What are we doing? All right. I guess we'll do it this way. So there's actually another target higher, 5770. This is where the collar is too up here. So if we trade this up here to that collar, you know, not that fast. We're not going up there that fast. It's not going to be a straight fucking line straight up. But 5,700, 5,770 is a real possibility between now and end of August. That last trading day of August, August 31st. Remember I showed you that last bar yesterday on FinTwit. I made a post on FinTwit yesterday about our discussion. Well, hold on. Let's start at the beginning. We had a discussion yesterday, the day before, where I said to you, I showed you, remember we were talking about, hey, Mike Wilson's calling for the 10% decline. And then I said to you, we might not even get that. We might get 7 or 8, or we might not even get that, right? We might even get a pullback or a pullback to the weekly trigger, or that weekly trigger will come up so high that whatever that pullback is might not be 10%. And that we have to trade accordingly. I talked to Bears about this on stream, right? I said to Bears, you have to trade zone to zone in a bull market. You can't just like top call and we're going down because of seasonality. So just be aware of this 5770 up here. Be aware that we are building a base at 5,700. This is becoming supportive right here. For right now, unless we break below it, and this price shows us a different way lower. If we start pulling back and rejecting this, we start pulling back and getting underneath, something like that, we'll have that discussion that we're wrong, right? And we'll take that trade lower off the hourly trigger. So for right now, you've got the weekly expectations for a 2 sigma move to the upside. That's 5.6, and on SPY that's 562.52, and then 564.98. And then what? And then you've got SPX. You can look to SPX as the next 2 targets, right? We've got 5650 and 5700. These are your major resistances above the 2 sigma weekly move. Make sense? Now, the only thing that's of concern here to me in the overnight, I'm going to show you here in just a moment. Trigger full screen? Yeah, right over there. So here's the only other thing that I got for you here. And I'm going to post this. Oh, hold on here. I'm going to post this. Just make sure I'm going to get some. Make sure these levels are all correct right now. See if they've been updated. It's usually bad data in the middle of the day, so I'm hoping. All right, they have changed slightly. They have changed. Now this data might be a little bit more messy. Oh yeah, and not only have they changed, but they even the gamma has changed. So I'm going to post this right now inside of. There's local support. I'm going to post this in the Discord and the general chat for you. Hold on here. Yeah. just so you have a reference. So if you're like, hey, Cap, where's the actual top? That everyone. Updated gamma. Upload a file. Post that for you. David AMS, take it easy, brother. Have yourself a wonderful night. Get some rest. Get some food. So I just posted the updated gamma. It's a little bit different than what you saw on the screen for what's on the upside. So my only thing here for you, and the reason I'm telling you this stuff is because I'm bullish to the upside, very bullish. But the thing that always concerns me is, what the fuck is Hold on here. I'll give me 1 second here. Velocity. Close that down. Okay, so velocity on a 30-minute basis right now, right? But wait a minute. Dude, what is going on here with what the fuck is going on here? Hold on a second here. I gotta reload this fucking thing. Oh, this is getting really fucking wonky here. This is getting really wonky. I'm getting, sorry, trading views all wonked the fuck out right now. Okay. $30-minute basis. And I just want to show you this, right? We got velocities coming down, right? And then we've got velocity about to peak out up here, right? You see how we peak out up here, 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 peaking out right here and peaking out right here. So, you know, if we peak out on Velo either into the close, and I want to show you this too. There's a lower, I don't know if you can see this on your screen. See, it's like a little rounding down here. Even if it spikes up, it's still going to come down. So I'm still bullish too. Daily velocity looks great. We're supportive, but we do have that little bit of a roll down, or what looks like could be a roll down between now and tomorrow. Today's the 10th, right? There's the 11th. So it's risky. You get what I'm saying? I hope you guys get what I'm saying here. Spreads are your friends, I would say. I would say futures are your friend. Futures or spreads are your friend, one or the other. And the only other note I would make on this would be, if you get a call spread, okay, here's how you do the spread. Not financial advice, but this is how you do the spread. I'm so fucking terrible. I feel like the dude from what does he say? You don't want any of this. This is like a movie where he's in the bedroom and he's like he's talking to the dude that's like a race car. No, he's a guitar player or something. Dewey, you don't want any of this. Walk hard. I feel so fucking terrible. So this is how you trade this. So if you get caught in a hot print, or if you get caught in a cool print tomorrow, right? And they sell the news on you no matter what, regardless, if you take a call spread and you leave it for like an extra 2 weeks out, and the assumption is that we're going to continue to go higher, the market is risky as it is, right? Market's already risky. There is no sure thing. So if you're going to put some risk on the market, and your thesis right now, and if the thesis is bullish to the upside, and if they sell the news on you at any point, especially if you're bullish, feel like, hey, I'm bullish on CPI, I want to trade that. Let's say it comes in hot, and we burn. We trade down to 545. JBJ's like, I got some put spreads on for 545, right? What did he do? He put extra time on him, didn't he? I think Uncle JBJ put July 31st on this put spread. Why? Because if he's wrong, right, he can be right later. Not right today, maybe not right this week. Maybe we get a cool fucking CPI print and we blast off, we rip faces off tomorrow. But it is coming back down. We know that, right? It's not always straight up. There's up, down kind of stuff. So if you are bullish on CPI, what we could do here is put on a call spread for that upside target, right? For that weekly if you want, or that gamma above if you want, and you put some extra time on it. Put 2 weeks on it, 3 or 4 weeks on it, and if you hit it in the overnight, fuck yeah, woo, I'm a winner, right? If you don't hit it and we roll down to 545 and then have to climb back out of the depths of hell to get to 560, 562, 565, you're better off there again, right? So if we trade, Qs are rolling over right now. So let me go back to that gamma chart. So let me look at the trigger chart instead. Let's do that instead. Let's look at it from this perspective here instead. Let's get rid of that for a minute. Fuck. Should we just get rid of? I was like, could you just get rid of all this? Maybe we can do it on this chart down here. We'll do it down below. Hold on. We'll go low. We'll delete all of this here. And we're going to go bottom right-hand screen. This is SPY, clean SPY chart, okay? So, FOMOers, right? Fucking FOMOers. Fucking FOMO people. Right? Let's say they sell the news on you on CPI and it blasts down before you can close calls tomorrow. And it starts doing this shit, right? And then it comes back up. So let's say you're right, but you're wrong in closing. You know, you're going to come back up here. We're gonna consolidate that, then get back up there again and start fighting for that again. So a call spread will help you in that trade. Make sense? I think that's pretty easy. Pretty straightforward. Sorry. Seems pretty straightforward, doesn't it? Isn't it? Pretty straightforward, right? The only other thing I would say on that call spread, if you want to capture it, would be don't go crazy on it. You can do it in the money. You can do a call spread that is 550, 564, 65, like a nice wide spread from 550 to 562. You can do 560, 562, 2 weeks, 4 weeks, something like that. You could do 2 weeks in a day, or 4 weeks, 4 weeks in a day. That way, if they do pin us on a month, except for that one fucking day, and you get the print. If you're either gonna get the print now or you're gonna get the print later. So you just leave it in your pot, your fucking pile of shitty trades, and hope that it comes back in the future. Not financial advice, by the way. This is not an inducement or a recommendation to take any of these trades here. So this is if you are, if I were bullish, on CPI tomorrow. Now you might be asking what I'm going to do here, right? Cap, what are you going to do? Right now I'm flat. And I was considering a trade earlier. I was considering a trade back over here. Didn't take it. We kept going up. I took a break, came back, and we're on PT3 right now. I don't personally want to risk any money here. I've had literally 5 or 6 big winners. So I'm not interested in giving my money back to the market. I am looking for a dip buy lower. And you guys already know where that dip buy is. I think I have to raise that dip buy target now. I think I have to look for 550. I was hoping for 543, 545, somewhere in there. But now because of where we are, I think I got to look for like 550 to buy back in. So for me, and if you want to know what I'm doing, I'm going to be prudent. I prefer to run out in left field or center field with a big old glove on and grab that gorgeous fucking dip. So for me, at least, I have no skin in this trade. I'm not taking a call spread either. I want to wait for price to come back to me. Sometimes I get left behind in those trades, right? It can go up and I lose out. I don't make any money. But I prefer being a fucking winner. And I go on streaks of losing. You guys have seen me lose. So when I'm on a winning streak, I want every fucking dollar that I can take and make. So I don't know how good of a trader you are or investor you are. But for me, wealth preservation is paramount over everything else, right? Because we make bad trades. So if wealth preservation is number one, and that involves all kinds of other shit, right? You have to invest your money and turn that money into more money and blah, 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 pull it out of the market. But I want you to know that wealth preservation is number one. And if I win 5 in a row, 10 in a row, 20 in a row, it doesn't fucking matter. I'm going to go on to a losing streak and give money back to the market at some point. And right now, I'm in this FOMO stage. I'm like, I'm fine. I can just sit here and wait for it to come back to me. So that's the other option here. That's the other option here. So you guys got my preliminary expectations for tomorrow. You see that I'm bearish on cash market into tomorrow. So if you want to know what I am, what I think we're going down. That's what I think. I'm hoping that we go down so that we can go back up. I think this is a trap for FOMO, personally. Get Uncle JBJ. Is he not? Did he already take off for the day? Is he not here anymore? Oh, he's here. He's here. He's here. So I don't know how long of a market participant you are, or how long of a market participant you are, or how long you've been a market participant. But we can turn on a dime. We can turn down, and you got it's like a fucking soap opera, the stock market, right? Look at how bullish we are. 30 fucking minutes later, we're going straight the fuck down to zero, right?
From October through December.
There was a day, I think in February or March of last year. I think it was last year. I don't think it was this year. I think last year, there was a day in February or March where we got a CPI print, and we fucking mooned. And they fucking sold it down into the opening bell. We were ripped on CPI. We came down in the opening bell, and all of fucking FinTwit, fucking everybody was buying calls, and we fucking sold the bell. And we sold down all fucking day long. We sold down. And then that was the bottom that you were supposed to buy to go back up. So I'm not interested in that shit. I don't want to be I don't want to be liquidity. So anyways, that's me. That's what my plan is. Now I've got exposure in the market. I do have exposure in the market, but it's not in like zero dates or intraday trading. I don't have that kind of exposure in the market. The exposure that I have in the market, we need some real heavy fucking selling, and I've got stops on that shit. So, my exposure in the market is low. Like my exposure, as a matter of fact, my exposure in right now in Tesla is 173.42. I'm feeling pretty good right here that I'm not going to wake up tomorrow morning and it's going to be trading fucking 160 or something like that. I fucking hope to God it isn't. I guess there's a minute risk of that. If something really bad happened to Tesla or something, but you know. Let's do some other chat. Let's do some other chatting here really quick. Or should I do this with the show or not? Yeah, maybe we'll wait. I've got a bunch of tickers I want to talk to you guys about, but because of where we are at the moment, I'm not going to discuss them. I will bring them up to you if we have a pullback. This is not the appropriate time for me to bring some new tickers up to you guys. I've got some new stock picks, but I don't think that this is the right place to be talking about them publicly. So I'll wait. I'll wait for a proper pullback. I'll bring them up to you then. Probably not the best time to be like, yeah, you want to be long in this ticker and that ticker while we're trading 560 on SPOOs. Okay, so you guys get the drill, right? You understand what I'm saying here? Here's the closing bell right here. Just, be careful. If you're going to put risk on right now, it's appropriate to do it safely. Thanks for subscribing, man. I just want to let you guys know too that if you're out there right now, it's preliminary. But this is what I'm going to try to do here. Okay, we're going to talk to you guys about something here. So, what I'm going to try to do here, we've been running a test of switching the chat to Discord, where I don't focus as much on the chat on Twitch and YouTube, and I'm focusing on the Discord chat. Today's Wednesday, right? Tomorrow's Thursday. We might make the jump to that. It's not confirmed yet, but I want to talk to you out there right now. I just saw somebody subscribe. If we make that jump, what I'm going to do is open the chat on Twitch and YouTube full-time free. No, don't be subscribing to me or like signing up for memberships on YouTube or Twitch. And what I'd say to you would be sign up for at least sign up for just the Discord. And then that way you're getting like the full, chat and Discord is fucking baller. So, I might just keep the chat open for now on to like every day from now into the future on Twitch and YouTube, and move the real chat into Discord. Discord's banging, dude. It's fucking banging, and there's some banger traders in there. The idea behind this too is that these guys can express themselves with better in Discord. They can post links and charts and trade ideas and mentoring and all that kind of stuff inside of the Discord. It's a much more it's a better environment for us. So, anyways, if you did just sign up, or if you are signed up, I will give you a confirmation of this change being permanent. Probably Friday at the close or Monday. I have to go back and discuss it with the Discord and see what their thoughts are, if they prefer this method or not. This is still a community, so I have to check with the community, make sure that they're all happy with how we're going to do or change things up out there. Okay, so that's just some like side business we have to talk about on the show. Okay, so you guys got my expectations in the Discord for now into tomorrow. I did show that chart to you on the show, so you have some idea of this. Some idea of this. I'm going to get rid of that. Turn this on right here, and we will close that one out. Q's rolling over right now. IWM, bullish. Let's talk about IWM really quick and Dow Jones. And before we go for the day, I'm going to talk about three things. I'm going to talk about Dow Jones Industrial Average, and I'm going to talk about IWM. That's one topic. And then we're going to chart out, I'm going to chart out LCID and AVGO for the Discord. And I'll post those charts inside of the Discord for you. Now, we're going to talk about IWM, rotation, IWM, Dow Jones Industrial Average. Be crystal clear on this, okay? Crystal clear. I had somebody call me out last night like I didn't bring this up, and I have. I did yesterday, and I do it over and over and over again. It's a pretty basic thesis here, okay? Now, I'm going to explain this in great detail, okay? Not great detail, but detail. When we are in a restrictive environment, okay? Small and mid caps do poorly. And that's because rates are high for loans. And small companies, small and mid caps, and specifically companies that make real shit, especially small and mid-sized, that they make real shit. It's hard for them to take loans. They tend not to take loans like a larger blue chip stock or a blue chip stock that provides services or services or software or something that's not tangible. Okay? Now a blue chip company doesn't get if a blue chip company makes real hard goods, right? Hard goods, they don't care about rate sensitivity. Okay? So you got two different kinds of groups of people here, right? In business, where a blue chip company doesn't give a fuck. As a matter of fact, since I believe 1978, I could be wrong on this, but I think since 1978, if you look on a chart on the Fed, it used to be that blue chips would not take loans when they were restrictive, when the government was restrictive. Oh boy, so it's a bigger conversation. Up until about 1978, right? If the Fed was restrictive, they were actually restrictive. And blue chip companies didn't take loans when they were restrictive. After about 1978, blue chip companies stopped fucking caring about if rates were high or rates were low. And there's some argument that the Fed is still loaning that fucking money to these blue chip companies cheaply. Cheap money is still available for blue chip companies out there. But small caps and mid caps, not so much. So anyways, these small and mid caps are rate sensitive. And they make up a pretty decent portion, and hard goods make up a pretty good portion of the Dow Jones Industrial Average and small caps. Small caps is more sensitive than the Dow Jones Industrial Average, even more sensitive than the DJIA or whatever, DIA, whatever you want to fucking say. So I don't expect huge trades going boom on Dow Jones Industrial Average or small caps until there is a confirmed rate cut trade, right? Until there's a confirmed rate cut trade. But it can go up if we basket rotate into those indexes. If we still have no confirmed rate cut, there can still be rotations into those baskets to pump up those tickers from time to time. That's why you see Dow Jones trading sideways sometimes. That's why you see small caps and IWM rut trading sideways, and all of a sudden you'll have a rip higher, then it'll come back down, rip higher, come back down as we cycle through in and out of those companies, those baskets of unloved tickers. And we're coming into earnings season as well on those stocks, right? So anyways, Elliott Wave, right? The Eraser Gang, they're pretty fucking bearish on, specifically on IWM right now. But if we look at IWM down here, let's take a peek at it. I think I might have clusterfucked that explanation of this stuff, but it's all right. It's what it is. Oh, hold on here. Now, IWM, right? In particular, right? This is the bearish trade here. These two yellow lines, this is the bearish count for IWM. And Elliott Waver's got it going up and rejecting here and blooding like 198, 195, and then a turn up thereafter, okay? There should be a failure in here in a bloodbath, and then we go up. But there is another count in here. There's a bull pennant in here for a major squeeze to the upside. Pretty decent squeeze to the upside. And I gotta say, like, I love using opening and closing time frames, like the Asia Open, the London Open and close, the U.S. Open and close. I love using Gamma, and I love using Elliott Wave. but I still come back to triggers and velocity. It's the only thing I've ever used that has actual edge. It's it. I've never found an edge with Elliott Wave. I've never found an edge with Gamma. I've never found an edge with anything else, and nothing. Closest thing to an edge I've ever found was triggers and velocity. That's it. It's the only thing that I found edge with. As a matter of fact, Jenny Marcus uses a very simplified version of it, and they did a white paper on him too, and his methodology has a market edge. So anyways, so my point here is on IWM, right here. Oh, let me go back to IWM here. This is a 30-minute basis. And I love buying IWM on these daily velocity lows, especially when we begin to make new lows or new highs on the lows of daily velocity. And we have one right here that's formed, and we're beginning to turn up on it. And as we're turning up, I want to show you what happens. I want to show you a previous example of what happened. That's a pretty fucking monster move right there, isn't it? You see that big ass move right there? That's a beautiful fucking trade. And so I'm looking at this over here, and it's just fucking primed to go. It's fucking primed to fucking move. You just rip some fucking faces off up here. Oh, hold on. Whoa. Whoa. Just kidding. All right, hold on. It's fucking primed to just blast off up here, okay? So, some people have been asking me to talk about IWM and Dow Jones Industrial Average. So there's IWM. Of the two trades, IWM, I'm pretty fucking bulled up on in the background. Now I get bared up on. I'm like, I'm still bearish. I have to I do update market briefs and send them to you guys. So I'm like, no, I'm still bared up right now. I need to see it proof. Like I want to see the price action move there. I want to see the breakout before I get all bulled up. I don't want to see like, yeah, we're bulled up and boom down there. I want to see like breakout, successful back test, and then boom, Johnny on the spot, right? God damn it. Fucking thing. And then jump on the train, right? I don't want to be a buyer in here per se. And I don't want to be a fucking buyer up here per se, right? Not so much right here and not so much down here, but like right here, right? I want to be Johnny on the spot though in there, don't I? Right? So I'm watching IWM closely. You guys already know that. IWM, pretty fucking bulled up on it. DIA, Dow Jones Industrial Average. Same action. And it's already breaking out. Do you see it right there? Right? Same fucking action. Let's look at Dow Jones Industrial Average, right? We got one right there, right? We got the other one right over there, right? Whoop, whoop. And what is it doing right now? It's doing what I'm hoping that IWM is going to do, right? And it's already broken out, hasn't it? So let's take a look at it, right? It was in this fucking thing right here, right? Came up, down. See how the reason I got this bar here is because I want to see did I get a new high? Yes, we did. And then we back tested all this down here, and now we're launching to the upside, right? This is extremely bullish for Dow Jones Industrial Average. Look at it right there. And what does it want to do? It wants to fucking explode up here and trade this previous high up here of 400, right? Wants to trade that easily. And so I'm trying to show you before it happens. See that little down move right here? And it's already making its way up there. You see it? See it right there? So this one's already kind of moved. Make sense? So Dow Jones Industrial Average has already begun its move. You take this big bad boy right there. Whoop. And what are you looking for here on Dow Jones Industrial Average? You're looking for that big fucking move up here, right? Like bam, right? Bam, bam, bam. Maybe bam up there, maybe a little bit extra. So just keep your eyes on these two indexes or rotation into these two indexes. We've already talked about Dow Jones Industrial Average. David AMS has been trading this already. I think Winky brought it up to me as well the other day. He's like, what's going on with Dow Jones Industrial Average? I have it going big and huge. And I made a post yesterday on FinTwit because Winky said to me in a discussion we had via email that Dow Jones Industrial Average has some of its best returns of the year at the end of August. So this one's already ramping to go up there into the end of August, so like August 31st, somewhere over here. You know, ramp bam above, 425 or something like that on DJIA. So extreme bullishness. It's just getting started and just starting to break out right now. And it's going to start making some moves. So if you see like tech underperforming, S&P should be fine. But if you're looking for things to get into, keep your eyes on IWM. And also note that Dow Jones Industrial Average is just getting bulled up right now. Okay, so that's Dow Jones Industrial Average, okay? We talked about IWM. We talked about the DIA. The old man trade. The one thing I would say to you on Dow Jones and IWM small caps, if you've never traded them before, it is not a fucking day trade. Sometimes it is. It's not a fucking day trade for most of you. It moves like fucking molasses a lot. So you can get stuck. If it's not actively moving, you can get stuck and your options will get torched. So I always recommend spreads with those two indexes, personally. If you want to get, if it's moving, let's say you get a spread on IWM, and then it starts moving during the day, you can buy some calls for that one day, but that's it. That's it. like that. Just in that day, leave your spreads on. Trade it, day trade it if you want. For me, it moves too slow. It moves a lot like stocks. I fucking hate trading options on stocks. I'll be honest with you. Not always. Like Tesla moves really well and pays really well. But I feel like when I trade these things, like I'm just fucking staring at it for like a day, 3 days, 5 days, a month, 2 months, before I get the actual fucking print. So, what are we talking about here today? IWM has not made the move. Dow Jones is making the move. We also talked today about high quality bond trade, right? I posted a link. I posted that article on the on FinTwit. I think I did the article as well inside the Discord, and I also on Twitter posted some high quality ETFs, high quality bond ETFs. So there's a trade for you as well to be thinking about in the future as we head into July, August, before we get into the fucking September, October doom. So here's some trade ideas for you leading into the next month, 2 months. I'm sure if we come back to this conversation too, you'll say, Cap, you talked about it, right? So we talked about it. We've talked about it and talked about it, but I just want to make sure it's out there completely and fully at this point. There's another trade out there too, which is TLT. TLT looks great. That's probably the fourth thing I want to talk to you about, which would be TLT looks fucking phenomenal as well for an upside move. It's got the daily trigger broke out. Price went up, back tested it. It looks gorgeous too. So TLT, I'm bulled up on that ticker as well. Okay. So much talking. So much talking. There, right there, PT4. And there's the weekly Sigma Ligma. PT5 up there. Grinding sideways right now in SPOOs. Do you guys have any questions on that stuff? Any questions out there? No questions. You guys are all up to speed. Everybody's up to speed. Please let people know in the Discord my takes on all of this stuff. All right. Yeah, we got Pepsi earnings, right? And I forgot about that. ER season officially kind of kicks off with big tech, or not tech, but big companies today. Pepsi's really like the kickoff. And then we've got bank earnings tomorrow. One warning to you on bank earnings. The last two earnings cycles, they've been fucking selling those bank earnings if they've been run up before we get to them, or in the ER, even if the earnings were good. I don't think that happens with big tech, though, Mag 7. We can talk about that, I guess, later on. I don't think they sell the news on Mag 7. I don't think they'd have to have something materially bad because so many fucking people are in it as a hedge, market hedge, believe it or not. Because they're in it from so low they can weather a 10% down move in the market. Okay, so I'm in the background, I'm going to chart out LCID, AVGO, and I'm going to post them inside the Discord. All right. Whew. Move that over there. LCID, Lucid. Everybody wants to talk Lucid. Okay. Lucid. Lucid has been recovering. It's been trading sideways here, right? Accumulation's been going on since the 15th of April. It's been trying to break out and above. It's trading right now $2.65. Please tell me it's worth more than $150 million in market cap. Please tell me that it is. It's currently trading $3.06. Oh, there goes Spooz squeezing already. Well, let me just bring this down so you can see it. Let's bring that down there for you to see. See if we climb the wall of worry into the close. Can I even bring this down far enough? Come on, just yeah, there we go. See if we climb the worry here. On here, we put that down there, a little bit right there. PT4. Lucid is trying to break out, okay? On a daily basis, we're going to take a quick look at it here. Oh, boy. Lucid. Used to be the darling of the internet, right? How high did it go? Oh, boy. Went all the way up to $64.90. Total shit stock. Now, I want to show you something back here. Right here. Let's look back in 2023 in January. It squoze all the way up, and then it failed its monthly trigger up here, right? See that back there? Failed its monthly trigger back here at $16. It hasn't been able to break out since then, and it's beginning to break out again. See how it's beginning to break out down here? Just starting right now to make an attempt to break out. From prior experience, we know that I know they need a prayer. From prior experience with the monthly trigger, we're going to take a peek here. We see there's a big giant gap. They probably want to fill this over here. That's their claim to fame. I bet they're saying, let's just close the gap, bro. It's going to close that gap right there. That's probably the carrot, okay? But we know that they love to trap these bulls in before we ever get there, right? So we've got this other one back over here, right in there. Okay. Boom, right there. We have another one right here. $5. Just before we get to $8, like $8.70 something or something like that. And I think we sell before we get to the $9. I think we blast straight down. So your top call is $8.39. On a daily basis, the monthly looks fucking beautiful. The weekly looks fucking beautiful. Both of these look gorgeous right now for an upside move. I'm going to warn you about something. I got to warn you about this. Do not listen to fucking lucid bulls that are going to tell you that it's going to, $70, $80. They've probably been long for years. Don't trust them. Don't ever trust any of these bulls on these shit stonks because they're likely, they just want out. They just want out. They don't give a fuck. They're going to lie to you, tell you like, oh yeah, bro, it's going here. And they just want out from whatever they got stuck in it. Don't ever trust them. So right here, whoop. Lucid, right? I would like to see let me just check this really quick. It's a 30-minute basis. Yep. I got that right. Personally would like to see Lucid come back down and trade at least $3, then $3.35. There. And trade that for right now. 1, 2, and 3 right there. Hold on, let me move that one down a little bit. Something like that right there. That's what I want to see out of Lucid, okay? To trade just the $4. Believe it or not, like end of August. That's what I want to see. Now, this would be my count, and I'll move this a little bit higher there, right about there. And this is where your daily trigger. Right there. You see it? Bam. Matter of fact, I would even, yeah, there's your first tick right there. There's your second tick right there. And then you'd have the explosive move to the upside. And then I'd start getting really fucking bullish above that $4. Okay? And the ultimate price target on this ticker is going to be, you're going to have another move to $5.30. And then a move to $8. Top on this ticker is $8.39. But we're going to take it one step at a time, okay? One step at a time. So this is either over time or price. When we hit $4, when we hit $4 on Lucid, we'll come back and look at it again. Okay? Is that cool? So $4 price targets in the meantime, and then we'll take a look for some consolidation to then trade $5.30. So there's LCID. One here. Climbing that wall of worry, baby. Climbing that wall of worry right now. Spoo's trading 560.35. And then the next one is what? AVGO. I know it's been a big one on Wall Street Bets. AVGO. Broadcom. I don't think I'm as bullish on this one as some of you might be. Trading 560.45 right now. SPX trading 56.23 with a price target of 56.50 on SPX. There's 113 million of put gamma up there. Or not put gamma, sorry, call gamma up there. AVGO. Dude, what is going on here? Come on. AVGO. It is maxed the fuck out. It's got a little bit more to go. A little tiny bit more. This ticker is when they all right, so the boys over at the bank, right, are telling you, see, this is one of those tickers. Fuck. Okay. AVGO. I am bullish on AVGO in the short and midterm, but I am not fucking bullish on it in the long term. I am not bullish on it in the long term. I'm sorry. AVGO is one of those tickers when the insiders are telling you to not only go long Mag 7 and quality. AVGO is not one of those tickers. AVGO is one of those tickers that is likely going to get fucking dumped when this market goes into late bull run. I would be very wary of it if we get any kind of correction and you want to cycle back into it. I would say be short from that correction and stay short on AVGO. Personally. It's going to get dumped at some point. Yeah, it's going to get dumped right now, too. It's pretty close. There. Okay, then down. Hold on a second here. Hold on a second here. Nope. I don't think any of that matters there. It's trading 1762 right now. I think when it makes its attempt for 2,000, it's going to trade, it's going to lose half its value. It's in like a late stage bull run. I'd be teeing off here in this one. Teeing the if I was a fucking bear, every time I was up here, I'd be selling this shit. Sell, sell, sell. Like this whole entire run is going away. This whole fucking run. At any point, this could sell. So I'm going to warn you of something on AVGO, okay? I got it going at 2,000, but even here at this retest, it could be the top two. I'm pretty fucking bared up on this one. I like the bear trade on this ticker better than I like the bull trade. Yeah, hold on here. I'm not a fan of this ticker at all. This ticker is just begging. Something bad's going to come out on this ticker. I don't know what it is, but I am fucking bared up on this ticker. There's AVGO. Done. Did it, and I'm going to post it in the Discord. I'm going to tell you guys something. Out there. There are some stocks in this fucking stock market right now, right? Not yet. Not today, but there are some stocks in this stock market as we get late bull cycle, right? As we get into the late bull run, there are some stocks that are fucking wait a minute, what happened there? PT3, baby. Climbing the wall of worry, baby. Climbing the wall of worry into the close. Climbing the wall. Oh, there's PT4 right there. So there are some stocks out there, okay? And AVGO, Avgo, that's one of them. It is so fucking close to a top. It's not there yet. So don't panic. We hit our first target on GME, by the way. First target's right here, these yellow bars right here. You see it? Let me make it bigger. Bam. We hit our first target on GME, too, by the way. We failed to get a new high. That's bad. Well, we got the first one. That's not bad. That's not bad. We beat the first one. We're bullish. GME is still bullish. Just wait for a recheck, and we'll go back up and trade 2681 on GME. Okay, so like AVGO, right? This is what you're going to see. I want to show you AVGO one more time. I want to talk to you guys about AVGO really quick.
Imbalance. The S&P 500, 180 million to the sell side. The Nasdaq 100.
This is why you want the fucking triggers and velocity. I'm going to show it to you right now.
140 million to the sell side, and the Magnificent 7, 100 million to the sell side.
I want to show you guys why I'm saying this to you. Climbing the wall of worry on SPOOs right now. If you're in a call spread right now, congratulations. You might be taking your money before you even get out of the market today. On AVGO, we're going to take a quick look at it, okay? I want to show you what I mean by this. Here's AVGO, right? Why am I bared up on AVGO? I'm going to show it to you. Wait a minute. What's going on here? Bottom right screen. Why am I bared up on AVGO? Because of its monthly. See these tops here with monthlies? Not all tickers in the market are like this right now. Here's another one. But see how we're coming up in here? And what you'll see is this. Oh yeah, SPOOs, do it. What you'll see is you'll see this roll over. And price will continue higher a little bit longer, and then it goes woof, like a fucking cliff down in the depths of hell. And I want to show you the last time this happened right here. Peak to trough, okay? Peak to trough. That was a 38% down move. Peak to trough, 38% down move on AVGO, okay?
Gains into the close here with the Dow Jones.
Oh, yeah, baby. Let me go back over there and show you this.
Almost up 1% as well.
There's PT4 right there. AVGO is currently going like 40% of 2,000 is means it'll trade like at least 1,300, right? Like 1,300, somewhere in there, right? We got that right? Maybe more. It'll trade 1,100 or something like that. And I got that trade in here. So there's your 1,291, and down here this will be right around 1,100. So right there, that's where I got that shit going. Just be conscious of that with AVGO. Climbing the wall of worry into the close right now. Trading 561.25. Climbing the wall of worry, baby. PT4 on tap. We just hit 1%, so watch out on SPOOs. Oh, yeah, all the way up. Make my ears. What do we got in here for music? We got any good music? Let's turn some music on again. Yeah, let's put some Metzer on. Oh, don't come back down. Playing music. Oh, that was 1%? Okay, that might be top. If that was 1%, that might be top. I don't believe it, though. I think we're going all the way up to this PT4 right now. take a picture. USA, baby. Oh, thank you, Europe, too. Go France, go England. Saving the free world with their elections. Now it's our turn. JBJ, did you see that repost I did with a guy smoking a cigarette, where Peter Griffin's smoking a cigarette? You don't know my boy Metzer over here? He's a badass. What do we got here? What's this one? This one any good? This thing any good? Can I play that? That's a good song. That's a good one. Duct tape. Well, that's a good one, too. That's a good one, too. Oh, yeah. Oh. Oh. Oh, spoos. Oh. Oh, spoos. Oh. Oh. Oh, spoos. Spoozy woozy, what are you doing? Spoozy woozy, what are you doing? Spoos, baby. What are you doing out there? What are you doing there, Miss Spoos? I want you all to have a great afternoon. It's fucking, or the one. It's a 1% move on SPY for the day. It looks like they leaked CPI, doesn't it? Any of you guys short right now? Are you guys getting some put spreads for tomorrow or no? Anybody out there shorting this right here? Let me know in the chat if you're going to short this shit. It feels so terrible. QA. Hold on here. So terrible. No shorts, no shorts. All right. You want puts here so bad? They're not going to give it to you. They're going to give you that I don't know if they're going to give you that pleasure. Oh, God, just look at it. Oh, my God, they're dead. They're gone. There's no way they made that. What's the move from yesterday's low? Jesus Christ. Look at that. Fucking destruction. Here's yesterday's low, right? Was this yesterday? Oh, my God. Look at this. 30-minute maybe? We see it better there. God damn. Oh, God. Oh. Tuesday. 7:30. That's a 3.5% move. It's a 3.5% move since Tuesday at 7 a.m. Stupid. What time was that? Was that 7? Yeah, about 7:30. About 7 a.m. This fucking Christ. Fucking insanity. Fucking insanity. Insanity. All right. I'll see all of you guys tomorrow at 9:30 in the morning. We'll talk